Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Is that a toucan?
It is a toucan.
Yeah, I wonder where you is there a place to find animal sweaters? Is there animal sweater outfitters?
I'm so glad that you asked. I have a variety of sources.
Okay.
Some of my favorite, the J. Crew factory outlet.
Okay.
This is not where this is from. Okay. Macy's.
Okay, Macy's could be good.
Yeah, Macy's is good. Right. I'm on that grandma vibe. Right. Yeah. And they are still one of the few places that has a petite section.
Okay.
So I do like Macy's, but this is actually from Amazon.
Petite, you pay twice as much as children's sizes, so you should go to the children's size section. Yeah. I would if I could.
Kids today, they are wilding out with the price of kids' clothes. Mm-hmm. It's expensive to clothe your kids. I don't know how y'all are doing it.
You should try feeding them and sending them to school. Crying out loud. It's amazing. Unbelievable. One night of fun.
How often do you buy Vinnie new clothes? Or how often does Vinnie charge the house account for new clothes? Right. I rephrase.
There's no shopping trips. It's not like, oh, Vinnie, we got to go get you new clothes for this summer. It's just endless.
Sure.
It's funny you mentioned that because he's getting sophisticated. Well, he thinks he's getting sophisticated. He's bought. He has found Marshalls, which is good.
Oh, I love Marshalls.
Yeah, so he's been rummaging.
And they have designer stuff.
Peter Millar. He's looking for some Peter Millar. Quarter zip, stuff like that. Yes.
Really?
Yes.
Quarter zips.
Look at him.
So they're
going straight to his 30s.
And some golf shirts and stuff like that.
Okay.
For the club.
Okay.
So he has done that. But yesterday he got a little sophisticated. So there's this Bapple, a little bit not clothing related, but just using the credit card related.
Beer cider thing?
Yeah. Or it's one of those mashups that they do with beer now that are targeting.
Again, your son is underage.
Right, that are targeting kids. It's the same thing they did with cigarettes back in the day in my world, right? Now and still do. Now they're doing it for the beer and stuff like that. So Instacart, sometimes if you're using it and you're not on the phone or that it's used to seeing, they'll want something like your birth date or something.
Right.
Like that So he goes, and I had just texted him, it's Mother's Day, May 10th. Don't forget. Doesn't have to be an expensive gift, but it has to be a thoughtful gift. This is your one warning.
Sure.
You're 16 years old.
Sure.
You drive a car. You don't need 15. Write it down if you have to. Make sure you get your mom something for Mother's Day. And everybody else out there, get yourself something for Mother's Day. All right. So about 20 minutes later, Sonny's coming out of the emergency hospital for his teeth cleaning that he got done and a little something removed from his.
But he's okay.
He's fine. He's fine. Although they did take 3 teeth at $250 a piece. Ooh. That's another story.
Can't you just yank them out?
I could have had your teeth removed.
You should be brushing his teeth.
Yes, my wife does. I don't touch the dog.
Okay.
Anyway,
he says that.
Back to the story. He goes, "What's Mom's birthday year?" I'm like, "Why?"
He's about to spend. He's about to get a birth.
He's about to elevate into identity theft.
Oh, that was where he was going?
He was going to identity. I clocked this already. He needed the year to verify for the beer purchase on Instacart.
Boom.
That's the workaround. Yeah. I saw that a mile away.
Boom. I'm like, no. I'll tell you a birthstone. I'll give you everything else you need, but I'm not giving you this.
Surprisingly, I was going the angle of birthstone for Mother's Day.
No, it's identity theft.
And he wrote me. He uses my own shit against me. He wrote me, well, you always say it's better to ask for forgiveness than permission, which I do say, and a bunch of other things. It's my first big playboy. He wrote with a couple of Y's. I
want to smack this kid so bad.
Some great memories were made, doing things like this. I mean,
He's a philosopher now. I love it.
great memories. See, the difference between like being able to like
And I think
ride,
that's cute, and that
to
that
like
diffuses
ride
things.
your bike though until the street lights come on, and then you get into shenanigans, as opposed to the Gen Z of like, oh, I'm just gonna like Instacart some booze. I hate that. I hate that.
There's no
so much.
There's no work. There's no like risk.
Right,
reward.
right.
Like,
there's no Goonies adventure.
Yeah.
Like it's just like,
Yeah.
I Venmo'd this,
Yeah.
and then I hit my vape.
Yeah.
I hate this.
Yeah.
So bad. So bad. So bad.
Like at least
that's funny.
Like at least.
So what did he
try.
get delivered?
And nothing.
Oh,
I'm not gonna let him do that.
oh, he'll do that today. It's okay. He'll
No.
do that when you're out of the house. It's all right.
No.
That's funny.
Yeah.
No.
Does he still keep it in the back of the car next to the high school hockey gear?
No.
That was
no.
my favorite picture. He sent a picture to our group, our family like group chat, and it was a case of, I think it was Bush Apple.
Yeah, I think that's what he was trying
Yeah.
to buy. And not Bush Apple, maybe some other Bush.
Something like
mashup.
some flavored
Yeah,
Bush
yeah.
beer. And it's in the back of his car, and right next to it is his GBS hockey bag. And I'm sitting there and I'm like, dude, you got to be the dumbest person I've ever
I mean, look, like if
like cover it. Don't have your like you have like a sticker on the back of the car. Like you can't do. You're a.
Nice guy, not a bright guy. Apple doesn't fall far from the tree, you know.
I never got caught with that stuff. I got caught with other stuff.
Yes, you did with me. First day in your car.
Oh yeah. Well, I didn't. You were in another house in a basically another city. You were doing your own thing. You didn't worry about you. Give me a break.
See?
I love our trauma chats. I just
The first 15 minutes of the day.
Nikki, how was your evening?
It was good.
Do you have pickleball or no tonight?
I did.
You had
I played
pickleball last
Win
night.
any of these games that you play?
Do I win them? Quite frequently.
Ah, there we go. Good.
Yeah.
I knew
don't
they
play to
have to fall
lose.
far from the tree.
Yeah. No.
How's the back?
Tight.
Yeah,
Tight.
yeah.
35. It's 35 years old.
You got to stretch. Did you start your stretches? You said you were going to start stretching.
I've been trying. Yes. Yeah. I do.
That's a no.
But I had one moment where I had like, one of those like superstar type plays. And
Superstar.
yeah, just an incredible
Superstar pickleball.
just incredible, like just range, hustle. It was the entire building of
Ood and odd.
Ood and odd.
I love the humility.
The 60
He's downplaying it.
Yeah.
the 60-year-old men were like, man, you got some great range. Like they just giving me the props. Afterwards, I think I like kind of twisted my ankle a little bit, and I had a moment.
Did you lie in bed last night and the back of your leg twitched up?
Right afterwards, when we're like setting up for the next point, I was like, can we get like a little moment? I did like a little like I kind of rubbed my knees a little bit. I had like an ACL worry, 'cause I kind of had like a mild twist on my ankle. I was like, ooh, was it like anything worse? Like my calves? Am I okay? So I did one of those. But we're fine.
You're good. Okay, good.
We good.
Yeah,
Right.
we're good. We're
Right.
good.
It wasn't your Achilles.
Yeah, no, it wasn't. But I was worried.
You got to be careful. You got to stretch. You got to take care of yourself, man.
You got to do something.
Totally.
Yeah.
So
What is the age distribution of the pickleball? Because I'm
pretty wide.
Okay, I was
Pretty
just
wide.
curious.
Yeah, you have like
But you don't play in age groups, right? You just
no. It's by
by
level.
skill.
by level.
By
Yeah.
skill level, but it's pretty wide. You have some of these like older guys that have been playing a really long time. They can't move.
What's older? Got like
50.
Okay.
Like maybe.
Okay, that's why I was like I had to
Like not that's pretty old. Like
Right, yeah.
pretty old, but like 50s.
Okay, 50. Okay.
I hate it. I hate it now. I'm at the age where they go, the pretty older guys that are 10 years younger than me.
But the great thing is that there's a skill, like there's difference in skill. Like my skill is like well-rounded,
Sure. Okay.
of course, but mainly hustle.
So if you were one of those players on the Atari or whatever the PlayStation is now,
I'd have like
you would
max
be-
speed, max.
you'd be in the
power.
80s and everything, but not hundreds or 90s. You wouldn't be the the best spin or the best control, but you'd be 80s and 85s and everything from scale to 100.
The older guys, they're
well-rounded.
They're
old age and trickery. They got
they have the trickery, and they'll make you run around the whole time. And they got the like real short game really good. So
okay.
Get up
the quick burst or speed. Maybe sort of kind of, or just quick,
it's
short
just
up to the net, you mean? Oh, I see.
They put you in weird spots, so they play their game like that.
Okay.
And then you got the real young ones, the 20s that are, smacking balls around.
Oh, sure. When are you gonna invite Gus to play, or is it all over for you if he shows up?
He's never played before, so I think I got him beat.
You're secure.
Yeah.
All right. When are you gonna get Mikey?
This is peak athleticism.
When are you gonna get Mikey to come play with you? Your work wife.
I don't know. That we have golf. Oh,
that's true.
Yeah, we're gonna play golf this weekend. So
that's true.
Yeah.
Very nice. Good job out of you.
That was it. How was your week or your night? Not weekend.
It was uneventful, but I will tell you, I am going out tonight.
Oh!
I know.
Hot date?
No, well, with the marketing team. I'm going to the Cubs game.
Oh, fun.
Nice.
In the suite, okay?
Nice.
I am very excited. I don't know what to wear. I don't own any Cubs apparel. I am a Sox fan.
You should have told me. I would have brought you my Jorge Soler jersey. He played 1 year on the Cubs and was basically gone after that. I think he played for the Yankees for 1 year.
Yeah.
He was drafted the year that Rizzo was drafted.
Oh.
And I made the ridiculous decision. I was with a buddy of mine at the Cubs game, and I was buying a jersey. And I was buying an authentic jersey, which are like $1 bazillion.
Yeah, but that's when jerseys were good before Fanatics took over.
Yes. These were like...
At least they're good.
It's a great jersey. I'm sitting there, and I'm like, I want one of these new guys. Who do you think? And he's like, well, Jorge Soler is like... he's Dominican. He's amazing. Like, he's going to be the next big thing. I'm like, but this guy, Rizzo, he's a Guido.
Oh, that's so funny. Why did you go against your paisan?
That's what I was saying. But he was selling me on Jorge Soler being like the next coming,
I gotcha.
And so...
you could have had a Rizzo original.
So I bought the Jorge Soler, and now it's part of my jersey graveyard. Every time I buy, an authentic, good jersey.
Yeah.
The player
goes away.
The player has some unfortunate end.
So it's like the Madden curse. But
Sort of. The first one I got was Patrick Sharp, who.
Oh, he's so good looking.
He's so good looking.
Oh my God, that man in a suit.
Yeah.
Sharpie? No, I don't follow hockey for the reasons that I should follow hockey.
Yeah.
He used to live in Chicago, right?
I am aware by Scott Sheridan. No, I am aware.
Well, he
met him a few times. Nice guy.
He won a couple championships and then ended up stooping everybody's wife.
Yes.
So that was sort of a problematic thing.
I love that for him.
4 of the 5 guys didn't care.
4 out of 5 guys don't care.
Yeah, so that was one, and then I got a Brandon Marshall jersey, Bears receiver.
Yeah,
he was great for 2 years, and then that was kind of
sure.
Peace out.
And then I have the Jorge Soler, which played for
okay,
1 season.
Sure.
So now I don't. At least I have a jersey. So
can you not buy them anymore? Because then we lose good players every time.
I know. Did you get a Lonzo Ball jersey? Who did you get to play for the Bulls?
I don't have.
Okay.
I have an old Jordan jersey. I don't.
Okay.
I don't have that.
So then that's good. That one's okay then.
Yeah, you got to go with that one from now on.
Yeah. Well, the Bulls have nobody good.
Yeah.
But yeah, no Cubs Phillies tonight. I gotta find something to wear. I'll probably just wear a blue shirt or something.
Once upon a time, us peasants used to get to go. Every once in a while they'd throw us a ticket or two.
Yeah, but there's so many people here. This is my first time getting tickets, and I've been here 16 years.
Yeah.
So.
Man, how things have changed.
Yeah, but I'm super excited, and I hope you guys are excited. There is no 7th inning stretch, just a lot of financial program headed your way on this terrific Tuesday. At the top of the 8 o'clock hour, we have a little options jive. Should we trade the small caps, part 1?
Should we?
Should we?
Well, we're going to try and answer that question, so it's going to be a good one. The small caps have been on fire, so we're just going to take a look at kind of the difference between talk about, just the size of IWM versus SPY. It's a good one. It's just, kind of a primer on the small caps because most people talk about E-minis and NASDAQ, which are my favorite.
Yeah.
But small caps are tradable as well.
And then at 8:40, fan favorite, we got Craig in the house for Futures in Focus. Today he is going to talk about Futures Core, the ES, the NQ, the GC, and CL, basically your core futures.
This is my core. I put this together, my 4 favorites.
5 futures.
And so we're going to give you a little cheat sheet on those and then hopefully make a couple trades, try and get some positions on in all of those because I think of all the futures, those are the 4 that I think are the most interesting from a diversification standpoint. You get a little bit of everything. You get a taste of the
commodities.
You get a little bit of metals. You get a little bit of commodities. They also have very liquid markets. So you can trade these via the micro contracts. You can trade the minis, the bigger contracts if you want to get a little bit size up. They equalize size based on your account size. But the options themselves, you can get small enough to where you can put these on in any sized account. And so I think if you were to focus on the core 4, this would be the 4.
And the futures will be in focus at 8:40.
Yes.
Then 9 o'clock for market measures. Should we trade the small caps? Part 2. I like how you're not like a TV show. You don't have to wait till next week. We're going Netflix style. We're dropping the whole season.
Fresh in your mind.
We're dropping the whole season today. So should we trade small caps? Part 2 at 9 a.m.
Yes.
So you just gotta wait a little bit.
More of the same. A little bit more focus on the volatility aspect because small caps traditionally have a little bit higher volatility. So
Okay.
it should be a good one.
And then we have it around 9:20 time frame live from the trade desk. We got Quentin and Glenn in the house. Quentin Q counting down the top trending tickers over at Tasty Trade, and Glenn G Money on the FX side of things. And then, of course, at 10 o'clock, it is a terrific Tuesday. So Liz and Jenny are live from the SIBO. It's always electric when the ladies are live. So tune in for the ladies live from the floor of the SIBO, an active trading floor here in Chicago, the heart of Chicago. At 10 a.m. Central Time. But in the meantime and in between time, you guys want your daily dose?
Sure.
You know you do. Hit me with my theme music. Let's go.
Our leading story, breaking news, coming
news.
across the wire. Our leading story, top story, jump in.
In today's headlines, this just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It is April the 21st. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Any earnings, Mr. Bat?
Oof.
This morning, I got itchy fingers yesterday, and I talked about this a little bit on the close. When markets just kind of chop around, you start to do stupid stuff.
Oh no! Don't do
So I
stupid
did some
stuff.
Stupid things.
You do get like bored. I mean, for lack of a better word.
And I'm allocated like 20% relative to what I had 2 weeks ago.
Sure.
So you got like nothing on, nothing's moving, no big numbers, not fun.
120 days of straight one-way movement. First small little red down day.
So I got into GE. That should be okay. I did like a 1x2 crab trade. RTX, I traded
GE down 10.
small
Expected move. Go
small
ahead.
diagonal spread. That one should be okay too. Like nothing super, directional. But I got into these trades.
RTX looks unchanged. That should work.
Yeah.
Did you
GE
trade-
Should work too.
Did you trade UNH?
I do not have a UNH.
It came out this morning, so I don't have it for
It's
news.
up like 25 right now, so
Okay.
it's a pretty big move. I didn't realize. Be completely honest, I thought UAL had earnings this morning, not UNH.
UAL's today.
I know.
Yeah. ISRG, IBKR, telephone. The big one's coming
In the next
Thursday, I think. Tesla. Sorry, yeah.
Tesla.
Tesla.
Service now
Yep.
is another big one. So.
Hey, well, Kevin Warsh is giving a message to senators, but they already published what he was going to say. President Trump's nominee to head the Fed will appear before the Senate Banking Committee at 10 a.m. Eastern time today. He will push for big changes at the Fed, but he is walking a fine line, saying that he does believe in the Fed's independence and that the central bank has drifted from its core mission and that the central bank must recommit to price stability. He plans to describe the current period as perhaps the most significant hinge point in a couple of generations. Again, his remarks were already released yesterday. Not sure if that had any effect on the Treasury market.
Not really. The bonds have not gone anywhere. They've been
114
and a half.
They're 114 and a half
Sure.
right now. Yeah.
Yeah.
It is not 100% smooth sailing for Warsh. Senator Tom Tillis is against going through with the confirmation proceedings. And so there's going to be some maybe back and forth. And also, he is one person. The Fed is a committee. There's 12 people. So I'm just saying it's not getting really reported in the media because people think, oh, once this guy gets in, interest rates are going to go down. And baby, I'm going to hold your hand. That's not how that works.
Yeah, it'll be.
It is a divided Fed. I will say that.
Jay Powell is such a figure of my life.
Yeah.
He's all you know.
No, he knows the Yellen. He knows Janet Yellen.
Yeah, I know the Yellen.
You know the Yellen
Tim
years.
Knight Yellen.
Yeah.
Tim Knight Yellen is burned
Iconic.
into the back of my brain.
Once you've seen that,
Once
Yellen,
you've seen that, you have nightmares.
you can't get that.
It's
choice.
It's quite a scene.
It's a choice.
But yeah, Daddy Jay Powell, he has
JPZ.
brought us to the promised land. He will be missed.
He will be missed.
R.I.P.
R.I.P.
You're not dead. R.I.P. anyway.
Not sure if the dollar is doing anything interesting this morning. Had some moves yesterday.
I have some words for Glenn because the shekel is at its all-time high to the U.S. dollar, and I am short that. Yes.
The euro and bonds, euro and pound are basically unchanged, not moving too much.
Yeah.
So the dollar.
I'm down 250 on my shekel short. I'm up $8 on my euro long.
Shekel short.
That's a big move for.
That's how we do it, baby.
That's right. That's right. You got this.
USA Rare Earth announced plans to buy Brazilian rare earths miner Serra Verde in a deal worth $2.8 billion. Rare earths have come to the fore as a key bargaining chip in the ongoing geopolitical rivalry between the U.S. and China. I could make a joke about how there's not a lot left because it's Brazilian rare earth. No? Okay. It's a waxing joke. What are you doing in the rare earths there?
I was gonna say it sounds like a fajita dish.
Serra Verde?
Yeah.
Yeah.
It sounds like somebody I would order at a Mexican restaurant.
Sounds good.
Yeah, I have not been trading these.
Sure.
Add it to the bucket of meme stuff that's going bananas.
It's in the government portfolio.
It is in the government portfolio, so please don't short it. But there's a lot of goofiness right now. And my ears are perked.
Okay. We can also look at MP. I don't know if MP is doing anything.
Yeah, it's had, much like the market, it's gone, it's up 15, 20%.
Love that for them.
Off of its highs, but it's been in a very tight range. If you throw out the highs and the lows are around 50 to about here 70, where it's sitting at 66 right now.
Yeah.
Okay.
Well, most of these companies don't have anything physical.
Revenue.
There's not an actual gold mine that they're just about to mine in. It's all we're looking for these rare earths and we are the company.
Sure.
Just not much there. So.
In an interesting move, the Department of Justice Antitrust Division is criminally investigating the conduct of large meat packers. President Trump accused the meat packing companies of driving up U.S. beef prices through manipulation and collusion and has ordered the Justice Department to investigate. This affects Tyson Foods, TSN, Cargill, JBS, and the National Beef Packing Company. 85% of U.S. grain-fattened cattle come from a small number of companies.
What's live cattle? LE? Live cattle. LE. Let's see where that is.
Oh.
There you go. Good thinking outside
New
the
highs.
box.
I didn't even.
New highs.
Near highs.
Near highs. Yeah.
I haven't looked.
It made highs 2-3 days ago. It just sold off a little bit from there, but it's in the stratosphere.
But yeah, the price.
No steak for you 1 year.
Yeah. The prices are mean, I like my organic chicken.
Sure.
I don't want it pumped with shit.
Sure.
And, it's quite pricey.
It is.
Quite pricey.
It's expensive.
I never got into chicken, but go ahead.
Okay. All right.
I'm trying to, get a little.
I hear you.
Jolene for the pickleball.
Yeah.
Yeah.
Hey, Michael Saylor's.
I got some emails from people talking about a 35-year-old playing pickleball. And, I don't want to say it live on air, but I'll say it when we get off.
Michael Saylor's strategy has bought a new level of Bitcoins. They bought 34,164 Bitcoins.
He's got to do something to support this piece of crap.
For $2.5 billion. His total holdings now top 800,000 Bitcoin. They were funded by proceeds from the issuance and sale of the company's Class A common stock. They bought the Bitcoin at an average price of $74,395 between April 13th and April 19th.
It's had a nice little rally here. I think there's, Bitcoin too rallied into the close yesterday and has been relatively strong.
Yes.
So say thank you, Michael Saylor.
Thank you, Daddy Sailor.
Just under 77,000, right? I mean, they traded as high as it was 70. Let me do this again. So sorry.
Yeah. This is one where I would not be shocked if things got goofy here in similar fashion to, maybe not to the magnitude, but to some of the stuff we're seeing, like in Allbirds, Car, AMC. Like,
oh, no, you are not making that call in Bitcoin. You don't think it's too big for that kind of action?
Well, it's all momentum. So if you had a day where Bitcoin's up, let's say 5 to 10%, MicroStrategy is going to move 40%.
I don't think that much, but okay. I like to see it.
Look, maybe because there was like a crypto winter, there's going to be like a crypto hot girl summer.
Could be. You never know.
I just think you have that sort of upside tail risk that, if all of a sudden Bitcoin's a thing again, it's going to be goofy.
Okay.
What's Coinbase doing on this goofiness then?
Coin, COIN.
Up 2, had a nice rally last week.
Yeah.
But it's been, they both have been 1-to-1 with Bitcoin. The problem with Bitcoin and trading the Bitcoin-related stocks is exactly that, where it's all momentum. And if you're not getting these like big moves and this big pop and volatility and the interest and the momentum,
It dies a slow death.
they die.
Yeah.
So
What do you think is going to be the fallout from the massive IPOs like the SpaceX, the OpenAI, and Anthropics on the Bitcoin? Like, are some of those funds going to flow, do you think?
I've said it a couple times. Like, I'm pretty worried about those IPOs because it seems like it's a bigger black hole of capital than what people, or at least people just think it's going to just get filled. Like, you put a company out there on the public markets for $1.7 trillion and like it just instantly fills. That money, it's going to come from something. I think it could come from Bitcoin as a speculative nature, especially with SpaceX, because it has that kind of meme type feel to it with Elon and the rest of the group.
Didn't like Apple and Google and Microsoft just also kind of funded some of this?
I got it. Yes, I got it.
That's small. That's not.
Yeah.
You're not. I mean, there is going to be $1 trillion minimum just in SpaceX plus OpenAI, Anthropic. It's like $3 trillion. It's basically another 50% on top of the Mag 7s are just going to be instantly added.
It's billions of dollars. It's not small by these companies. I mean, $5-8 billion. I mean, it's not.
Yeah. But that's the valuations. What, you want to say half of it has to be filled?
It's okay. Barron has it in his brokerage account.
So OpenAI, let's say it's valued at 1.5 or SpaceX. How much of that is mark value is my question.
Yeah, I don't know.
So like if SpaceX is worth 1.5.
I don't know how much float they're putting out there either. I mean, I don't know.
Yeah, but they raise money.
But they are making a concered effort to access retail too. Mm-hmm. That's what they said. So we'll see what happens.
But that's what I'm saying. Is retail has to unless you have unlimited capital, they have to sell Microsoft, sell Bitcoin, sell Tesla to buy these things. And you got to think that, a company like, Anthropic raises $5 billion from Amazon for, at a $800 billion valuation, that you're not one-to-one. Like that company has just increased in value, but it's paper value that needs to be filled by the market.
which that's always the way it's been throughout time with any stock, but it's never been to this magnitude.
And that's the whole point I'm making.
I get you.
Like, you have this big black hole of value that's on paper that has no money tied to it.
I get you.
Seismic news. I'm so sorry, Nick, but we got to keep it moving. I know you're certified yapper, but we.
Is Drew talking right now? 7:30 Central.
I believe so, but he's usually late. You got to let the people stew.
Seismic news in the tech sphere. Apple turns to hardware veteran John Ternus as CEO to succeed Tim Cook in the AI age. Hardware insider. He is actually has an engineer background as opposed to Tim Cook's operational background, and he is being credited with revitalizing Mac sales and leading product innovations. I believe he's been with the company for 25 years, though in the time that Tim Cook took over the reins from founder Steve Jobs, Apple's market cap has increased 1,000%. But there's still some headwinds facing Apple. One, they are over-reliant on China, which is an issue in the geopolitical climate, and two, they are seen to be a laggard in the AI space. Both of these are issues that this new CEO is going to have to overcome. Tim Cook will still sit on the board, and I believe he will be chairman of the board at Apple. So,
listen, this guy is too young and good looking. We need to put a pair of glasses on him. I need a nerdy.
He's got the black shirt going. I mean, it might be a t-shirt.
But he's too. I need a nerdy.
And I think this is his only job, pretty much. I think he went from wherever he came from, pretty much right to Apple.
From an Apple. Apple down $1 on that news. I don't know. If you're Tim Cook after such a great job, you would think. I mean, I don't know. You got to like the way Apple's behaving. If it's down $1 after they change the top of the food chain.
Sure. Amazon, as we've touched on this briefly, Amazon's going to invest $25 billion in Anthropic as part of an AI infrastructure deal. As part of the announcement, Anthropic says it's committed to spending more than $100 billion on Amazon Web Services. None of these numbers are real.
Amazon flirting with new highs here at $254, up around $6 or so.
Yeah.
So I don't know how that works. They're like, okay, we'll give you $25 billion, but you give us $100 billion.
That's right. That's 4-to-1 money right there. That's right. We just grew. And then I'll give you half back.
How do I get in on this?
50 each.
Yeah.
How do I get in on this? What are you doing in Amazon?
I closed out of a position yesterday, so I don't have a position at the moment. I wish I got long it, obviously.
Obviously.
But it's had an incredible run. It'll be interesting coming up into earnings. I still think, when you look at the basket of the mega, Mag 7s, Amazon, Meta, Microsoft, not as much Microsoft, but Amazon, Meta certainly look like an interesting upside play. If you think all of them are in sort of an equal bucket, there's some value there because, Google's at $4 trillion and Amazon's at 2.7. So
29th earnings sounds like it's a long way away, but it's only 8 days.
Yeah.
Microsoft has retaken its 50-day moving average, if that means anything to you.
No, but I think it does to Josh.
Okay. To some people, they're like
Amazon, Microsoft up $1.
They're like, ooh, talk technical to me. I was like, oh, you bad boy. Rivian. Oh, this sucks. Rivian's factory was damaged by a tornado because it's based in Illinois, and the state of Illinois has had more tornadoes than any other state in the nation. We're up over 200 or something tornadoes for what are we doing? But all jokes aside, Rivian's factory in Illinois was damaged by a tornado, and it hit a new area of the plant that is being used for part storage and logistics for the upcoming Rivian R2. CEO RJ Scaringe said operations in the damaged area were expected to resume this week. What, if anything, can you do in Rivian?
April 30th for earnings. I don't know what else to say. It's around, it regained $17, up about a dime this morning. No longer the, $13 stock it once was. It's now almost $17 at where it'll be today. It's rallied from 14 to 17 the last week or so. I know.
I mean, that's crazy. It's should your company have a tornado plan?
Yeah.
It's part of the disaster recovery plan.
Yeah.
If you ever read one of those, they cover basically everything up to aliens. So, disaster recovery.
Yeah.
On the other side of tech news, investment research and analyst provider Morningstar is the latest index provider that's also now considering revising its approach to designing market indexes simply because of SpaceX's IPO. So NASDAQ has come out there like, look, it's instantly going into the NASDAQ 100. And now Morningstar is like, yeah, we got to reconfigure some stuff. We don't even know. This is wild to me because it is literally unprecedented. This company is not even public yet.
Yeah, I think this just goes to trying to capture the liquidity. I mean, it's got the exact conversation.
They're on track to issue $75 billion of stock.
Yeah, I mean, everybody wants a piece of it. And, the easiest, most passive way to get a piece of it if you're Morningstar is via a 401k or passive indexing. Like that's where, some of that money, the $1.5 trillion or whatever that gets pumped into the market via the IPO, that's a nice, 40 basis point fee that Morningstar gets, just to allocate you to that into perpetuity. So, they want that.
Yeah.
It's a good gig.
Nice work if you can get it, I guess. What's Tesla doing? Because again, you can't trade SpaceX.
No, you can't, but you can't trade Tesla. And everybody typically does. It's one of our tops on the list.
On deck for earnings, too.
Yes.
396, flirting with 396. Remember just a week ago it was around 345 or so. It does have earnings April 22nd, which is tomorrow after the close. So if we're looking to do something for earnings, we'll probably look at that tomorrow.
Yeah.
IV rank of 12. It's been relatively low throughout this whole move.
Liz and Jenny put on I believe, a diagonal in there yesterday early, so you can check it out on our YouTube channel or our social. So the ladies are front running you. So
Well, I have a crab trade on, and
Okay.
I had diagonal spreads on up to 400 and hit a home run. So
Crab trade basically
boo-boo.
all delta risk to the upsides.
Yeah.
Good on you.
Okta's stock is surging. Here's why. Identity security has become the next hot thing. Barclays upgraded Okta stock days after Raymond James did the same thing, saying consumers have ramped up investment in identity security for the first time in years. That sent shares of Okta surging. Palo Alto Network also falls under that umbrella. Talk about this class of stocks.
Yeah, I would say it's surging in the last week, but it's back to where it was 2 weeks ago.
Okay.
Yeah.
That's good context.
Yeah, it's caught up. It's been caught up in all these software names have been caught up in just the news flow. And so, some of these stocks have had a nice bounce back, but they are certainly at lows.
Yeah, most of them have been cut in half from recent lows or so that they've been at. Now they've come back.
I am more partial to CrowdStrike, but I think all of these have gotten to a point where I think you've priced in quite a bit of risk. Mm-hmm. Can there be more risk to these companies? Sure, but it certainly seems like, CrowdStrike 100 points off of highs, Microsoft, PanW, all these are kind of there.
Polymarket, the prediction market site, is seeking a $400 million raise at a $15 billion valuation. The potential raise follows October reports that Polymarket was in early stage talks to raise funds at a $12 to $15 billion valuation. Now this round of funding sees them bringing in $400 million. They were valued at $9 billion in just October. So
unbelievable.
Unbelievable.
What a time to be alive. But they are facing more
Market's
scrutiny.
helping too. I mean, market's at all-time high.
Yeah, they're facing more
Hanging in there.
scrutiny and threats from states at different state levels, but the CFTC has stepped in and says, no, we control all of this, and we want the scam to continue. Sandwich chain Jersey Mike's, taken over by PE, is now going public, baby. Blackstone bought a majority stake in the sandwich chain in 2024 and straight ran it into the dump. But the deal is now valued the company roughly $8 billion for more than 3,000 locations nationwide. Jersey Mike's is the second largest hoagie sandwich chain in the U.S., so they are filing for an IPO. That's my Philly accent. No, I'm sorry.
This is the layoff to the public to make up for the Anthropics of the world and everything else that might do.
But we've seen this like a million times.
Yeah, this is CMG all over again. This is.
Remember what was Portillo's?
PTLO.
That's another.
PTLO.
That's another one.
Yeah.
Yeah, so that's at $6 now.
Oh, poor Portillo's.
Yeah.
They flew too close to the sun.
It's down 50%. So it's like, I don't know.
Jersey Mike's will probably do the same, and I like it Mike's ways. I'm not.
I quite enjoy the sandwiches.
Oh, I like Jersey Mike's, but I want the quantity that I pay for. Like, I want to get a value.
They've all.
I know.
It's just not, that's shrinkflation.
I know.
Yeah.
But
You're starting to sound like an old boomer.
But to turn that around, honey, you wish. But to turn things around, though, McDonald's is offering a $3 menu, and it is about to kick off, but Wall Street is already a fan. UBS analysts say the new, more affordable menu options further support McDonald's value strength proposition. The new menu also includes $4 breakfast. It's going to have cheaper options, some for even under $3, the McValue menu. MCD.
They try to erase our memory of all, like the
dollar meal.
Used to be $1.
It was $1.
It was $1
years ago.
Yeah.
You're not making something new by putting it on a $3 menu. It's
I know.
just a 200% price increase.
I know.
Don't play with me.
They got you though.
And fix your ice cream machine. What's the stock doing? What's McDonald's stock doing?
Earnings May 7th, stocks basically unchanged at 307. I would say lower middle of its most recent range. I mean, early February it was 340, but I'm going to throw that out and just say it was around 320 to about 300. It's sitting at 307. Ivy rank of 72 is pretty good, but it's good to have earnings coming.
Oh, that is really good. I don't follow hockey. I've never been to a hockey game. I'm not against hockey. I read a lot of smutty hockey books. So my algorithm,
Hurricanes in the Senators last night. Go ahead.
My social media algorithm is chef's kiss crafted. And so this video organically popped up in my feed. So I was like, I'm going to share it with you today. So this is for you, Bat. So it's exciting for the Sabres to be in it. But maybe rethink this. Watch this.
I'm all for anything that sells, right?
Oh, is this
Wait.
I'm originally from Buffalo, New York. That's my hometown, and the Sabres are in the playoffs finally. And this is what one local bakery.
So this is great.
For us, so
watch this.
We toyed with a few different ideas and came down to the Buffalo Sabre, which is like a long sword shaped kind of.
Sir.
It's a saber. Sword fight.
Yeah.
I'm all for anything that sells.
Sir.
It was a good idea. It was a good thought.
Are you gonna chomp down on one? Breathe through your nose, Nikki.
Too early for an homage.
I didn't design. That's diabolical. He knew what he was doing.
Yeah, probably.
It does look like that, though. I mean, it
is out of pocket, but you do you. If you want to jump down on it, you do whatever you want. What's coming up next?
How do you make a diamond? We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P's up 18, where they were for most of the night after having a rally up about 15, 20 handles higher than that when Banana was speaking. Now she ruined it. We'll be back in 90 seconds. Tasty Live. Good job out of you.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with a little bit of, Tasty Extra on what happened yesterday. Go. So you can prepare for today, son.
Let's do it. We did not get our 14th straight up day.
No, we did not. So
not a record.
Broken, so we're back to 0-0.
Records have not been broken. 13, still the record.
Got it.
But we'll see if that reverses today. Got a little bit of an off day. I don't think Trump has taken the stand yet.
I haven't seen anything.
Yeah, I haven't seen anything.
I'm
please,
not 100%.
If you're in the chat and you're watching that on the side here, please fill us in on what.
Yeah, we have no TVs in here.
Yes, yeah. Well, I have no idea. There could be bombs dropping outside. We'd have no.
Yeah,
we don't.
Just like the floor of the CBOE.
Yeah,
back in my day.
Yeah. The market as a whole, a relatively muted day yesterday. It was kind of a low volume, nothing day. A surprise to me, given the move that we had on Sunday and just the news over the weekend. It felt. I was kind of shocked that it happened again.
Seemed like the market was just digesting, right? Kind of taking the weekend off.
Yeah, but
on a Monday.
But the weekend was filled with chaos.
Yes,
as it's always been.
Yes. Well, we had the lows really over the weekend move on Sunday, right?
Yeah. So I don't know. It gave me. I'm leaning a little short delta here. So sue me.
It is anti-American, but go ahead. Mm-hmm.
The Mag 7. So that batch. You had Apple to the upside. NVIDIA has stayed relatively strong here around 200. Gave up a little bit of their gains, though, with the overall market as a whole here. No huge moves. I mean, Meta down 2.5%. It's still near the higher end of where it's been trading over the last handful of months here. So a very muted day across the board. You can see implied volatility is coming in pretty significantly there. You had the VIX. Get back to like the 19 handle. It was in the 17 handle around the close on Friday. So it's been, vol crush has certainly been the story here.
Vol crush certainly has been the story, but I looked at SPY this morning, and the IV ranking there is slowly kind of ticking up. So I think
kind of hit a vol low.
I think we have hit a little bit of a vol low, and it seems like the front month is upticking ever so slightly versus the back month. So maybe a little short-term kind of market.
Spook.
Yeah, spook. Exactly. There you go. Good way of saying it.
Next one, please. So when we look at the sectors themselves, you had the metals and mining stocks moving. The financials have been kind of weird. They've been going kind of the correlation there to the rest of the market has been pretty random. You have some of those stocks like, JP Morgan was up like $6 or $7 yesterday.
Yeah.
Goldman Sachs was having a good day too. It's gone from 800-ish to 950 in the span.
Yeah, Goldman Sachs up another $6, but JP Morgan is unchanged.
You mentioned Citigroup. Citigroup has goes up every day.
Yeah, a little short delta in Citigroup.
Yeah, a little bit of funkiness there.
Unchanged.
Some of the energy stocks kind of flat to up a little bit. Semiconductors, flat to down. There's nothing too scary here on this list. It was a pretty inside day, a pretty choppy day. Just a nothing day.
Mm-hmm. Yeah.
When you look at the biggest movers to the upside, so you got some of the stuff that's kind of in the meme realm. I mean, TTD is at the top of the list. That stock is down 90% from the highs. You have Carvana in there, which is kind of just momentum driven. Dell is another one that has just gone up basically every single day. You have Block in there with the move in Bitcoin. When you look at this list, you're like, okay, this was probably a nothing day. Because these are stocks nobody's really messing around with. There's no
there's no Amazon, Google, Tesla.
There's no theme here. You got
no theme.
Materials in there. You have tech. You have industrials. You have a financial. You have consumer cyclicals. It was just kind of a weird day in the market as a whole. And you'll see the same thing.
Trade TTD hasn't had a uptick
in forever. I mean, dead.
Yeah.
When you look at the downside, it's kind of more of the same here. I mean, you have Intel in there, which has gone, it's up 100% and it had a 4% down move. It's kind of a nothing day there. You have some of the cruise lines in there, some of the airlines in there. Meta and Netflix are on that list. Netflix, I think, is kind of interesting. It had 10% down move on earnings and then another, couple percent here. We're back to kind of the lower end of where it's been trading. I actually put on some, I added some long delta there yesterday. It's a stock that has not, is nowhere near highs and has not participated in the upside that we've seen in the rest of the market here. It's kind of been a dog there. So again, there was not a theme that I could pick out from yesterday's price action.
Agreed.
And when we look at the heat map here, tells the story again. It was a pretty nothing day. I mean, you had a little bit of weakness. I mean, the market was down, 0.2%? It was not, a huge day.
Not the kind of sell-off that you would expect after 2 weeks of straight rally off of another V bottom.
Yes. So
would you say the market is fairly resilient here?
It has been.
And it's probably gotten a little bit frothy, right? I mean, it seems like it, but there's nothing that indicates anything going anywhere. Short-term vol, maybe upticking a little bit. /VX down 9. Bonds haven't moved, 114 and change. Bitcoin's actually caught itself a little bit of a bid. Gold is hanging out at 4,800. Silver is down the most today, down around $1 or so, but nothing really screams direction one way or the other, or reversal in direction as of yet.
Yeah.
Let's take a quick 90-second break and come back. We got more Tasty Live. We got Confirm and Send, where we go to your viewer emails. We'll talk more about this market in about 90 seconds. Tasty Live.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son, and you know what that means. It's time for a little bit of confirm and send, but before we do, let's take a look at the market. Even the S&P is up 1750, about where they were for most of the night. Kind of a tight range for most of the night. I do see a $33 range here, top to bottom, but we made those last 15 handles while we've been on the show and have sold off ever so slightly from there. NASDAQ up 75. You can see the move here in the NASDAQ. The Russell up 6 and change. I don't have to narrate this all-time high. And Dow up 230 and change. I guess the Dow is the lagger of the group. Volatility in by 9 cents, 20.5. But as you see here, and Nick had mentioned, volatility seems to have reached a low no matter what the market does right now. Bonds are down 4 ticks, 114.17, about a 15 handle move in the bonds. I think if you look at the expected move here of about 3/4 of a point over the rest of the week, bonds are basically just hanging in there. Really no volatility. IV rank of 16. Bitcoin 76,000 and change. Trade up to 77,000, under 76, hanging in there. Mid-range down about 0.5 percentage point. Ethereum doing the same, down around $7-8. You can see here it's kind of going sideways last couple of days too. Oil. Question. Oil. You getting the news articles about it, the emails about it? Has it fallen from grace?
It's fallen from grace. I think it never materialized. I think people got a little slap happy with the upside, and now that it's middle of the range that it's been in since the start of this situation, I think it caught anybody off guard that thought this was going to be over very quickly and played the downside. And that, this was going to be a long-term, multi-year, issue and played the tail. I think it got everybody, smacked everybody. If you played it sideways, you made money hand over fist, which has been our
OVX CGI. That's the crude oil ETF that looks at volatility of the options in oil, around 73 and change. Rallied about 6 or 7, 8 handles yesterday into today. We'll see what today brings. Gold down $32. It's under 4,800. That's the first time I've seen it under 4,800. Obviously, it's been a little bit lower than this. You can see here by about $15, down 30 something and change. Silver down $1.23. That's about a 2 times bigger move in silver than gold. Silver gold relationship is about $61. It's been trading about 63 down to around 56, but it's been going pretty much sideways, the gold-silver relationship.
I still think the most interesting way to play oil right now is USO because of the dynamics of the product and the roll and the drift higher, and the skew is through the roof. I mean, USO will usually have a downward skew because there's usually a contango that's built into it. So the prices in the back are usually cheaper or are usually more expensive than the price now just because of a scarcity. So the product usually goes down. USO is going to drift higher as long as oil stays in this backwardation. And so
front month being higher than the back month, so USO, it sells the front month futures that it's long for a higher price and buys the cheaper one, gives it a little bit of a...
So it will go up even if oil stays right where it is right now. Not that I am playing it for like a big up move, but you have that dynamic coupled with the fact that oil products typically have upside call skew like actual oil products. And so that's going to get baked into USO. You can do these, crab trades where you're long, closer at the money call, and you sell 2 or 3 very far out of the money relative to where it's trading. We're talking like 150, 160, and do that for like net zero. You basically buy a call for free over a 30-day time frame if oil stays relatively contained. There's obviously upside risk, but those sort of trades, diagonal spreads, really wide butterflies, you want to do really wide butterflies, they trade really cheap on the upside.
Yeah.
And if you get, the headline-driven $5 down move in oil, oil is going to go down 10%, USO is going to go down 6%. And so you don't, it just isn't going to move as fast on the downside because of that dynamic. So I still think that is interesting. And I added more yesterday. I was hoping we would get a little bit more of a bid in oil and I could add more to it. But I have, a position that is benefiting from that dynamic right now.
Awesome. Let's get to confirm and send. Tuesday, April 21st.
Cool.
What do you do when you get to 21 days, which is just 3 days away, with a short spread and both the short and long option have been breached? So your spread that you sold is, and maybe even if you bought, you can look at it both ways, is in the money. Do you still close or roll, or do you just stay with it since it's at max loss, hope it comes back? So this would be a bad spread, not a good spread.
Yeah, I think a lot of people are in this situation. I mean, me included.
You had all-time highs. Have you sold anything that was a call spread?
Market rallied 15% in 2 weeks. Mm-hmm. Anything you sold on both sides is tested.
Yep.
At any time.
Yep.
Really, unless you got it, the last day or two. But that I just don't think that's most people. Just from a trading perspective, you probably waited the first 5 days and then you said, okay, vol's high, I got to put something on. So at some point, the position, there's no way you could have managed anything. Like I had a 45-day iron condor that we put on with Craig 2 weeks ago.
You could roll up the untested side. You could roll the short strike only.
You can't roll up into a 15% upside move. You could roll up into a 1% upside move. I'm not saying you can't. You physically.
I have an SPY straddle in the back month with 40 some odd days. I've been able to, since it's 45, more than that now, 60 some odd days. I was able to roll up the put. I'm down $1 or so on the iron condor. But what if you just had a short call spread?
That's in the money now.
That's in the money now. What do you do?
At this point, if you're 30 or 40 days out in time, there's nothing you could do right now. And the point that I've been making to people, and because I've been getting questions on this ES position, which I had long delta, so it wasn't I didn't think it was
just the same, right?
I didn't think it was going to come into play, but it is in play now, and it's right at the money. But the point is that
we got him coming in today. We'll ask him what's going on.
At this point, the spread is going to trade at half its width, whether we go up 50 points or go down 50 points. Like it's not going to move. Like the loss is on the table already.
Yes.
So there's nothing to do. Like with 40 days to go, it's a 50-50 shot, and it's going to trade for half the width, regardless of where the E-minis are from here in the next 2 weeks. Unless we explode higher 500 or 600 points, where the spread is now deep in the money, it's all there. The asymmetry of the position.
You've taken all the pain.
You've taken all the pain. And you have 40 days to go till expiration. So doing something now doesn't make sense because you have 3 to make back or 1 to lose.
Yeah.
Over the next 40 days. And it's not going to move all that much.
Relative to the movement. SPY goes up $10, it goes up 25 cents.
That's the point.
So you can roll for a small credit, possibly. You could think about doing that. You could roll for a small debit. You can even think about doing that. Small debit, I'm talking about like a quarter or something like that. I personally would probably just sit with it as you just explained. Yeah. Next one, please.
How do hedge funds invest? Is it just a totally different type of investing, or is there similar to how we trade?
It's not similar to how we trade at all. Matter of fact, I can't answer the question without knowing how the fund's, I believe it's called charter, is written, and that will tell you exactly how they can invest. Like a hedge fund that's written up that it can, has to have 10% gold exposure and 90% market exposure to the S&P 500 will only be in S&P stocks and 10% gold. They won't be 15% gold. They won't be 5% gold, no matter what happens to gold prices. That's the way the chart is written. That's the way they're going to do it. I mean, and typically they're again, depending on how it's written, they're going to be just in stock. So what they'll try to do is if it's like an S&P hedge fund that's trying to mirror what the S&P is doing, they'll have some curriculum that they'll have to be 60% invested, 80% invested. That way it's written. That's the way they will be. And again, it's all about trying to buy the 400 stocks that are going to outperform the 500 stocks in the S&P 500, or get short some if it's a hedge fund. They could be long if it's a long short fund. Yeah. They could be short those that are going to be under, which they feel are going to be underperforming, and more long the ones that they feel are going to be overperforming the market.
Yeah.
So it's really how the chart is run. So you should read that.
Yeah. Well said.
Next one, please. What is your profit target for a pairs trade?
It's pretty subjective. In general, the only real pairs trade that we've been doing is like the gold silver ratio.
We haven't even done that for a while.
Yeah. Pairs trade, you dull the both sides of it, and you're playing for either widening or tightening of that pair, the ratio of those products. And so, it's a pretty subjective thing. I don't know if I could put a number on it, and I would say that most people trading them probably don't have a number on them. You just look at a pair and you say, okay, well, it's at an extreme. I'm going to put this pair on. I'm short silver, long gold, and I'm going to sit on that until it has some until it moves.
Yes.
And it's not like something you don't have. It's not the same as selling a strangle and targeting 50% of the profit, because there is no cap, and the products are not always going to move the exact way that you expect. And so you got to have some sort of flexibility.
Yeah, I agree with you. I mean, you can look at the expected move of the product and try to get 25% of that if you're looking for like a guideline.
Yeah.
That would be a quick guideline. Next one, please.
When there's a difference in price of at-the-money calls and puts, what's stopping me from putting on a synthetic position against shares to lock in a credit?
Oh, they're probably forgetting that there's a dividend or something here. So you're going to sell stock, buy call, sell put kind of thing. So if you sell put, that's 50 delta long. You buy call, that's 50 delta long. You sell.
Well, there's a cost to carry.
It costs to carry. Well, you're selling stocks, so you actually get that, but then the dividend is going to be larger than the credit you're going to receive for selling. Believe me, if you think that there is
the cost is the same as if you lent out the shares.
That's correct. But if you think that there's a edge there's zero.
Yeah, there is no edge.
There is no edge. There's something that you're not seeing, whether it be a dividend, a hard to borrow stock, or something that I'm not thinking about at this moment. Believe me, everything is priced to perfection on that kind of trade. Now, there might be 1/10 of a percentage point or something like that to the interest rate that you get or you give compared to something else. Sure, that would be made up in the small little slippage that you'll get there. There's no edge here to doing this trade. There's no way to find anything to make, in my opinion.
Agreed.
Let's take a quick 90-second break. We're going to come back. Even the S&P is up 13. That's about as low as I've seen them since I've been watching the market since about 5:30 a.m. this morning, and it's a little after 8 right now. We've got an option jive. Immediately following these messages, let's take it live.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's option jive. Nicky, you heard the man. It's option jive. Even the S&P is up 14 change. What's moved for you so far this morning? Has your eyes caught anything? I see silver down a little bit more.
Yeah.
And maybe gold down a little.
I was looking at gold, but I don't know. I wanted to pull the trigger on Sunday when we were down 100 and change, but I was
trade gold futures. You mean?
I was in the car.
Oh.
I know. I was looking at it on my phone.
Pull over though. Pull over, son. You mean a lot to me.
Thank you.
Welcome.
But I didn't pull the trigger. But I have some long delta there, so
option jive.
Let's do it. But nothing's moving. I mean, it's
no,
another choppy day here.
Right.
Should we trade the small caps? Part one.
And gold's low is 47.50 and change, I think, from that move lower. It's 47.80 or so.
Yes, you're right.
Close to that.
Wait,
I'm so sorry.
You want me to do it?
No. I don't want you to do anything that you don't want to do. Matter of fact, it's got good IV rank. If you wait till the market opens and we're here in the next 15 minutes,
there you go.
Just sell puddings.
There you go, Johnny.
All right.
Okay.
Well,
long some gold.
You're in now.
MGC.
You're in now.
Well, we'll put on. I want to put on like an iron condor or something. Wait for Craig's segment. Okay. Craig, put on like a neutral delta. Should we trade the small caps? Should you?
Part one.
Part one, and then we have part two.
Part two. Yeah, I like the small caps. I mean, it's not my first go-to, but I like the small caps.
Yeah, I'm short them here on the micro futures.
They're up the least right now, if you can look at it that way. Towering line drive.
So the four most recognized U.S. equity benchmarks are the S&P 500. You got the NASDAQ, the Russell, and the Dow Jones. Those are the four big boys in the market here. They encompass basically all of the stocks. I think pretty much every stock is in one of those. Mm-hmm. At least anything that you would think of trading. Yeah. While the Dow is the most famous of the group, the S&P 500 is favored by most traders. I mean, we get that question all the time. It's like, why don't you trade the Dow? And it's like, well, it's 30 stocks, and it's kind of not the market as a whole anymore. I mean, it certainly represents a pretty diversified piece of the market, but 30 stocks is not, there's.
And the ETF sucks to trade. I mean, let's put it the way it
ETF
is.
Sucks to trade.
Yep.
DIA.
Yeah. I mean, if you're trying to get to 100 share equivalent like you would in SPY, diamond markets are just too wide. Do better.
It's usually how you know somebody doesn't trade is when they quote the Dow. What's the Dow up? It's like, who cares? And it's a little bit funkier. I mean, it's price weighted, so it's not based on there's not a set weighting. Like, the S&P 500 is weighted very heavily towards the Mag 7. And that weighting is based on market cap, whereas in the Dow, it's based on market price. So like higher price products in the Dow, and I can give you just a list because we have this in the platform. You can pull this up on your own. You can pull up the Dow Jones Industrial Average here. So the highest weighting is going to be Goldman Sachs at $941. You have CAT in there, Microsoft, Home Depot, and then Amgen. Stocks like Apple or Amazon have far lower weightings than Goldman Sachs.
And that's why Goldman Sachs up big today, and you've got the Dow outperforming by 2-1 the other indices.
Yes. So that's why we use the E-minis and the NASDAQ. The Russell 2000 is a crucial benchmark for the U.S. small cap stocks. It is the one that's really the only one that's tradable if you want to get into small cap stuff. It serves as a comprehensive barometer of the smaller capitalized sector. You got a lot of smaller financials in there. Some of the oil names, like the smaller oil companies, it's kind of a biotechs and healthcare stocks are kind of in that basket. So it's certainly a higher volatility index relative to NASDAQ E-minis, the Dow. So it is an interesting one to also compare and look at when you're looking at new positions. So despite its importance, the Russell 2000 has seen less discussion in the recent years. It's typically not the one that's on the forefront here. You're usually talking, financial media is talking about the Dow. We usually talk about the E-minis and the NASDAQ. From a trading perspective, stock-wise, you see lots of headlines about Amazon and Apple and Tesla. You don't really see them about, M&T Bank or, you
don't.
Or, some of those random small regional banks, those just don't come up all that much. And so it's not, one that has, totally been the focus here. And so, it also has a lot more volatility because of that, right? So those stocks are not the main staple stocks. And so there's a little bit extra volatility here. And you can see over the last handful of years here, the performance of all of those. IWM, the Russell, has been the weakest of the group, which shouldn't be a shock considering all of those factors. I don't think there's a catch up here. I don't look at this chart and say, oh, well, the NASDAQ has outperformed the Russell. It should outperform the Russell. The Russell has a lot of stocks that are not profitable. A lot of them are, fringe on the spectrum of investability. This is not something where you look at this and you say, okay, well, there's, something there. Typically in short periods of time, the Russell can outperform as a higher volatility asset more in a tradable sense than an investing sense. You look at a chart of 20 years, the IWM is not going to beat the NASDAQ, probably over any long period of time.
True that. And I'm not even going to look at it like that. I'm going to look at that Russell as a trade in the Russell itself. We've done pairs trade with the Russell. Very hard thing to do. Yeah. Make money.
It's a volatility play. It's more volatile than the rest. So if you want to be, if you think the market as a whole is going to go up, you typically think Russell's going to go up more than the E-minis or the Dow. If you think the market's going to go down, you typically think Russell's going to go down more than the E-minis or Dow. That's kind of how I look at this. This raises a question. Are small companies losing momentum, or is there still an advantage to investing in these? We're going to review the nature of the small cap index market cap of the stocks in the Russell 2000. It's significantly smaller than those in the bigger indices. And so, we're going to be looking at some of these that have at least a $30 million market cap. Currently, stocks in the Russell have much higher market caps than the minimum requirement, ranging from 150 to 70 billion. The top weightings
are going to be Fix, which is, I believe, it's a $1,700 stock, but I think it's an HVAC company, I believe.
So. Yeah.
Comfort Systems. And then you have Carvana, which we're still questioning if it's
if they're going to get involved in
if
chips.
it is
if
or
they're going
isn't.
to get chips and then
They could. We're not sure if it is or isn't a fraud, but it just tells you a little bit about the index. Like, it's not exactly the cream of the crop here. So the total market cap of the S&P 500 is around $50 trillion. It's a huge number. While the Russell is less than 1/10 of that. For perspective, Microsoft alone has a market cap of about $3.5 trillion, surpassing the entire Russell index. We've heard this multiple times. These Mag 7s are enormous. They're bigger than the entire, the NVIDIA moves on a day, $5 or $6. It's more than the entire market cap of the Russell. And that's not, it is what it is, but I don't think it's unwarranted in some respects.
Okay. And that discrepancy between the size is why it's very hard to make it a pair straight. Like, if you want to get long or short the Russell, get long or short the Russell. Don't look at relative to everything else.
Yes, 100%. And so here's just kind of a breakdown of market cap of all of the three products that we just talked about right there. Despite the smaller size of its components, the Russell 2000 itself is not insignificant. The IWM is the seventh most actively traded equity based on option trading notional value, not far behind the Qs. And this indicates superior liquidity for traders. I mean, the IWM, if you want exposure to small caps, is way more liquid than any of the stocks you're going to look at in IWM. And so from a trading perspective, trading small cap stocks is a lot more difficult because the liquidity isn't there. But when you trade a basket, an ETF, it allows you to get something that's liquid that's going to move relatively in tandem with those individual names. So the Russell 2000 presents several compelling opportunities. You have growth potential. Obviously, these are small caps, but as they get bigger, they grow out of the Russell and they go into like mid cap funds or the S&P 500 if they get bigger, or the NASDAQ. It's not like it stays in that basket. So there is that issue. You obviously have like the pricing. So you have a little bit more volatility. These are less well-known stocks. I don't think you've ever looked at Fix.
Never.
Fix.
I actually had to look it up when you mentioned it just now.
Is it an HVAC company? I believe it is.
Comfort Systems, all I know is it has no weekly options and it had $10 wide markets.
It's had an incredible rally.
I didn't go any further. It has open interest at the money options of about 7. So
yeah,
it didn't, it fell off my radar. But you are correct. It's gone from 500 to 1,700, where it's going to be this morning, up about $20.
Yes.
Without a downtick.
And obviously, the small cap stocks are more sensitive to a lot of the things that have been in focus recently. You talk about interest rates. That's a big part of the Russell small cap basket is, when rates go up, it makes borrowing money more expensive. A lot of these companies need to borrow a lot of money or are very indebted. And so the dynamics kind of get multiplied with smaller cap stocks versus, Apple doesn't care if rates are at 5% or 5.25%. It doesn't matter.
They're the ones that should care. They got a lot of cash.
Well,
I'm just teasing.
It's probably a net positive for them, to be completely honest.
Yes.
But these companies where, they're net on balance,
Borrowing
underwater,
money.
and now, their payments go up, another handful of millions, it's a problem. So while small caps may have underperformed other indices recently, they have shown better performance over the long run from 2000 to 2025. Over the past 25 years, the IWM has outperformed the SPY 14 times, so about 56% of the time, and the Q's 44%. In absolute terms, we're not talking about, by absolute, I don't mean absolute returns, because the Q's is up way more. I mean on a month-to-month basis. So like when you're trading this, it goes to the point of IWM has higher volatility. And so you're going to have higher highs and higher lows typically with the Russell basket versus something that has less volatility because it kind of chops
and has smaller swings. And so if you are looking for bigger swings, the IWM is kind of where you can go.
Are you looking for bigger swings when you're, I guess if you're trying to trade directional? Right?
Yeah, I'm short the Russell because I think if the market goes down, it's probably going down the most.
On a percentage basis, right?
The Russell 2000 provides exposure to a broad range of small cap stocks across various industries. Although the Russell hasn't performed well compared to other indices in recent years, still yields great returns, outpacing the SPY in more than 50% of the time, the months. It does have wider swings.
Good job out of you. Good job on the timing too. Even the S&Ps, guess what? They're up 14. I've been quoting them for the last half an hour or so. We'll be back in 90 seconds. Tasty Live. We got the opening bell next. Stay tuned. The moment you've been waiting for.
Turn on the machines.
Turn those machines back on.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, we are back, son, and you know what that means. The opening bell is imminent in about a minute and a half. Even the S&Ps, like the last time I quoted them, up 14, starting to feel a little bit of a look at the volatility, by the way, in the E-mini S&Ps, kind of upticking. This is what I was talking about with the Ivy rank, 48 and change. NASDAQ up 68 at 2 has had volatility expanding as of late. RTY up $6 at 2 has had expanding volatility. And the Dow, which you just talked about, pretty good too, up 280 and change with volatility expanding. Yet VIX futures are going absolutely sideways. 20 and a half bonds, 114.12. Bitcoin, the futures, down $245, basically unchanged. Ethereum down 25. That's about a 1% move in Ethereum. Oil down 40 cents to 87. Is it $2 range tight in oil overnight?
Yeah, for sure.
Yeah, I think so. With the You do have a one-day expected move of around $5, a weekly expected move around 6 and change. That's showing you that elevation that we have right now with everything that's going on. Gold down $35. Nice buy by you, up a couple of dollars. I will leave it up to you to mess it up. Silver down.
That's good. When it works, you don't get to take any of the credit.
Well, I already took the credit.
I've been told that by a wise man one day. They would say, hey, Johnny, you don't, take my losses, you don't get my profits.
Well, I just mentioned your profit, so I'm already in the books.
Yeah.
Silver down $1.50 and change. That's almost a 2% move. Silver moving much more than gold. We're going to open right now. So I'll stop quoting the market because those machines are turned on. What's that?
They whacked the NASDAQ for a second. Pretty handles there. It's back up. Don't worry.
Yeah, NASDAQ up 70. I didn't see it move lower. That could just be a stock opening, one of the stocks opening lower very quickly, and then the rest of maybe it was GE, which is down $10. Lilly, which is down $10. GLD, which is down $3 and change, because remember, GLD doesn't trade overnight like the futures do. HIMS, haven't mentioned that in a while, down $2.75. CRCL, never heard of it, down $2. AVGO, down $1.50. MSTR, MicroStrategies, after an investment in Bitcoin, down $150. Robinhood, down $1.20. You got IBKR for earnings today, unchanged at 81. And
what else has earnings after the
UAL has?
I sold the puts there yesterday, so I'm in that one. Do we have anything?
It's down 64.
ISRG. Yeah, Boeing tomorrow morning.
Boeing BA is
tomorrow morning, Wednesday before the open.
Is it? I will check that.
It is.
All right, I will make sure.
You think I'm wrong?
No. But I do like to do my own homework, as you should, as everyone out there should like to do their own homework. So right now I will check to see if your homework is correct. Wednesday, April 22nd, 7:30 a.m. Eastern Standard Time. So yes, right. Even the S&P is up 3. They're unchanged.
GEV also has earnings. Wow, that got to 1,000.
Who?
G Vernova.
Oh, I don't. Yeah, that's you young kids playing that. Homie don't play.
Well, we just know what's happening in the world.
Yes, you guys are very astute at that. 100%. 100%.
We got to make the money. You already have the money. I got to make the money.
There is a difference between capital preservation trading and capital wealth building trading. Yeah, 100%.
VRT Vertiv also has earnings.
Okay.
It's a big one.
Okay, yeah, you're right.
Come on.
You are right. VRT is a big one, and it is a big mover too, and it's had nothing but upticks in VRT. IV rank of 80. You can see here expected move is about $30 over the next 3 days alone. June markets are $3 wide. May markets are $2 wide. Tough stock to trade on the option side, but it is definitely a mover. NASDAQ down 5, down 1, up 3, up 4, up 5, unchanged. Even the S&P's up 5.
All right. I made small on the GE crab trade. I should have held it because now it's even better.
Yeah, you can't.
But the market
You can't do that. You can't do that.
I did this, and I talked about it yesterday. I was like, this position, the stock, there's nothing liquid here. It stinks. But I had the itchy fingers. I was like, I got to put something on here. I had to do something. That's why I got into what's CAR doing?
CAR was up around $75 pre-market, then looked like it kind of sold off a little bit. It sold off significantly. It's only up $38.
I'm putting the kibosh on it.
You're putting the kibosh on it. Traded as high as 647, where it is right now. It opened at 622, about $25 lower than this. It got as low as $600. I didn't see that. This is a stock that hard to borrow stock that
you can't do anything.
You really can't, and most retail investors should avoid. I know it is in all the Reddits, the Substack, the news, everywhere else. I don't know how you benefit from trading CAR unless you can't even sell stock. So unless you want to buy it, there's nothing.
I put on a diagonal spread in MicroStrategy because we were talking about.
Okay,
I
that's
think
good.
There's a squeeze potential there. If Bitcoin gets going, I think it's an interesting spot for a pretty long duration. I did June, May, 20 points wide diagonal spread.
Yeah, it's got about 22 long deltas on there. It fits your directional bias. It's got about $6 in theta decay. I mean, that could quickly go away if the stock were to go lower and become a theta negative trade. But I like the strategy of 24-day short option, long a 58-day option. You're actually long an option with an 85% monthly implied volatility versus an 88, which is the opposite of what you have in SPY. If you were to put on a trade like that, you got 19 versus 20. So
well, and time in something like a Bitcoin where it moves, there's a lot of risk further out in time.
Yes,
because there's an asymmetry to it, or at least price into it. So it's not a shock to see, it'd be higher volatility 50 days out versus 25 days out just because of the clock.
True that. Good job out of you.
Do I have anything else moving here? I mean, a pretty medium.
Even the S&P's unched. NASDAQ down 15, Russell up 9, and the Dow still up 220 and change, I think, on the heels of Goldman Sachs, as you talk about being weighted there, up $6 and change. Although Goldman Sachs is trading right near its highs, about 50 cents off its highs.
Pretty muted day here.
I would say
this is about as nothing as you can get.
Yes, it really, really is. Eerily quiet, kind of
very
a little on edge.
Yeah.
Don't do anything stupid, Bat.
I know.
Control yourself.
Easier said than done.
It is easier said than done. It really, really is. I mean, are you light on trades? You heavy on trades right now?
I'm as light as I've been probably since we took over.
Yeah, me too. And I've been adding trades the last couple of days. But like if you're trying to lean short here, I don't know if selling calls gives you the bang for your buck that you're going to need. Probably a diagonal spread or something like that, or a crab trade is going to give you more bang for your buck. I mean, I think the volatility, although it's upticking in the short term, seems to be a little bit lower than where it's been. If you're trying to sell puts, have you taken a look at them? I mean, you look at some of these puts in SPY, they're less than half of what they were just a few weeks ago. You go to the 30-ish delta option, you got to go to the 885s, and you're getting about $10 for them. You go out to the 15 delta, and you're getting $5 for them. If you go wide, $30 wide, using the short delta of around 18, you're getting $2.50 for a large amount of exposure, I think, tail risk, I think, for the $2.50 that you're selling it for. I'd rather you try to do something else more dynamic with your trading.
Weird day.
So far, weird unchanged.
Oil down, vol, not moving. It's bid right here, but E-mini is basically unchanged here. We've been sitting at 71.50. Even yesterday, we rallied right to 71.50. Middle of the day, towards the end of the day, we nothing really.
Oil volatility actually upticking a little bit too, 76 and change.
Yeah.
On a down move, kind of interesting.
What's on the fast move or on the high option volume list that's moving?
To the downside, it's AppLovin down around 7.
Pissed I didn't do anything about UNH.
Yeah, I agree with you there too.
Carvana's about to drop $100 today.
UNH up about $30.
It just moved 20 handles in a clip. I think it was halted. I don't know if it was halted or
Carvana.
It was still waiting to open, but that stock's about to that. I mean, it's moving.
What are you talking about? Carvana has a.
I'm not Carvana. Car.
Okay, CAR. Yeah, I mean, I hate even giving it any time, but
no, it's stupid.
I told you on the.
I put that diagonal spread on it. It's the stupidest thing ever. I think I was like, I'm having a great day and I'm about to destroy it with $5,000 on this stupid freaking trade.
5,000 in risk.
5,000 in risk, not going to move. Well, but I actually talked about it on the close yesterday of just how high volatility is, and I don't have the stomach to do
It just moved $30 in the time you're talking.
Yes, up and down.
Right. And it's traded 200,000 shares in the last 9 minutes or so. It's relatively small here. The market, even on the stock, is $5 wide.
It's junk. But
it's junk.
My point was that, the call ratio spread or something like that, it's just too much risk. Like there's no reason.
No. And the markets aren't deep and liquid and tight enough.
And you can't sell call spreads because the spreads trade for nothing. The bid-ask spreads are $5 wide. You can't do anything. So you have to do something like a wide butterfly would be in the cards because it's defined risk and you can play the vol. The diagonal spread that I did put $5,000 on the table, which is a big position, but it's not going to move all that much. And I talked about it with the volatility and the way volatility is priced in there. I put it on when the stock was at 530. By the end of the day, the stock was at 610, and the position had moved $300, $400. It stinks, but because of just how high volatility is, nothing's going to move there. It's all a directional. You have to be directional there.
You kids, I get FOMO.
Stock's up 50 now.
60.
Just moved.
Just trading near its highs.
But that spread, it's not moving. I think the stock might be halted at this point. Did it halt? I don't know. The liquidity is going to be just junk there.
It looks like it's halted because the bid ask is the same price.
Yeah.
The top, you can't, first of all, you can't sell. Here, I was going to.
You can't sell stock. You can't do anything.
Here, you kids, I love your headlines. I love you grabbing for it. I love the whole thing. Can't wait for the manipulation when the stock is down $300 or $400 or $500 in 2 days.
Excuse me, that's just 20 handles in my gold futures. Go on though.
Thanks that your father made you push those out.
Of course.
I love all those headlines. I get FOMO in the market. I don't get FOMO on Avis. I don't get FOMO on car. Because there's nothing I can do as who cares? Why the reason? What's the manipulation? Two hedge funds own it. Who cares? It's like, how do I benefit from it? I mean, I've said it before. I'm a capitalist pig. I can't benefit from it. You want to buy it? Buy it, because you can't sell it. It's a hard to borrow stock. Can't locate the stock, so you can't sell it. The option markets are too wide for me. Yeah. Maybe not too wide for you. I like the way that you're doing, but like you just said, you might get the move. Look at the way the puts are trading in here. It's telling you it's going to go down $200 or $300 someday.
Yeah.
It's telling you that in a relatively short period of time.
Yeah.
But until then, who cares?
Yeah.
I mean, it doesn't matter to me. There's so many other places you should be going to try to make some money.
I agree.
But I love the headlines, and especially when things are quiet, you'll get these headlines, and then everybody will, the gurus will all tell you.
The best part about it is I'll close that trade.
What are you going to trade 5 shares of stock in here as a retail investor?
You're not going to do anything. You can't do it. The best part, though, because I'm a Johnny trader, is I'll make $500 on that spread, and then in the next 30 minutes,
it'll move
$5,000. That'll be the problem. That'll be, and it'll be even worse because you have the FOMO on the way up, and then you don't make as much money on the way down, and you have the FOMO there too.
It's a horrible way to go through life.
That's a trader's life, though.
That is,
and we've talked about that a million times. We were bullish and pounding the table. We were not 15% bullish.
No,
we were 5% bullish.
Yes.
And we took the 5% when it came.
Or 6 or 7% or 8%.
And then at 10%, because that's way past what we ever thought, we got short. And not only do you're trading it, and you're not going to get the full move, and you're not going to time the exact top. It's just not going to happen.
That's correct.
Impossible.
That's correct. Let's take a look at the market. Then we'll bring in futures in focus. My man Craig from the CME. Even the S&P's up 750, NASDAQ up around 20, Russell up around 10, Dow, the strongest of the group, up 270 and change, although the Russell is trying to gain on the Dow, up $10, about a third of a percentage point move Volatility in by 9 cents. Bonds are in by 9. Bitcoin basically unchanged. Ethereum basically unchanged. Oil down 40 cents for oil with the high IV rank of 53 and volatility expanding in there. Basically unchanged, down 34 cents. Gold down $22, 0.5% move. Silver, the biggest mover in the commodities, down 1.5% or $1.11. You ready to take a quick 90-second break?
Sure.
Let's take
along some silver. Nah.
Now you're
not. It's itchy fingers.
See, this is like at these moments, I wouldn't do it, but this would be an Italian Village day.
What is that?
Like the guys in the pit, right around now at around 8:45 when
they just say, "Let's have an early lunch."
We're gonna go to Italian Village today. That would be sitting at the bar with Vinnie at the bar, and you would eat at the bar, and Vinnie would give you some good stuff, and you'd have a libation or two, and you'd come back and then do really stupid things, but not at the CME. Those guys were good. We're going to take a quick 90-second break and come back. We've got our representative in Futures in Focus right after this. It's Tasty Live.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, we've got our representative here from the CME, my man Craig Futures in Focus. How are you, brother?
Great. How are you guys?
Good to see you again.
You brought the
Always
rally
good to
a
see
little
you
bit.
guys.
You did bring the rally a little bit in the equity
What, for the last two weeks?
No, we're not. You're not that good.
Yeah.
Okay, you're good for about 10 handles on the E-mini S&Ps. That's what you're good for.
Yeah. Now,
well, I'll take that. But
well, he was good for.
I'm not good for any.
He was good for
you're better than
1,000 the last time he was on. I mean,
This is true.
I think, the last time we were like, man, this is a remarkable. The equity market's been remarkably resilient,
Yeah.
and then here we are. 14 days later, and I don't think it's basically had a downtick since I left,
they have not. No, they have not.
It's been pretty unbelievable. I mean, and it's across the board. It's all of them. It's the E-minis, NASDAQ. I mean, the Russells had new highs. You got 50K. We could put our 50K hats back.
We're back
we
there.
had to put them away for a little bit. So
you're going to be there, right?
The 50. No, we just got it. We
just got it. You're right. 50,023. We're on the futures at least. As the high. You're right.
Yeah, the Russell. Were you guys talking about that in the segment before here?
Yes.
I did a thing a week or so ago. I hadn't realized the outperformance of that index. Just this year. I mean, it's
been
kind of quietly has just been.
Yes, because it was the underperformer.
It's all remarkable.
The redheaded stepchild of.
For a long time it had been, right?
Yeah. But it offers a little bit more volatility. I mean, you have the smaller cap stocks, so they kind of swing around.
Yeah.
We were looking at one of the stocks in the basket, Fix, which is Comfort Systems. The stock has gone 500 to 1,700.
Yeah.
In like a short period of time. And you see it in the Russell. Russell's just been, it's been a face ripper.
Right.
Yeah, sure has.
2450 on the Russell futures up to 2850 here. We're like basically at 2823 right now. Basically, all-time high has been incredible.
Yeah, it really has.
Yeah. You got pairs trading, Russell, because I have some short micro Russell against like a NASDAQ or E-minis. Do you know offhand the
ratio?
Is it 3 to 2? Is it 3 Russell to 2 NASDAQ? Or is it 2 E-minis? In terms of like volatility adjusted.
Yeah. God, we did this all summer with Tom last year, Tony, right? That sounds right, Nick.
I think it's 3-2.
3 to 2
is what we've been doing it.
Is what we do.
What's the notional on the Russell? It's because the NASDAQ's back at about 50,000 on the micro. And what's the Russell trading at?
28 and change.
Yeah, it's 28 and change. So you'd have to do.
So right off the bat, you're 2 to 1 at least.
Yeah,
2 to 1 at least, and then
you go volatility adjust. I mean, it's subjective. I know the CME will come up with
sounds right.
Yeah, because you have about a 10 or 15% difference in volatility there.
Exactly. Yeah.
So which is about 4 or 5 vol points.
So that does sound right, Nick.
I mean, it's subjective. You're going to lean. It's never gets you to zero delta. You always lean a little bit low or a little bit short on it. So you got to put your own kind of
in, right? I mean, that's where the trader happens.
That's right.
But yeah, I mean, I know we're not going to spend a ton of time on the Russell. You guys just did, but that's one of the things we always talk about is the index choice matters, right? And for traders, like you said, they're not always correlated. They're generally correlated one way or another, but with different magnitudes and. Different things might drive the Russell. Like they may be more sensitive. It may be more sensitive to rate, to like higher rates than some of the other ones.
Sure.
Because they're small companies.
I'm leaning a little short the Russell now. My thinking being, and because of the volatility aspect of it, is that you typically like if you think there's going to be a bigger move in either direction, you typically see the more volatile product when they have such a high correlation is usually going to go that way. So I have a little bit of short delta in the Russell. I'm also scared of the E-minis and the NASDAQ. Got all the big time earnings coming up, so I'm like, oh God, are we going to get like 8,000 on the E-minis now? I mean, I see those calls. We have Vecchio speculating on our 8,000. So,
I gotcha.
See, it seems nothing seems to stop this train.
Can't stop this train, not right yet.
Unbelievable. But so I put together a couple slides for us.
Let's take a look at them.
This is my core. This is my favorites. ES, NASDAQ, Gold, GC, and CL futures. You got a favorite out of this basket? Are you allowed to pick favorites?
I can't. It's like having kids.
Don't lie to us. We're all friends here. You have a favorite child.
It's like having kids. Yeah. They're all my favorite. No, but what I will say, Nick, is that if you look at CME retail volume, individual trader volume or retail volume,
sure,
those are the top 4 in no particular order. I think Probably NASDAQ, like the micro NASDAQ is probably number one right now. But those 4 are generally the most popular products among the retail traders.
So micro NASDAQ has even outpaced like
it has for a bit, yeah.
Wow.
For even like when I started, when I had seen 2016, it was the S&P. But for the last, I would say few years, then at least on the retail side, the NASDAQ volume has outpaced the S&P.
I mean, that's a good sign. It tells you that retail traders are getting into it.
It's been in the news, right? Like you see the volume go where the volatility is most importantly, right? And then kind of like where the headlines are. And then you had the Mag 7, right? That they call it was all over the headlines every day in the financial press. And then you see the retail interest in it.
Yeah.
And of course the volatility.
And you got us the single stock futures coming soon.
They're coming. I know we teased it out maybe a month, 6 weeks ago, and I didn't have any details then.
Yeah.
I don't have very many more details now.
You had one homework assignment. You're supposed to come back with details.
And I can't wait to do the single stock futures segment with you guys. When these details are out, because we're really excited about it, and just I've seen CME launch a lot of products in my time, and this is one. Just even personally, I think it's just got so much potential, and you kind of started throwing out some use cases the last time that we talked about it,
like overnight hedging. I mean, even on a speculation basis, just the leverage that you get with it, span margin is going to give you a lot more flexibility there.
Yes,
especially if you got bigger positions too. You're the smart person that bought NVIDIA at $10 a share, and you got a big old bag of stock there. Using these futures are going to be an interesting way to kind of hedge that.
Yeah, and we're definitely moving forward. Like for example, we have a development environment called I'm going to blank on the name, but we actually do have some of these instruments in the development environment now. Like Tesla's in there. We haven't announced all the names that we're going to list, but like NVIDIA's in there, Tesla's in there, I think Google's in there. So you can imagine some of the names that'll be there. So we have, we're moving forward as we wait for regulatory processes and things like that. We're excited about it.
Like, are you thinking like you'll do like the top 20 or?
I think what we've announced, when we initially announced it, we said a little more than 50 or slightly more than 50 names.
Like at the start?
To start, at launch, right? So I think we said slightly more than 50 names at the launch. So, I think you can imagine, right? It'll be the names that people generally trade.
If interest is there, you probably keep expanding it.
Yeah, that's to start, and then we'll kind of see where it goes for sure.
I like it.
Very nice.
Well, my favorite of the group, the E-minis, micro E-minis is my favorite. From an option perspective, I kind of gravitate toward the ES options. The 4 that I put in here, I think are, and you obviously outlined them as kind of the most liquid of the bunch, or the most traded, I should say. But I like the combination here because you got an option, a spot where I like to trade the options a little bit more, going into the E-minis, bigger product. And then MES is kind of a core position here that kind of scalp around. We've been doing the NASDAQ kind of pairs trade long, the micro NASDAQ short a call spread. I have some short delta in the ES right now, which I should probably be hedging with some MES, but I've missed it in the last 200 points.
That's okay.
But I think this is just a good point to make. Like you can get really small relative to the buying power that you're using in an ES option position that you can pretty easily hedge with MES here as just kind of a futures position as well.
Yeah. The use cases, are multiple, right? Like we've seen, for the traders that are trading futures only, we really have seen the retail crowd kind of migrate to the MES, to the smaller one, the micros, simply because the mini is 350 plus, somewhere between $350 and $400,000 worth of S&P. That's a lot of exposure.
Yes.
So for like the sort of future scalpers and swing traders, we've seen them move more towards the micros. But then, Nick, like you just said, on the options side, you can trade those options and then manage your deltas with the micros, and that can be pretty effective. Like you've done on the show with me.
Everything's fungible. I don't think is the right word.
But offsettable, though, right? You're going to get the margin relief if you've got one on against the other. Exactly.
Yep.
Yeah. I like to. I'm going to put on a smaller iron condor this time around. What do you think the one
retail friendly? You know what I mean? Like more in line with the an equity trader who's transitioning to the futures or futures options. So.
The micros, you're saying?
Yeah, the micros. Yeah. You were saying, Nick? Sorry.
I was going to ask you, what do you think the one standard deviation is to the upside in ES in the next 38 days?
Oh, I don't know.
16 delta option. We're at 71.66.
Closer on the call side, I'm sure. I mean,
for sure. What do you think it is? Give me a number, Johnny. Come
73?
on. Make me a market.
73?
Oh, 73. That's 35 deltas.
Wow.
It's 24 to 24.50 is our one standard deviation on the upside. Isn't that wild?
Wow.
Did you ever? I mean, like we weren't even thinking about these numbers.
No.
2 weeks ago.
Not even a week ago.
Crazy.
Yeah. One might think with all of the uncertainty, there'd be a bigger put skew in some of this stuff, and it just. Like you look at the skew and it's sort of it's like where it's been over 6 months. Like
right.
It's pretty wild, both in the SPOOs and the NASDAQ.
Yeah, for sure. I'm going to move this a little bit. I mean, it's basically zero delta here because I'm pretty flat on both sides, but I'm going to go around the 20 delta, 23 delta on the upside. I'm going to go to the 7,400. 7,500 spread. And then on the downside, I'm going to do the 6,600. I've got this at the money call spread as well. We put this trade on as a one standard deviation the last time we had you on. It's at the money now. That's just how incredible
this
moved one standard two. So that's 14 days.
That's
14 days on a 40 some odd day trade. That's just how.
Now we get a chance to blame you again.
Blame me, absolutely, right? I'm back.
No, listen. I said it before. You don't take my losses. You don't take my profits. You don't get my profits. So,
I mean, would you have thought we'd hit all-time highs in these indexes when I left 2 weeks ago? I mean, it's really remarkable.
Mm-hmm. Sure is.
I just got filled on that too. 1/3 the width too.
Oh, good.
So it's a cookie cutter. We get that question all the time of like, how do you find 1/3 the width of the strikes? You go to around the 20 delta, 40 to 50 days out in time. You can go 50 points wide, 100 points wide, 200 points wide. It's really going to trade right around that 1/3 the width of the strike. So I did it at 29.
Push your gold future sale in there too.
Oh, I didn't get that in there too.
Yeah.
All right, that's in there too.
So you essentially now have two short call spreads on
net short delta, although I put on neutral delta.
If you look at the one that you did 2 weeks ago, right? Because that's what you're doing is essentially selling a call spread, selling a put spread. That's what you just did here, right?
I am
it's trading. You know what I mean? That's trading.
Yeah.
I mean, you come up with a plan and then you try to facilitate it. It's just trading.
Yeah, we talked about it because we had long delta at the lower end of where we've been trading. And it's a hard, as a trader and somebody that's watching markets, you don't play for the 15% up move. We got the 5% move, and you think you're a genius. You're like, everybody's bearish. Market's up now 5% in a week. This is as good as it gets. And then market goes up 10%, and you're like, okay, this is a little bit more. I didn't play for this. I was bullish. I didn't play for this.
Right.
It's up 10%, and then it goes up 13 or 14%, and you have to lean short. If your assumption was long at 63, you're getting out at 67, and we're at 7,000, you got to get short here. You don't play it for it to go to 73, 7,200 where we're at right now. It's been an amazing move.
Yeah.
Yes, it has been.
I have another slide here on ES and MES, just to we get a lot of questions on kind of the margin math. And I put this as like my Johnny portfolio, just to kind of show you that using these micro contracts, much smaller exposure, much more accessible to the smaller trader like myself. I have traded these in the Johnny portfolio, which we'll have later this week. But here's how kind of the math works out, because people get kind of caught up in the buying power. You get a lot of leverage there.
Exactly.
The swings can be big in these products.
Yeah, like that's what I was saying before is that multiplier. And that's what, I think it's not rocket science, but one of the things that people and I've said this on this show, that you just have to learn with futures is there's this concept of multiplier. It's not like a per share thing, right? Mm-hmm. So with the ES, we call that multiplier 50. So essentially the amount of exposure you're getting is 50 times the index. So I think you just said 7,300. So what is that, like, I don't know, $370,000 worth of S&P exposure with one E-mini contract. Yeah. I think the margin is a little bit higher. I think it's up around 20, maybe a little bit higher than 20.
Volatility.
And the price appreciation too. Yeah. So let's call it like 20,000-ish. So for $370-ish thousand, you're only putting up 20-ish thousands of dollars in margin, or I even call it performance bond, right? Because it's different than margin on stocks where it's a loan, right? It's more of the amount of money you have to put up to hold a position, right? A performance bond. Yeah. But then and then the micro is 1/10 of all of that. So instead of 370, it's 37,000. Instead of 20, it's 2,000-ish dollars. So, but it's a great, I like that you put this up, Nick, because that is like the one thing. And again, it's not splitting the atom, but you just have to know like what that multiplier is and how it works.
Yeah, and I think these products, the size is for different accounts. Like it was when you guys made the micro E-minis, you weren't thinking about the $1 million account trading them. You're thinking about the smaller size account. How do I get a product to a smaller size account that gives you a little bit of leverage, flexibility, a little bit of a dynamic position to if you're trading options or stocks, and that's what you have.
Totally. Mm-hmm. And like if you look at, I think we're going to go to the NASDAQ next. Yeah. When we launched, the micros have only been around since 2019. I think I've asked you guys on this show. I think the NASDAQ was trading around 7,300 at the time. We're more than triple since 2019 in the NASDAQ.
Why do this trading thing? You just buy the NASDAQ. 5 years. What am I doing here?
It's true. It really is.
But the NASDAQ, it's another product that's super, super liquid. I trade it the most. The size of it I know it's smaller per tick, but you have a little bit of added volatility. It's a bigger product too. So, that is something you got to keep in mind there. 300-point swings in the NASDAQ, even in a micro, they can get big.
Yeah. That's 50,000, 25 plus thousand. That's $50,000 on the micro. Yeah. 50,000, $500,000 on the mini, $500,000 worth of exposure. So we have people asking us for a smaller one now, smaller than the micro now.
Really? Well, as the products keep getting bigger, they don't price themselves out of the market. They just become more notional value.
Yeah, exactly.
How do they determine splits? Like when they split, because the S&P is split.
Sure. Right? And futures have split. The future really was 10 times the size of what the big future is right now.
Like you're talking OEX?
I'm talking about even
the original.
When it was SPY, right? When it was SP.
Well, the minis launched in 97, I think. We launched the S&P. The mini S&P. Right. It was a mini then.
Right.
The mini is not a mini anymore.
Sure, named by a rose by name.
Right?
Yes.
So we have people say now your micros have gotten big, and they're not wrong. The micro NASDAQ is 3 times as big.
Right. What do you go below a micro now? You're going to have to
have a new
call it.
Come up with some.
The petite.
There you go.
Better trademark.
I don't know. What do you go?
You better run online and get that URL right now.
Trademark that quickly. Yeah.
Oh, so good. The NASDAQ's another one that I like to trade a lot. I would say I trade this less on the option standpoint. I like to trade E-mini options as kind of like the core. I scalp NASDAQ because I like the volatility aspect of that. I might be incorporating into the next time we do this the Russell, because now Russell I'm using a little bit more too with the M2K, which is a fun one to trade too. That one's small, is much even smaller from a notional perspective than either of these two.
Yeah.
Give you one more slide too here on the NASDAQ. So here's a little cheat sheet. If you're looking at just like settlement, tick values, print this one out, put that in a frame. Along with the kids' pictures on the wall, you put that's there just as a reminder as you walk by.
I think the takeaway so far now has been, the multiplier. You can't assume that it's one. You shouldn't assume that it's one in anything from an equity standpoint of view, looking at futures. should know what the multiplier is. That's the most important thing, because futures, especially as small as the ones that you're representing here, and even the large ones, they're basically one tick wide.
One tick wide.
So, it really only comes down to the multiplier. What's that one tick worth? What's the full point worth? Once you have that, it's just trading.
That's exactly right.
Yep.
So, and maybe like, what do you mean by a tick? Well, a tick means that the smallest allowable increment between the bid and offer.
yeah.
That's all that means, right? So you might see a 25,000.25 bid, then the smallest amount that can be on the offer is 0.25. So you have a quarter and a half, we might say, and that's exactly right, Tony. Then that's worth $5 in the mini because of the multiplier. And again, it's not intuitive, but it's also not. It's not rocket science.
That's correct. Sure, that's correct. You've said not splitting the atom a few times. I think you're right there.
The next one I have here is the oil futures, which I've been trading more so than ever just because you've had the volatility, all the political stuff. MCL has quickly become one of my favorite products to trade. I've been doing a lot of long futures against call ratio spreads or butterflies, stuff that you can trade on the upside because of the added leverage that you get. With the crude futures, it's a big contract at $80 a barrel. You're talking, $80,000, and it's moving 1,000
at the vol that it's trading in.
At the vol that it's trading in. There's a lot there. So I've really been gravitating toward MCL, trading a lot of options in there, which have been pretty liquid.
You're trading the MCL options.
Oh yeah,
great.
Oh yeah,
yeah.
Because you get that added leverage, and you get into at 100, the contract size being 100 barrels. It makes it easy from an option perspective to kind of put that all together. And the added leverage you get, you can size up a position as long as you keep size in check. You can size up of a position, and the leverage you get is much more reasonable than you would with a stock option. So it gives you a little bit more flexibility to kind of trade around that position. The vol is just great.
Yeah, and the options are margined with the same span methodology that the futures are. So in some cases, you get those capital efficiencies. But that's great. I think one of the big opportunities that we have at CME, particularly on the retail side, is the micro options across products. I think
for sure.
They're developing, and I think there's a ton of potential there for us to develop. Even better liquidity and just more awareness of them. So I think, it's great to hear that you're trading them now. Yeah.
I want some MGC options. That would be my number one. Cause I trade, you got enough with the micro E-minis. You got does the micro NASDAQ have options?
Yeah, they do. And again, but that's kind of what I'm saying. Like, these are markets that I think we can do a lot more than we've done. Yeah. And we are working on it. We're doing some things to improve the options so I think there's a ton of opportunity. I think we have micro gold options listed. I just don't think I don't think they trade a lot.
They don't trade.
The liquidity probably needs to develop a little bit in those. But that's exactly what I'm talking about, Nick.
Yeah, that's the one I want. Here's just a quick little cheat sheet on the oil futures here. There is the QM, which is the mini, right? QM. I think I've traded that a handful of times too. I've done the natty gases. The mini natty gas is Q. Is it Q?
The QM is crude oil, as you pointed.
Is it QG?
Yeah, the mini
QG is the
mini gas.
Mini gas, which is not as I prefer the natural gas options, natty gas /
Yeah.
But it's another one of the minis that not.
Yeah, these mini energies have actually been around for a long time. And certainly the mini crude is still a very viable product. Since we've launched the micro crude, though, we have seen more retail move towards that micro crude than the mini.
Makes sense.
For sure.
Makes sense. Again, retail friendly. We haven't looked at I don't like the trade because nat gas is such a big product, but the nat gas oil relationship has to be off the charts.
Yeah, because nat gas has gone really nowhere.
Right. I know when oil was way higher, nat gas was making new lows. They were not moving in a tandem.
They weren't, and then I think some of the disruption, some of the what's happening in the Middle East has.
But it's been more
caused some
oil
disruption
movement
in
than nat gas coming into
Yeah.
the relationship is what I was trying to point to. Yeah. I'd rather just trade one or trade the other.
Mhm.
Me personally.
And nat gas has such independent of like the geopolitical things that are impacting it now, it has such a seasonal and cyclical element to it, right? With the heating and the winter and summer and injection period and usage period, and there's a lot of dynamics that go into nat gas trading.
Yes, more there than meets the eye, but a lot more than I know.
Yeah,
that's for sure.
Finally, my gold. I love trading my gold. GC, I need a position there. I've been trading MGC. I'm actually
scalped it today.
I don't want to toot my own horn, but I'm gonna put it in order just to buy it back at 47.90. We'll try and hit it twice.
Okay.
That's usually when I give back.
That's right. That's right. Mm-hmm.
You can take the money and run, but I'm not gonna do that. But gold futures,
gold's been interesting because we had that unprecedented rally to all-time highs in gold, silver, and some I think platinum. Yeah. And then you might expect when war sort of breaks out that
Isn't that
there would
the
be a
thing?
flight to, but it's off I think 8 to 10% I think since February 28th.
Right.
Which then maybe it's an interest rate thing,
US dollar,
the US dollar with rates and things like that. So then the question is where is inflation and how is that going to react going forward, I think. But it's been an interesting.
Been a good trading vehicle though, just back and forth. Yes.
I'm gonna play that range too. I have a little bit of long delta in gold in general, but I'm gonna do the 5100, 5150, which is kind of the higher end of where we were trading, prior to the situation in Iran. We got up to like 5200, 5300. I'm going to sell that call spread. So 5100, 5150 on the downside, the 4500, 4450. So I'm going 50 points wide. It trades at 1530, which again, right around 1/3 the width of the strikes, which is what we target. I'm going 35 days out, which is the May standard monthly contract. Yep. And we're right around that 20 delta. Like it's just kind of a cookie cutter. You got an IV rank of 40 here. I mean, it's in play. So
definitely in play. Yeah, you're playing the range.
So what are you doing there then?
We did the
4,500 and 5,100.
And we're at 48, just rounding everything.
The lows that we had, kind of besides the kind of spike that we had down to 4,200 right at the start of the war, was right around 4,400. So I'm slightly above that, and then I'm slightly inside on the upside. The 52 to 53 was kind of the higher end of where gold traded for most of the beginning of 2026. Sold off a bit. So I'm kind of just trading that range that we've been in recently here. Neutral.
And these are options on the GC to be clear.
Options on the GC, and you'll see those push through on the follow page, right? You push them through.
Yep, most definitely.
All right. We got 2 trades on. We did the neutral, but I'm short E-minis, net, neutral position, new position, and the gold neutral iron condor. Ball plays in both of them.
Beautiful. Is that your last slide?
That's it. That's all I got for you.
Good job.
I got one more, just like another little printout cheat sheet for you.
And the only thing on here, the 1 ounce is actually cash settled. So the other 2 are physically delivered. So if you've got the other 2 on, you really want to make sure of when they're expiring because there is a physical delivery nature to those. But the 1 ounce will settle cash. So
we'll change that in post. Thank you for catching that.
If you don't do anything over there, Suhail will come
and get you.
I've had a couple conversations with him. I was like, wait, MGC? What do you mean?
Right.
He's like, you want the ounces? I was like, kind of. I want one of those door stops.
You want the door stop. Good job out of you, my friend. Good job out of you, son, for leading that. Very, very nice. Good job out of the market. We're trading near highs, new all-time high highs just about everywhere. Stair-stepping higher.
Amazing.
Wow.
Can't stop, won't stop. Unbelievable.
We'll take a quick 90-second break. We'll come back. We got more Tasty Live. After this, we'll be back in 90 seconds. We got a market measure next. Good job.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Who's that? Mikey, my friend, we're back.
How's it
Morning,
going?
sir?
Good morning.
I had to bring in the real talent. I got sick of that old man over there. I was like, all right, get him out of here. Bring on the next one. There we go. Beep, beep, beep.
Happy to be here.
Thanks for coming on. It's good. It's good. It's been a little bit of a crazy market. I'll do a quick little market update here. You got E-mini S&P 500 futures up 17, near the higher end of where we've been trading. 35-point intraday range, been a tight range here today and yesterday. NASDAQ as well, up 87 here. It too has had a pretty tight range, about 170 handles here. The Dow up 291, the Russell up 21. The Russell, the outperformer of the group and the last couple weeks. Hence why our segments are focused on this today as well. Oil catching a little bit of a bid, up 30 cents here. You got volatility futures Perky up 16 at 2075 here. You have the VIX itself over 1908. You have bonds down 7 ticks. Gold and silver have been choppy here. Gold's down 33, about 20 or 30 handles off the high that we just saw in the last 20 minutes or so. And then silver down $1.40. Bitcoin has been choppy, sitting here at 76,000. How are you feeling about this market? I just put on 2 neutral positions, gold and E-minis. And I'm hoping that I didn't top tick the market here.
I feel good. I feel good specifically because I've been layering into these butterflies in SPX that I told you about yesterday, but also into this up move, I've been removing or narrowing that put spread so that I have way more profit potential if the market does reverse to the downside, but I only added like $200 of risk in doing that. So instead of having a 100-point wide long put spread by a 100-point wide short put spread. I now have a 100-point wide long spread by a 50-point wide short put spread, or even a 20-point wide short put spread in the really near term one. So if the market does go down 100 points, those will appreciate substantially relative to if they were equidistant.
Almost like a reverse jade lizard.
Yeah.
Like legging into going from a butterfly to a reverse jade lizard, because your short spread is tighter than the long spread.
Yeah.
You have no risk to the downside.
No risk to the downside. Nope. Just at least $5,000 of max profit if we get down there, but that's hundreds of points away.
You and me both leaning a little bit short delta, a change of.
Well, I wouldn't say I'm short delta because I'm violently bullish in some of these other products, like the micro mini position. I rolled up to the 7,400 strike.
No.
Oh yeah.
Oh no, you can't.
And then Microsoft, I have open positions, just a naked call financed by a short put spread, just letting it ride. So yeah, I'm prepared for any situation. If we rip higher, it'll be great. And if not, I'll have these big hedges in SPX that I can take off and offset probably all of that pain if we do end up selling off violently here. So I feel good.
I feel good as well. Feel good about this segment too. We got more on the Russell coming at you. Should we trade small caps? Part two. Do you trade the small caps a lot? What's your perspective on, do you either trade I'm short M2K, which is the Russell futures, but I do trade IWM a little bit too. Where would you rank it in your 4?
I don't trade it all too often. I'd rather trade SPX, MES, or QQQ specifically. Yeah. But I do remember.
Would you take it over the Dow though? Would you trade the Dow instead of the Russell? Like in your hierarchy, you got E-minis NASDAQ number 1.
I don't even trade the Dow.
I never trade the Dow. Yeah. I actually do have some long delta in the Dow because it was a fast market trade. But of the 4, Russell is right in the middle.
But I do have this one-liner in the back of my head that's just sitting there with cobwebs. But I did read once, and I don't know if this still holds true, but when the market really crashes, the small caps can outperform the S&P 500 and NASDAQ. But I don't know if that's still true to this day.
So there's a volatility component. So there are a lot smaller companies, a lot more volatile. And so you typically tend to have outperformance in either direction in terms of big moves. So like the Russell has been the strongest into this move that we've had recently. It's up almost, just to go on the Russell futures here. I mean, we've gone 2,400 to 2,800. I just got long a micro gold there. I'll push that through in a second. So it's up about 20%.
Yeah.
In the span of the NASDAQ and the E-minis up 10 to 12%.
Yeah.
So that's a volatility component, right? Yeah. It's same thing with, I was talking about MicroStrategy and Bitcoin. Like MicroStrategy has that kind of, it's a more volatile proxy for Bitcoin, whereas Russell is more volatile proxy to the market as a whole.
Fair. And yeah, you can see it, even just the Russell ripping to new highs for the year, substantial new highs, while the rest of the market is either at highs or not there yet.
Yes. I've taken too much time. Let's get to this market measure. Sponsored by the SIBO.
SIBO.
So this morning's OJ, we discussed the basics of the small cap index, the Russell 2000. So we also talked about like how small caps may have underperformed other indices recently besides the last 2 weeks. They caught up pretty significantly there. But over the last 25 years, IWM has outperformed the SPY 14 times and the Qs 44 times. So you have this added volatility to it in years, right? So net move, the Qs has been amazing. But on a year-to-year basis, if you're trading, there is some volatility to be had here. So the median annual returns is 12.5%, with SPY at 11.2%. We're going to explore some trading opportunities here. And so we often point out that small companies and their indices show higher volatility than the S&P 500. This is very accurate. So when you look at this chart, what you're looking at is just a month-to-month breakdown of price action here. And in small caps, you're going to have a much wider range of outcomes in both directions, higher and lower. And so there is an added volatility here. You can see the Qs is kind of in the middle of these two, right? You have SPY as the least volatile, IWM typically the most volatile, and then the Qs kind of skews a little bit closer towards IWM, but certainly not to that level.
Love it.
So when we look at long-term historical volatility, it's been higher than that of the Qs and SPY. In fact, 68% of the days, Russell's volatility is greater than the Qs. 96% of the time, it's greater than the SPY. So this tells you, we were kind of talking about this as if you think the market as a whole is going to go down 5%, or if you think the market as a whole is going to have a face ripper 5% rally, you typically see the higher volatility asset move more in that direction. Like ES might go up 5%, NASDAQ might go up 7%, and the Russell might go up 10%. Like that's kind of that's volatility for you. And so here, when you're looking at the volatility of these products over the last 10 years, you do tend to see, 25, 30% more implied volatility in something like the Russell versus the SPY.
Surprising. I would have thought the Qs would be the most volatile.
Yeah.
But they're pretty close.
They're pretty close. Like SPY and the Russell Qs and the Russell are pretty close there. You're talking about 18 to 20. I mean, they're all relatively low volatility. If you consider looking at like Microsoft at 40% implied volatility. Yeah. But from an index level, you get up there. And when you're getting the big moves, it gets even wider. We've traded the Russell at 40% implied volatility into this craziness. So it is there. So similar to the S&P, Russell IV is higher than its historical volatility 81% of the time, overstating historical volatility by about 4 points, which is on par with the SPY. So it has higher volatility, but from a vol perspective, like when vol gets high, it's still the same sort of overstatement. Like there isn't more spread between implied and historical volatility in the Russell versus the SPY. It's pretty in line. It's just that the raw absolute volatility, the amount of implied volatility in the Russell is going to be higher than in SPY.
Yeah. And it's interesting when you look at, like, I might not trade the Russell every day, but it does bring up the notion of trading it after a big move.
Yeah.
Especially if you're layering into bullish positions.
Yes, because you get that extra volatility there.
Yeah.
And if you get a point where, Russell volatility is from an IV rank perspective is a lot higher than SPY. Right now you've got IWM at about 45% and SPY at about 48%. So you're right in line here. But if there was a deviation there, maybe going into some of the mega cap earnings, there's a little bit of a bid in volatility in SPY. I might lean towards doing a SPY trade versus an IWM. Just outlining it here. So digging a bit deeper, we're going to examine the components and the stocks within the Russell. So most of the time their IV exceeds their historical volatility. So a lot of these stocks, the top two in the Russell are Fix, which is Comfort Systems, and Carvana. So these are very, very high volatility stocks. Despite that, they tend to overstate implied volatility, which just happens across all markets pretty much. Among the 500 stocks in the SPX, 100 stocks in the NASDAQ, and 2,000 stocks in the RUT, a larger percentage of the small cap stocks show more overstated implied volatility compared to the historical volatility of that in the SPX and the NDX. What this is telling you is that it's going to be higher volatility when you're trading the small caps versus NASDAQ or the S&P 500.
Yeah, and I think when you look at the last sentence there, a larger percentage of small cap stocks show more overstated IV compared to HVs than in SPX and NDX. You have more opportunity then also to sell premium in the Russell, especially when implied volatility is heightened. But it comes with the realized volatility too.
The biggest problem with the Russell is that the components are not as tradable as
the components are Carvana.
Yeah, like when you look at Carvana options, those options are $3, $4, $5 wide. You really can't trade them. And so the only way to get exposure to those small cap stocks in a way that is liquid is via IWM. And so that's why it's kind of important to know about IWM and trade it too as a piece of your portfolio. So, of course, we're going to add a little study in here. So we evaluated the performance of selling options in the Russell over the long term. We analyzed the results of selling 45-day 30 delta IWM puts and managing them at 21 days and comparing that same strategy to the SPY. We'll give you those values here. Selling options in the IWM yields a comparable success rate to its counterparts. It shouldn't be a shock. I mean, do you think of like puts in SPY to Qs to IWM as really that much different? Or have you just sold puts?
Not really.
Pick your flavor kind of thing.
More about like the product price, I would say, depending on your portfolio size.
Yeah. Volatility, how much buying power you're using. Agreed. So it also provides the same returns on capital as the QQQ and is slightly better than the SPY. This is an example of volatility. When you have higher volatility, if you have two assets that are both priced at 100, one has 50% implied volatility, one has 20%, you're going to be getting paid more to take risk on the 50 IV versus 20 IV. In that same light, you're typically going to use less buying power on that higher volatility underlying because you're going to be further out on the curve. And so higher vol not only gives you more premium, but it gives you a better return on capital because you're using a lot more capital to put that trade on.
Yeah. And I think when you have the ability to do all three of these, and this comes with, a function of account size, but also just strategy selection. Like you can size down if you need to with wider defined risk wings and whatnot. But you can see here that your median return on capital is significantly higher than NASDAQ and the Russell. But I also would say that's due to the fact that the S&P 500 is more sector diverse, where like the NASDAQ is more narrow in terms of focus.
Yeah.
And then Russell is similar. So you have the ability to make more because it's more volatile, and that's always going to be the recipe for short premium at the very least.
Couple takeaways for you, and then we'll get to the boys here. Small cap index and its stocks are more volatile than the S&P 500 and the NASDAQ. However, its IV and its components IV are even higher, offering a strategic advantage. So if you are looking for a higher volatility index to trade, IWM is certainly that product for you. By examining the performance of selling options in IWM, it's comparable to the Qs and slightly better from an implied volatility standpoint than the SPY. Because you get that added, potential return on capital, you have higher volatility, you have higher premium, etc.
Love it.
Good stuff, sir. We're going to take a quick little 90-second break and come back. We got, I believe Glenn is coming in, but we got Q and Glenn, I think, coming in for live from the trade desk. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Mikey, my friend, we are back and the E-minis are up 11. We're at 71.60-ish here, but who the hell cares about that when we got this guy? Q!
Fellas, how's it going? That was beautiful.
Thank you.
That was beautiful.
He gets better every time.
Yeah, he really
Somehow.
does. He's improving. No, I'm proud of him.
You know, the problem is I hear, I think about, like, when I wake up on Saturday and it's, like, early, I'm like, oh, shit, I got to get to the office. Like, I think about this at all times. I think about the DDT, think about the market measures, I think about, everything.
Because you're in it.
The bell.
That's respect.
The bell. I actually had the other day, because I was on my home computer and I left it up and I left my platform up and my girlfriend was sleeping and the bell goes off at 8:30 because I had the platform up. She's like, do you have like an alarm somewhere in your place? I'm like, no, I don't think so. And she was like, it went off right at 8:30. And I was like,
I know what
that's my wake up bell. That's my alarm there.
I love that.
Yeah, well, all right. I come to spread extremely good news regarding PDT.
God, you're like Santa Claus.
Yeah,
he is.
And so
holiday cheer.
We got the FINRA regulatory notice yesterday. So June 4th is the day. June 4th is our Liberation Day. And that is when there will be no more PDT rule. So if you're restricted due to the PDT rule and being under 25K or restricted for day trade calls and things like that, your account will be unrestricted on June 4th and you're ready to trade. So we plan to be ready on day one. Other brokers can still implement those things later on. You have, I think, 18 months, something like that. So we plan to be ready on day one, though.
Yeah.
So if you're restricted due to PDT here, you should no longer be restricted come June 4th.
And if you've already if you use your one freebie, it doesn't even matter. It won't matter after that.
There's no more day trade violations. PDT, you could trade 20 times in one day, and the next day you will not be flagged for anything because the pattern day trader flag is just not a thing anymore. So it's not like there's a new minimum. There's the $2,000 for intraday margin and things like that, but that doesn't concern the amount of times you day trade. And then also if you're in a cash account and you have to deal with good faith violations, Jason and I refer to those as the PDT refugees.
Okay, yes.
If you transferred from a margin account to a cash account, but in cash accounts you can't do spreads, so it limits you on strategies and stuff like that. But if you're looking to get back into a margin account because you're worried about the good faith violations and stuff like that, you can then do an internal transfer and then also be good to go after the PDT rule is removed.
It's awesome. This applies to everything too. IRA accounts.
Yes.
It's everything. They've taken our shackles away.
They have taken our shackles away. They have freed us, indeed.
It's good.
Yeah, we have an article on tastytrade.com. So if you go to the help center and you just type in PDT.
You post that in the chat for us?
Yes. If I'm not logged in on this one here.
Wait, for this, because I love to say things like this since we've got a YouTube stream and chat. Can we get a W in the chat?
Oh, W in the chat.
Let's get some W's going.
W for Q in the chat.
Or let's throw some W's in there for the PDT flag being removed on June 4th.
Very nice.
It's great news. It's got to be the most welcome news of your career.
Oh,
This
for
has to be
sure. Like this is not even close. Like I honestly can't even think of anything that compares to this.
like Alien Landing. Like
Yes.
this is about just under that.
Like, it doesn't
in
even
terms of,
feel
like,
real. You know, like that's how crazy it is.
World changing.
But I'll tell you what, if an alien landed in Chicago, it would feel real.
yeah.
The W's and the hearts are.
Oh, here they
I
are.
love it.
Oh, yeah.
Shout out to all the customers.
Look at that.
The youngins have taken over.
I love
it. I love it.
Hey, wait, do we stream on Twitch? We gotta be streaming on Twitch.
No, not yet.
You know, we gotta get.
Put me to work here. You want me to get a whole thing?
Well, we gotta be streaming on
This one, that
Twitch. You know, get like the iShow Speeds of the world, Logan Pauls of the world.
Yeah.
You know, or I don't even know if Logan Paul does that. I don't really know, but I know they're big with the youngins, right?
Yeah.
And so we need to get on that. We need to get the next
youngins,
generation.
The old-ins, the middle-ins. I'm, you know.
Well, they're diversified across age group for sure.
After June 4th, the youngins won't get locked out anymore.
That's true.
Yeah.
That's true.
because not everyone's got that 25K. You
can actually manage your
for PDT.
positions.
Yeah.
It's going to be great.
It's magical.
Yeah, which is super, super nice. So I'm so happy to.
And you hedge yourself by saying, we should be ready to go. We're going to be ready to go.
Yeah, that's the plan.
Or I'm going over there, I'm shaking trees.
Please do. I will shake the trees with you if we are not ready.
No,
For sure.
I see no reason why we would not be. We've talked to
prepared.
people already, and they're like,
I know.
we'll be good.
Yeah.
I'm just saying, just expect it.
Yeah, we've got all the like production stuff all set up. We're ready to remove the PDT reset away from my accounts.
Yes.
That's going to be great, you know, because there's no more need to reset your PDT status. Can't wait to do that.
I think that's one important call out. If you are in a PDT call or you're locked out, it'll just go away. There's no action you need to take.
Yes, no action required. We plan to give ample communication to the customers as well, you know, letting them know that they're able to trade however they would like with less restrictions.
Magical.
Let's get to your list.
It is indeed magical. Top 20 symbols going through the system and their IVR. At number 1, UNH with a 3. NVIDIA 34, Amazon 54, Tesla 14, Microsoft 95, GLD 39, Palantir 40, AMD 63, HIMS 79, Apple 60, Micron 69, SLV 38, COHR 93, CLS 73, MOD 70, Netflix 37, SNDK 83, Intel 92, Bloom Energy 74, and Meta 71. Some different symbols up there. Nice to see.
You got some of the momentum ones. You got some of those stocks here. SanDisk, CLS. I've never even heard of that stock.
Yeah, and MOD.
MOD.
Either.
What is that?
UNH was shocking to me that was number 1.
Yeah.
They had earnings this morning.
Yeah.
10%.
Not a stock you typically see at the top of that list.
No.
That is an interesting list. Well, all right. Well, good job out of you, sir. I'm going to let you go. Bring on my next victim.
PDT.
Oh, witty. Damn, this guy. Look at this guy.
Wow.
What's up, Glenny? How you doing, brother?
Doing pretty well.
Yeah?
You know, just doing the Lord's work here.
I know. Well, I don't know if you're doing the Lord's work on me because I was.
Would you like me to be doing the Lord's work on you?
Whatever you're doing, this shekel, all-time highs. I don't blame you for that, but
it was lower. If that's any consolation, it was below 3 last week. So
I don't know.
Things are moving.
Slightly less.
I've got that dollar shekel, but I'm up $18. Should I close it?
What, did you short it?
No,
I got
a better entry.
You got long. Oh, you got long. Yeah, you see, that's the thing. Like, you know, I'm not on the show with you guys anymore.
Yeah.
But that used to be, you know, you make me your exit liquidity. That's what you do to me.
Or am I making?
Oh, I've been exit liquidity.
Yeah.
I've been shackled to this dollar franc position for I don't even know anymore. 6 months.
Long time. Well, we've got some fresh volatility coming in. Past 5-10 minutes, we've got nominee Warsh getting grilled right now.
Oh, no.
Issuing his rebuttal. He was grilled right before I got on here. Everyone, I haven't listened to some of those Senate.
How do you feel about the potential for Daddy Powell to be ousted?
I'm heartbroken.
I know.
But excited to see what he does next,
Yeah.
Maybe he'll open his own personal money printer.
Yeah.
Start getting paper. Because he is the richest Fed chair ever, but would be dwarfed by Big Kev Warsh.
Warsh's ex hedge fund guy.
Ex-hedge fund and married in Estee Lauder.
Oh, yeah, I knew that.
So he personally sitting around 220 mil. That's pretty good.
Not too bad.
Solid.
Good day.
But Elizabeth Warren telling the committee that he is uniquely ill-qualified for the job. I thought that was a sick burn today. But
uniquely.
He's talking right now, I for dollar markets, it's sending euro dollar was up about 10 pips. Now it's down about 15. Not sure if that's this headline or we've got some Pakistan information coming out. The real punchline, anything I'd be looking for from this confirmation process that Senator Tom Tillis is alleged to be holding up until they clear Powell's good name. Regardless what markets are looking for from a dollar perspective is will Fed independence remain intact with a Trump nominee, as we know how vocal he's been on the bad job his former nominee Powell has been doing. So any sort of...
You got bonds moving, 114.03. They're down about 18 ticks, about 0.5%. Big move in bonds.
Nice to see, because we've been pretty quiet this week compared to weeks past in terms of dollar markets and by extension bond markets. I feel like the headline across dollar pairs is a lot of dollar denominated risk and by extension fluctuations in interest rate expectations. But a small part of that is Fed independence and faith in that system, as we saw way back when the initial prosecutions took place. We saw a flight out of dollar assets to a degree that surprised me. But want to keep this nice and narrow and focused for you guys on a Tuesday morning. We're looking at two markets today. First, U.S. dollar, Canadian dollar.
Yes, okay.
Very liquid and tradable North American pair. That's usually pretty quiet, but we are on. You want to zoom in for me there?
I'm long at higher prices.
Yeah, but that
that's neither here nor there.
Yeah, that's
because I don't blame you, because we are down 2% from the start of April in that market, and rarely a green candle, a very consistent grind lower there. Yesterday we had Canadian inflation data come in a little hotter than expected, and a Bank of Canada survey come out where expectations around inflation are elevated. That, with its trending market, is interesting to me this week. While we've been lower recently as mid-March, and a few stints in February and April, if you zoom out, we're now sitting right at those pre-conflict levels, and the dips below it have been relatively unsustained, dating all the way back to really 2024 is the only time we spent, a month or two below these levels. So if you do favor mean reversion, perhaps now is a better entry.
I added.
We also have coming across my desk the JP Morgan quantitative report. They, compared to the market, are pricing in no rate hikes from the Bank of Canada, while the market is pricing in somewhere to the tune of 2 rate hikes this year.
And that would be strong. That would be a move.
That would be bullish
for the
Canadian dollar. If they were to hike?
No, if they hike, it'd be bullish for the Canadian dollar. But for the U.S. dollar, if the JP Morgan is right.
Exactly right.
Mr. Diamond, our omnipotent leader.
Yep, he signs off all those reports personally.
That would be bullish for the dollar, which would help.
Exactly. So that one's interesting. Also for trading midweek, we've got the pound U.S. dollar. Another very liquid pair, but a higher margin requirement there for reasons I don't know. You'll have to ask the NFA. But this one pretty interesting because it's been supported above its pre-conflict level. Of course, that's just another line on the chart, but it is interesting that with the subdued volatility as it relates to all of March, we've held in above 135 there. And when you're thinking of what the interest rate landscape looks like there, Bank of England also pricing in some hikes. We had a Reuters poll of economists say, the middle of this stance majority is expecting no hikes or cuts through the year, but a very large minority pricing in a couple hikes. What could dispel some of those economists' views could be coming this week. We've got UK inflation data coming tomorrow and retail sales, I believe, after that. But we're looking for a contained inflation report there. Could take a lot of wind out of the sails of a potential Bank of England cut. And there's also some thinking of, from a central bank's perspective, is it a lot easier to do nothing than to take action, especially in the form of a hike, which for the average constituent, perhaps a less popular thing to do. So if you're betting on inaction, then perhaps the US dollar there, you're getting a better entry point there. But at the same time, it's event risk for a reason, could have ripping UK inflation. And they, so far from this conflict, have appeared to be more isolated than their Euro area counterpart. So a surprise to the upside there perhaps isn't as priced in either. So those are the two markets I'm looking at today, but we're getting some good back and forth in this euro dollar, pretty tight ranges. So it takes a little bit of conviction to get directional if you're scalping, but
speaking of tight ranges, we have E-minis unchanged on the session. They're up one tick. We're at 71.50 here. A little bit of a bid in oil at 88.48 here. So a little bit of movement in oil. Volatility futures at 20.78, up 19 ticks, about a little under 1% here. The VIX itself at 19.27. Bonds, as we were talking about, 114 on the dot here. Gold and silver both kind of taking it on the chin. So a little bit of action here as we've had very little to start the session. Maybe some of that coming from Mr. Warsh's take on the stand.
But we didn't get a Donald Pump pre-market.
No Donald Pump.
That's what everyone was calling for on his Squawk Box appearance.
Mr. Glenn, I have to thank you for coming on again, but I do have to cut it short. You are a professional, gentleman, and a scholar. Mikey, thank you for filling in as well. We're going to take a quick little 90-second break, though, and come back. We have the ladies. And they're live, and it's always electric when the ladies are live from the SIBO. So we're going to give them extra time. We're going to take a quick little 90-second break. You're listening to Tasty Live. Liz and Jenny next.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got.
And welcome to the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde is Liz Zierking, and it is a crazy Tuesday. Markets turned around. SPOs are down 20.
SPOs are down 20, and we are live from the world-famous Sabres SPX crowd. They're pretty quiet today. The last couple weeks we've been here, there have been a lot of activity. I would say they're pretty quiet so far, don't you think?
Today has been a quiet day.
Yeah.
But the exciting news and the hype around the SIBO is this new studio, this new set we're sitting on.
We are a lot closer than we used to be. High fives are going to be so tight.
We are, and it's amazing. SIBO built this amazing new set, and we love it. And everyone down here loves it. When they saw us walk in before we got to this floor, people were asking us, "Have you seen the new set?"
It looks awesome. I want to give a huge shout out to the SIBO crew. It's very futuristic, although you can't see it. You know what I might do tomorrow, because I know they're still tweaking it. Tomorrow, I'm going to give a 360 of it. I'm going to make a really good 360, like, one of those where you go to the fun places and they do that. Yeah,
we'll post it.
We'll do
It looks great. They worked hard. They worked countless hours over the weekend getting this set up and ready to go. And we were the first two to film on it.
Well, and the natives, as I like to call them, the traders back there said it just came up like this overnight.
Yeah.
And it's a big set. You can't really tell the scope of it because it's like the behind the scenes versus the in front of the scenes.
Again, we'll get a video. We'll share it with everyone later because it is pretty cool. I'm going to pop in the platform because I just can't believe SPOOs are down 20 now.
I know. Well, we opened up this morning up 20, up 30.
Hey, we have a groundbreaking SPX trade to put on, and I couldn't think of a better time to put it on than when SPOOs are down 22.
And when you're in the middle of the SPX crowd.
What do you think?
I love it. Let's do it. So we're going to pop in. This is our trade of the day for YouTube. What time is it? I'm going to keep an eye on the time. 10:03.
10:03. We're 3 minutes into the show, and here is our trade of the day. In SPX, we're using the 0 day because we love the 0 day.
Number one, we are in the SPX pit, so they are trading 0 days directly behind us. The noise you hear, 50% of it will be 0 days, 50% of it will be the normal monthly standard contracts.
Everything else, yes. So, Liz, coming up with another way to use these 0 DTE options. Last week it was the 7-day Jade Lizard,
which has been doing pretty well, by the way. Yeah. I've still got it on. It's doing pretty well.
Yeah. Today it is a 0-day downside broken wing butterfly for a credit.
For a credit. We're going to talk about the evolution of this. I've been doing at night. I've been putting them on for the next day, and they've been doing very, very well. I'm not closing them at meaning at 2:30.
Okay,
you're putting You're putting on the 1 day. But the evolution of this was I don't want the overnight risk, and so we're going to do it in the 0 day.
I just wanted to clarify because some people trade ES options at night.
No, this
is SPX. And this is at 2:45 at the end of the trading day.
I mean, it could be 2 o'clock. This isn't Jacob vetted. It's not like at 2:47. It's whenever you feel like it at the end of the trading day, at night of the trading day.
When you're doing the next day, but
next day.
Today we're doing the 0 day for the end of today.
Correct.
So we're going to look at the 0 day, pull up a broken wing butterfly, and talk about what we're hoping happens or what we'd like to happen with this broken wing butterfly.
Yes. Now let's go through what a butterfly is first, and then we're going to talk about breaking the wing. The zeros are fun because the 0 DTs are fun because they're less expensive. It's very expensive to do these. I mean, you're just breaking one wing, so it's okay, but it gives you a little bit of affordability. The butterfly itself isn't that expensive.
No, I'm going to go to the downside and go to the expected move and put my short and just pull up a regular butterfly where we buy 1, sell 2, buy 1. Here's a butterfly with our short at the expected move for the day. It's 30 cents. It's bouncing around 15, 30, 35. It's bouncing around, but you'll see it bounce around by 20, 25 cents.
Yeah, typically if I'm looking at the butterfly when I've been doing these, you're paying about $25 for it. Now that's $25 for a shot that SPX is going to pin down there at the end of the day. And that's what you're paying for.
And I wouldn't pay $25 a day. I would not pay. I like to collect money every day. I wouldn't pay $25 a day.
Correct.
So how can we get a similar position on and get paid to have this position on?
Well, you break a wing. So you take a little bit of risk. So from this, she's got the 70-60, 70-65, 70-70. That's the true butterfly. You take the bottom strike and move it by 1. Break the wing by 1.
Something big's happening.
SPOOs down 25.
SPOOs down 25. Lots of action happening behind us. It must have been a big order. I was going to cut to.
Yeah, you can cut to it.
But some big order must have just come in. Everyone was going wild, and now they're divvying up the trade.
They're divvying up the trade, but this has been a tale of two cities. The last couple days, Jenny, the last week when we were here, it was a low rumble the entire time. That was one order.
Today
it just came in.
Has been quiet until that one big order. And shortly, I'll see it pop up on the screen and see what exactly was traded.
We can take a look at that.
Updated.
Yeah.
I'll keep you updated. Back to the broken wing butterfly. So we're going to buy 170, sell 2, buy 170, sell 2 70-65s, and then move this 70-60 to the 70-55. This way.
And it went from a 20-cent debit to a 65-cent, 70-cent credit. That's usually what you should see.
Our short strike is slightly above the expected move. Our break evens are on the expected move. We're getting about $75 to put on this trade. Now, in order to collect the $75, we have some risk in this trade.
Right. So what do we want to happen here? Why don't we go to the curve view? So because we flipped the script from a debit to a credit, it turns it to a high pop trade. Meaning if SPX stays right here, we get to keep that $70. But if SPX goes down and pins our short strike, we can stand to make an extra $500 on this trade. That's not what we're playing for. Typically what I've been doing with this, and I've been doing it for a couple of weeks, is I'm just taking the 70 cents, the 65 cents, and calling it a day because I haven't been lucky enough to pin that butterfly.
But that's what we think will mostly happen, right? We just keep the credit. So if this flag right here is where SPX is trading. SPX is trading 70.96. The center strike of our broken wing butterfly is 70.65. If it lands in the middle of there, we stand to make more money than just the credit we're taking in. But if it doesn't, we keep that credit.
And today it's over. It's over, Johnny. Whatever happens, happens. And you can walk out, and that's why we switched it from the 1 day to the 0 day. You don't have to wake up in the morning and be like, where's SPX? Not that you would.
It doesn't matter.
It doesn't matter.
This expires on the day. It cash settles. We either have the $50 in our pocket, whatever we collect on this. We have the $50 in our account, or we made more because it landed in the middle of the butterfly. Our risk is SPX falls sharply and goes through that, and our risk is about $440.
Now, I've been leaving these, and they've been great. But if you need to manage it, you can, because what's happening is I'm not managing on a daily basis. So keep that in mind with those PDTs. So sure, you can manage occasionally if you need to, but you don't want to manage with all these because of the PDT.
So I'm going to put it on. You saw our credit shrink a little bit because SPOOs were down 20 when we were looking at it, and now they're only down 12. So we had that quick burst of like SPOOs down 20, 22.
A trade happened back there with the quick burst, and now they're calm again.
And I keep peeking up there. September 18, 75, 25 calls. That's all I see right now. The 75, 25 calls in September. The crowd sold them, so a customer bought them.
Yeah.
That's all I see popping up. All right. So another big order coming in. So I'm going to shift, because the market's moving, I'm going to shift this up a little bit because I want to make sure we at least collect $50.
Okay, I like a little bit more than that, but 50 seems to be good.
Here, what do you think here?
Not 40 cents. There you go, 55. 55 cents is an acceptable credit.
55 cents is an acceptable credit. Here we go, 60 cents. It's bouncing around.
You just got to lock it. You got to lock it and load it because you'll get hit. This is one of those where it can come to you. When you're trading the Iron Condor, sometimes it can't because that's both sides. When you've got a semi-directional, an omnidirectional, to steal from the Bat Boys, an omnidirectional trade, you can let it come to you.
So, but that was a very quick, 10-point SPOO move while we were trying to put that trade on.
Yeah.
Which is why you saw the prices on that trade fluctuate. I'm working the trade, trying to get 55 cents. You can see here's my limit order, trying to get $55. And I'll let that work for a little bit. If I don't get filled, we could adjust it, which would mean bringing the strikes up, shifting the strikes up again. I'd like to get filled on this, but our management with this is put it on and forget about it.
And honestly, I don't want to chase it either.
No.
You could chase things all over the place. This is just something, what I like about my SPX trades when I'm doing them is I'm going to put it on. If I get filled, great. If I don't, great. I've got other ones on. I've got the Jade Lizard on. I've got Iron Condors on. I've got those put spreads on. And now I've got a Broken Wing Butterfly each day on.
Right.
You should see it. I open it up. It's like...
I know. We've got lots of positions in SPX right now. This account, this is the only one we have right now, but our personal account's scrolling positions in SPX. But
Correct.
We love it. It gives us so much opportunity. And we've got 0 day, we've got 7 day, we've got 45 day.
Every day is an expiration.
All right, so that order is working. That's our trade today. The downside Broken Wing Butterfly in the 0 day SPX.
I like it. All right, perfect. Now let's jump into some management. We are going to take live tweets today. Put the hashtag LIZJNY. We also have my favorite slide that Kai makes for us. The SPX review on how much has come out of it since Friday.
Yeah, I pulled up Liz's favorite slide for the day. Just a little gift for you.
Thank you.
As far as management in our account, I'll glance at anything that's any P&L open percent that looks really high. Why does DraftKings look so high? Oh, because we have this combo.
Oh yeah, combo. And then I think we sold a call against it, didn't we?
We sold an extra put
for
a
little
extra premium. Remember last week I said I'm starting to sell weekly puts in DraftKings on top of my long stock because if DraftKings doesn't move, I want to make something.
Correct. So that weekly put is up $13. The 23.
There's nothing to really do here.
No, there
isn't. Nothing to do. Any other movers? Our Palantir. No, what do we have there? Short 60. Oh, it's a diagonal. We put this diagonal on last week, 5 days ago. We paid $840 for a diagonal in Palantir. We bought the 58-day 145 call, sold the 24-day 160 call. That trades up $105 in 5 days, which honestly, it's 20% in 5 days.
I don't mind taking that off. I have no problem taking off. So you have to look at it from two perspectives. There is a common sense slide. I like a 20%.
I guess it's not
check.
20% because we paid $840, so we'd have to get $160 to make it 20%.
But you've got $100. So you can take a look at one of two metrics, right? So it's percentage. If you're collecting very, very, very small, you almost have to look at it from a percentage. But if you have a larger collection and you know you're going to get $1 for it, I have no problem closing it.
So I think, let's take our $105 out of our Palantir, and we'll come up with a different Palantir trade another day.
Yeah, for sure.
I'll go for $945. We paid $840. If we get $945 at $105.
Woo!
Another position I might consider taking off because we put it on and it was a loser, and it's finally a winner. I'm gonna flip the symbols so we have it goes Z to A instead of A to Z. Our VXX zebra, we put on a zebra, which is just a stock replacement. And after we put that on, we had market up, vol down. Between yesterday and today, we have a little pop and vol, and this zebra is actually up $55, which isn't bad considering it was a loser every day after we put it on.
It wasn't too bad of a loser. Can we see the chart? I just want to take a look at it.
I mean, we're not seeing much movement, but we're not seeing much movement.
That's what I'm saying.
But still, $55, this trade, when you look at percentages, we paid $425 for it. It's up $55. It's not bad. It's up 12% in 5 days.
And also, I like to take volatility trades off pretty quickly.
We were looking to add some bearish delta, and what we added since then, after we added this VXX, which is a bearish trade, we added a Delta Buster and a SPY, which is a bearish trade, and I think we added a reverse J Lizard and SMH, which is another bearish trade. So we have 3 bearish trades on right now.
Let's take a look at how they're doing. So Smash is up today. I just took a look at that, and our SPY is making a little bit of money back.
So SPY can't come off, SMH can't come off. Our only bearish trade that can come off is our VXX.
Take it off. I also wanted to show you Birkenstocks because we put it on yesterday, and it's 42% overnight.
Oh, really?
Yep, BIRK.
Let's take a look. Let me flip these symbols. So BIRK, we sold the 37.5 put on 1 day ago.
Yesterday. I knew the paint fumes were getting to your head yesterday because you were crazy.
I feel like today is Monday and yesterday didn't happen.
I know. I was like, I think we have the same painter, and so he left the door open. He told me he left the door open, paint fumes were coming up.
Okay, he also left all of his garbage in my basement.
He did?
Yeah.
Ron, if you're watching the show, get over there and start cleaning it up.
You're tuning in. You got to come back and pick up your garbage. All right. So
they cleaned up everything at my house. He's like my handyman.
We sold the 37.5 put in Birkenstocks. We made 42% overnight. We're going to take that off. We're going to close that, buy back for 82 cents. And you would say, well, maybe it's just wide markets, but not really.
No, Birkenstocks is wide markets.
We're 82 cents. I think that's a fair fill.
See if you can get filled 82 cents.
I'm going to try 80. I just had the worst phone call pop up.
Who's 708? I want me to give the number. Can I give the number? Who are you? 708. I'm just kidding. I'm not going to give it.
It's for my. I don't even know. I don't even want to say it on air. But I have to. Monday I'm off. I may have to go for a colonoscopy.
Got it.
Just a regular 5-year maintenance.
Maintenance.
5-year maintenance. But I don't want to go. You know me. I'm afraid of needles. I'm afraid of hospitals. I'm pretty much afraid of.
It'll be fine. It's super easy. You've done them before.
Yeah, it wasn't good.
It's not.
I don't like it in the IV.
Oh, that's what you don't like? That's the part of the colonoscopy she doesn't like. Did you put it in for 80 cents?
Yeah, it's working. So
Burke has wide markets, so we're going to keep it in. That's not because of the wide markets. When you get in something that isn't 100% liquid, you can't chase it.
Now I'm like just getting the phone call, knowing that it's Monday.
You're sweating because it's hot. You're sweating because it's hot in this booth. I'm not going for a colonoscopy on Monday, and I'm sweating. I'm wearing a tank top tomorrow.
Oh my gosh. Well, the good news is, I was going to say, with booze down 13 or 14, I thought we'd get filled on this SPX Sparkling Butterfly, but we're not yet.
Let it go.
Okay, here's the surprise I have for you. Here's your favorite slide.
My favorite slide! Yay! Thank you, Kai. Kai, our one of our resident geniuses, who's part of the Tasty Live crew, puts this together. It's part of a bigger thing. The boys do it all, but this is my favorite slide. Why is it my favorite slide? Because we are doing it on a Tuesday, and he shows you what the expected move is on a Friday, and we can see how much it changed.
Well, and you can see how vols changed. So week of 413, the expected move was plus or minus $107 in an SPX.
Yeah.
Then last week, or week of 420, that's this week, only 99.
Yes, so he's showing you. So what he's showing you, this is why I love it, because the markets move, right? Markets move all week long. So he's showing us on Friday that this week it was supposed to be 99. Let's see how much we have left.
Yeah.
Because vol popped a little bit today.
Do you think we're getting tan under these lights?
I think I'm roasting. Don't you?
We're gonna be coming. Liz is going to be in a sundress tomorrow.
She's not kidding.
All right. So, no, I'm not kidding. She's going to be in a sundress tomorrow.
Those are facts. I run hot to begin with. Somebody's always like, whenever we're at the studio, I'm always in a sleeveless shirt. And then I was like, why are you in a sleeveless shirt? I was like, I've been running hot since I was 20.
All right. Going to the 3-day, this is the end of the week. We've got plus or minus 93, so it's still pretty close to the same. Again, we're getting a little boost in vol. We've gotten a little bit of boost in vol. We saw that with our VXX.
It's not okay, so it's 97. But yes, we're 3 days into it. And it's only 9. Yeah, 2 days into it. Well, they do it on Friday.
But they look at Mondays for the week.
Yeah, but so they do it. But he looks at it on Friday. So then the weekend comes out.
And I told you how much vol came out between Sunday night and Monday morning.
Yeah.
When I was buying those ES calls Sunday night at 10:30, between 10:30 and the next day, vol came out of it.
You could have told us this.
So
move over, Kai.
92 plus or minus 92 between the end of the week means we've had a little bit of a boost in vol. And let's take a look at where the VIX is, just to confirm. Yeah, it was up. Yesterday it was up quite a bit, and now it's up again. Yesterday, look at the move. Look at this. I know it doesn't look like much.
Can you make it look like? There you go.
This is the move I'm talking about.
Yeah.
From the low of
what is that?
1687, and now we're 1950. Did we hit 20 today?
No, we hit 20 today. We were over.
No, 1974.
No, go in the middle. Are you sure you got it?
Yeah, I'm in there. 1974.
I thought we hit over 20. You know what was over 20? VIX futures, because I looked at those before VIX opened. But those are always a little warmer. Those are always a little higher.
I can't stop laughing because I know how hot you've got to be.
I know. If this wasn't, I'm telling you, if I didn't have this microphone on, this jacket would already be off.
You can move it.
No, it's okay.
All right, so what do we have? I want to see what orders we heard those big orders go through. Right now, what do I see popping up? I think I missed the big one.
Yeah.
The big order.
Well, no, because
the board fills up so fast.
So the board only has, and I'm looking at it, I'm eyeballing it here, keep in mind, bad eye. You can only see 10 lines at a time, right? You can see 10 lines at a time on the board. And then if you missed it, it's gone. So it is somewhere, but it's just not for us to see.
Yeah, it could be on if there was a big order, it would be on the unusual activity.
Yeah.
The most recent trade I see, May 15, 6,000 calls. The crowd bought, and then interesting. Huh. Someone's selling May 6,000 calls. Let's take a look at that. Let's take a look at the unusual activity.
Meaning it's most active, not unusual activity.
Let's take a look at the most active. And hey, we are going to get to Twitter too. Let me refresh.
Okay,
Twitter.
hold on. Let me just show it. Do you want me to go back to it so we can see Twitter?
Oh, sure.
Let's go to most active first, and then we'll go to Twitter. And please put the hashtag LIZJNY. If not, if you're on YouTube, Frank the Great will typically put it on there for you.
I don't know if Frank's here.
Oh.
Maybe he is. I don't know. Didn't we think he wasn't here yesterday?
Yeah, I don't think it was yesterday. Let me see if he is today.
So Frank the Great should be on the chat, manning the chat. And if you put something on the chat, he could share it with us on
Pretty sure it's a Wild West in the chat today.
You can share it with us on X. If you're on Twitter or X, send a tweet, include hashtag LIZJNY. That's what we're looking at. Any trade ideas, whatever. And we'll take a look at anything. Okay, so I'm gonna refresh this most active and see what we have going on. 55,000 of it. Well, this is all today. I mean, you see, daily.
These are the zero DTEs. So take a look at this. We did a zero DTE trade today. Jenny and I both have a lot of zero DTE trades in our own accounts, right? We do.
Yeah.
And the number one most active line on the SPX at the SIBO today is a zero DTE, and it goes zeros almost all the way down until you get to that May 19th.
000 a day.
Yeah.
Sure.
So let's take a look at that. The 55,000 one. 7150. 7150.
But this could be some sort of spread.
Could be, but let's take a look at it.
Now there's really a lot of action picking up.
Well, and that's what I'm saying. So I jumped in the chat, and they're like, mystery move? What is happening? Brett Green, I don't know either. Somebody please chat us with the hashtag LIZJNY.
With the, you mean that when we dropped in, we were down so fast? And
why the move?
I don't know. What I'd like to look at.
And Ashvin, you're in charge. I just put you in charge of the chat.
Ashvin. What I like to look at are these equity options here and see what people are trading, what other equities people are trading. And what do we have? SPY, Qs, Amazon, EFA, Novo Nordisk.
SMH.
Because it gives me ideas. People are always looking for trade ideas. They always want trades. And sometimes looking at the most active, it could give you ideas.
Well, and yesterday we looked at this, and there was 145,000 out of the money Apple calls that traded. So Jenny decided to put her money where her mouth is and bought them.
But did you see the news came out immediately, like
after the market closed?
At 3 o'clock, the bell rings. But okay, so here's the thing. This was kind of interesting, and I was going to call you, but I know you were busy. So in Apple, we saw 200,000 just out of the money calls trade during the day.
Yeah, for like 13 cents.
And they were just out of the money. Bell rings at 3 o'clock. Those calls are worthless. The Apple news, the new CEO news came out right after. But you have until a certain time to exercise those calls if you want to. So I bought 10 of them. I was long 10 calls. If Apple would have
gone
up on the news, I could have gone in and exercised those calls and come in long 1,000 shares of Apple today. If
they were in the money.
Or I could have exercised those calls if Apple went up and just in extended hours sold the stock, exercised the calls. You could have used those after.
So somebody, that's what, and I think we were kind of talking about this a little bit. Once you can learn the power of options, they made a play saying something was going to happen, and there is recourse after the fact. To your point, like if you would have bought those, you do have till 3:15.
So immediately I just looked at, is Apple running up? Like, is Apple running up on the news? I didn't think it would be. And
it ran down.
Yeah, I know. So it was kind of weird that 200,000 of those calls traded, thinking we would go up on the.
I wanted to go to us.
Yeah, we were.
Oh.
The yours is way delayed.
Oh, thank you.
So if you want to, that's what I was going to do. I was going to sell the stock if the stock were up, exercise my calls, because you could do it, right? So I could sell 1,000 shares of stock. I'm short 1,000 Apple shares.
Only if the calls are in the money. You can't do anything if they're out of the money.
No, but if the stock ran up, even before I hit exercise my calls, if the stock ran up, I would have gone extended hours, sell 1,000 shares, then click the little button, exercise my calls. They would have eventually washed each other. The calls, I'd get 1,000 shares for exercising those calls, even though they were out of the money, and I'd have sold my 1,000 shares of stock and come in today with no position.
Right.
And that all could have happened in extended hours.
Right.
But do you know the time that you have to exercise a long option?
I think it's only 15 minutes, but I'm going to take that to the tape.
That's why I was going to call you yesterday, but I think you were busy.
So in years past, I will tell you, like I said, when I was on the trading floor, I know it was 15 minutes.
Yeah.
Because I was in charge of the box.
Right. The box closes at 3:50.
Sorry.
So I do think that there's a time, and I couldn't remember exactly what time, that we could do that. But
if one of the floor officials run by, I'll ask them. But they're not running by.
No, that's Matthew. That's not a floor official. So I do know you have at least till 3:15. At least till 3:15.
I think it's.
And that's
no, I don't think it's past 3:15.
So yeah, Liz is looking it up. But that's something that we hear Scott Somer talk about. If you've got options in the Qs or SPY, and maybe it's just certain options. Maybe is it just the index?
If this is true, no, it's Google. So this is not like official SIBO business. They're saying 1.5 hours.
It could be to exercise, not to trade them. So like SPY and Qs, those can trade till 3:15.
But if you hold on though, if you're in the money, you are automatically exercised and assigned.
Yeah, but they were worthless. They were out of the money. But when the news came out, the stock could have run up in extended hours, and then you could have exercised those.
They were worthless.
They were worthless at 3 o'clock. But if they weren't, if you've got it's tricky because with earnings season coming, you'd
have to use the Qs.
You'll see the Qs.
You'd have to use the Qs.
You'll see those Qs 0 day still have value at the bell.
Yes.
Because you can.
You'd have to use the Qs, not Apple, because if it was worthless, it's worthless. You can't exercise a worthless option. It doesn't matter where the stock goes. 3 o'clock.
It doesn't matter. It's only.
It's not still trading.
It's only the Qs.
Yes, because Qs are still trading.
Yeah, I don't know. That's why I was calling you.
And we just settled that live on air. We'll see.
I don't know. But definitely you'll see it in the Qs or SPY. They'll have value at the end of the day, especially when big earnings are coming.
Correct. They will. Because you can trade them later.
Do you think I couldn't have exercised
an a worthless out of the money call? No.
If the stock was that high after hours?
No, because it expired. So it expired.
But in Qs you could have.
In Qs you can. I'm almost positive. I could be totally wrong, and I wish Scott Somer. Scott Somer, I need you. Can you please? Is he the one that? Oh no, Florida 7. Florida 7 and Scott Somer. Please weigh in on this.
I can't remember what the deadline is for exercising.
Well, when it's over, it's over. You can't just be like, but it has value now. You are expired.
Yeah. So only in Qs or
I don't know. Like I said, Qs or SPY.
Which Scott Sommer always gives that warning, like, hey, if you've got options 0 day and Qs or SPY and we've got earnings, keep
an eye on them.
it. Don't assume that it's out of the money. So with SPY's down 20, we are filled on our 0 day.
Oh, good. What's our short strike?
70, 75. And
70,
we're trading
75.
70, 90.
70, 90. I should have asked Tony as he walked by.
Oh, ask him.
Exercise. Your question. We'll get to the bottom of it.
But do these floor officials here know the individual options?
I don't know. He's been with the SIBO for a long time.
Maybe.
We'll see.
Maybe. We'll figure it out. But I think you're right. That it would have only if I had Qs.
If you had Qs, you could have done it. Yeah.
Now, have you ever seen that button? Like, let's just say, I'm gonna just say I have a 0 day. Let's say you have an option that you own. Have you ever seen the button to exercise? Like, where do we have along?
Let me look. I'll look in our account.
Let me find along. So in DraftKings, we have this long call here. Have you ever seen an exercise button?
It's there. I don't know where it is though.
But I don't see it. Or is it only on the 0 day, the day it's expiring?
Look at our SPX. You should be able to exercise or assign that if you wanted to.
No, because that's SPX is
cash settled.
So I think there is something.
No, it's not only on expiration day because you can either if you have a spread, like we just did that. We got assigned in something and we had a spread and we closed them together and it wasn't a 0 day.
I think there's a way to do it. And again, we're not platform experts, but I think there's a way to somehow exercise this.
There's got to be. Or maybe you call.
Or what?
Or maybe you call.
I don't know. But that's something I'm going to look into when we're in the office
Adam
tomorrow.
thinks you have to contact the trade desk to exercise.
Really?
Thank you.
I thought there used to be a click.
I don't know. He thinks trade desk. But once again, we'll get to the bottom of it.
Okay. So as far as new trades, all we have on today so far is our downside broken butterfly in SPX.
I do want to get into this because if you can exercise, if your call options became valuable after the fact, they didn't, by the way, because stock went down, not up. So this is all like relative. But if you became profitable in the 15 minutes afterwards, people are dropping the ball left and right. They need to keep an eye on their stock for the next 15 minutes.
Yeah, maybe it's just Qs.
I don't know. I would like to get to the bottom of it.
No, you're probably right.
Because otherwise, they will have value for another 15 more minutes.
Again, you saw, I tried to call you and I texted you. 3:02, the Apple news came out. I texted you and I think it was,
I'm in an MRI too. They really frown upon answering the phones in there.
You couldn't answer I guess it was late. 3:36, just released.
They waited until just after the Qs.
And I didn't know at what point can you still exercise.
Well, we're going to get to the bottom of it.
Yep. Okay.
Now, do you want to go into Twitter? How do you want to do this? Put the hashtag LAZJNY. Fun fact, Jenny and I are both on Last Call today. It is a Tuesday. If you can't get enough of us during the day, we will be on Last Call, and we will be looking at earnings.
So Ashvin says, dang, even I knew where Blue Wackadoo is from. I don't know.
We've met Blue Wackadoo. We love Blue Wackadoo. We're going West Coast.
Yeah, somewhere on the West Coast.
Yeah.
But I don't remember.
Somewhere where you can fish.
We meet a lot of people, and I don't remember where everyone's from.
I know where they're from, but I would remember Blue. I could pull Blue Wackadoo out of a crowd of 17,000.
Yeah. All right, so happy Tuesday, friends. Another day of short CS swings.
Call spread swings.
Okay. They have $775. I'm trying not to feel bad about what happened 5 minutes later, but I'm really hoping we tank hard. Yeah, look at this. In a day. In a day.
So and he's out. So Blue
and he's got just, you see, like one lot.
Yeah, that's fine. But Blue Wackadoo has been, I like his style. He's very Jack Tucker-esque in the fact that he'll trade and then he's done.
I wish I made $775 today in my SPX. I only made $100 today in my 0 day so far. I sold one baby put spread for $400 and bought it back for $300.
Good job. Baby high five.
Only got $100 out of my SPX today. I was kind of nervous about it.
You were?
The put spread? Well, that's why I brought it up and did the less risk.
Yeah, that one's good. I'm hoping I'm out of mine too.
Then I took $100 out of it.
Yeah, the less risk is the way to go.
So Blue Wackadoo, yeah, we're jealous. We're jealous of your 77. We're jealous of Blue Wackadoo's 775, and we're really jealous of Jack Tucker's 42,000.
Each day, which is crazy.
Yeah.
So thank you very much. If you guys want to put the hashtag LAZJNY on there, I will keep an eye on the tweet today too.
Just like this.
Or on the.
Sure. Let's find a new trade. Yesterday we put on Tesla.
How's it doing?
It's pretty much the same. Tesla is. We put it on around 391, 392, and it's still trading 390, almost 391. So it hasn't moved. I don't think it's going to move much until earnings. Earnings are the 22nd after the bell, so that's tomorrow. So we put an earnings trade on a little bit early.
We did put it on early. It is a diagonal. It's defined risk. It was up a little bit at the end of the day yesterday because when we put it on, Tesla was down $9, and it was only down $7 at the end of the day.
Yeah,
so,
you're right.
Yeah.
Right. So that's our earnings trade in Tesla. It's funny because I have a diagonal on in Tesla that I put on earlier before, and yesterday was down $10. And so my diagonal's been taking some heat. My diagonal, since I put mine on, is probably down 300. But I also have the long-term December Bob on Fire, and that's not really down at all. So you could see.
I think the farther out time does smooth out your deltas a little bit. But it's so expensive, we had to remain short-term for this one.
As far as other ideas, go into the watch list. And you see the Tasty Hourly Equities. This is what's trading the most. Tesla.
Tesla's still number one. How's IBIT today?
Did you hear them talking about IBIT? I can't remember who bought, so much Bitcoin. Or
no,
crypto.
who? Talk to me.
It was in Venetta's news this morning.
So someone bought. Some mystery person bought it.
So much crypto.
And it didn't move the needle, did it?
Well, I don't know. Crypto was going up last week, so it might have not been today. It might have been last week. But we've got Bitcoin today, 75,750.
This morning it was over 76. I did know that.
Yeah, still, it's
the Bitcoin
slowly
Cash.
creeping up. It's slowly
moving.
creeping up.
It's moving.
Netflix, Nvidia, we do not have a position. You see where this little dot is? There's a little dot, like Tesla little dot, we have a position. IBIT little dot, we have a position. Nvidia, no little dot, no position.
So they have earnings on 520. I can see that.
Okay.
You can see that number. So I don't mind with these high flyers. This is the list. This is basically the list that Quinton goes over. Quinton goes over every day. This is the most heavily traded ones that go through here. I don't mind being in Nvidia.
And when you said 520, I knew that was after expiration. So we can trade Nvidia and get a new position on, and it will be off before earnings.
What is the Ivy rank? 33 rank.
33
what do you think in setup calendar?
I'm going to, I don't know if we want an earnings setup calendar or if we want to just sell an Nvidia strangle in May. I'm getting crazy with strangles. What did I sell strangle in yesterday? I sold naked calls yesterday in something too.
We did a reverse jade lizard in something.
No, but I did a naked call in something else, I think.
Congratulations.
I've been adding more naked calls, which usually I don't like.
Congratulations.
No, we did it. Let me see.
I don't think we did it in our account.
No, we did it on the show.
You couldn't remember Birkenstocks.
Let me see.
Just go to yesterday.
I did go to yesterday. Where did we add a naked call?
Starbucks.
Yeah. Naked call in Starbucks.
That's because I will short that stock any day of the week.
Naked call in Starbucks yesterday.
How's it doing? How's our Starbucks position?
Well, let's find something in NVIDIA. Okay, so we've got NVIDIA 33 rank. If I take a look at the NVIDIA chart, now this is really zoomed in. Let me zoom out a little bit. What do you think?
Do your best.
I'm in. I mean, so NVIDIA is a liquid product. I have no problem. 'Cause to the upside or to the downside, I know how to defend it.
Okay.
There's a lot of chip makers out there. Our Starbucks is up 31% in one day. I think we should close it.
Really?
Mm-hmm.
Okay. Let me just, if I go to the 170 put, that's $30 down. And the 230
How much
call,
are you getting for it? 130 and
113. Ooh, $4,000 buying power. It's too much.
yeah, it is too much.
That's
so
too
you
much.
almost have to do you almost have to do some type of defined risk.
Yeah. What else do we want to do in NVIDIA?
I mean, you can always do. Okay, are we going to do? You're doing it before earnings.
The earnings are after my expiration.
Right, so you're before earnings. You're in the cycle before earnings. It's still got a decent premium there. You were looking for a strangle. You can get your break-evens close if you do either like a big lizard or an iron fly. So check out.
Lizard. Let's look at a big lizard.
You can do a big lizard with a fat tail or an iron fly. The big lizard is starting with that straddle, and you're defining your risk to one side or the other. You could do a reverse big lizard or a big lizard.
So if we've got the 200 strike and straddle, and we're collecting $14, I'm going to go $10 up. So 200 to 210, $10 up, and buy that call. So now I have a $10 wide, and I'm collecting $10.87.
Yeah, you know, we already priced the strangle, so you know you're going to have to buy something. We call it a fat tail, but I think TP calls it a thin tail?
Tail risk.
Tail risk.
Like you're removing that tail risk. So right now our risk would be around the expected move. As far as delta goes, our risk is around the 26 delta. The tail risk is when you have risk at those very low deltas, like a big move beyond the expected move. So you're eliminating that. I'm going to tighten this up and make it a 750 wide. Now we have a 750 wide where we're getting almost 250 extra. So it gives
you a little bit more to play with.
We have that $2.50 to use. So we can we can use that 250 and buy the 185. There, now we have, I'm going to go to this on the analysis mode for you. I don't know if you could see.
In the analysis mode. They're recording us.
Okay.
Oh, this is great.
Yeah.
This is what a big lizard looks like. You have a big peak, but you still have anywhere to the upside. You've got $45. It's good.
So we collected $790 on a 750 wide call spread, and we bought a put. We have risk to the downside, $712 in risk to the downside. This is a big lizard where we get that theta a day, almost $5 in theta a day, and we would take 10% out of this, so about $75. We can do this with our risk to the downside or with risk to the upside. You could do it either way, whatever way you want to do it.
You can pop either way.
Right.
Yeah.
So would we want our risk to the upside or downside?
And it's before earnings, so it doesn't matter. So I don't want this through earnings.
Right. Yeah, I don't know.
How much risk do you have?
$700.
$700. Would you be willing to risk $900 to both sides?
Oh, and just have the risk to both sides.
So you have, I was kind of pricing out while you were doing something. I was pricing out, and I should have been paying attention to you, so the shame on me.
No, that's all right.
But I was pricing out, and this is what I did. So I priced out just an iron fly, $10 wide.
So I'm going to move, so 200, 220.
I did the 200, 202. So I moved the call
So
up.
it's not quite.
Yeah, because then you can do 202. There you go.
200, 202. So 202, 212?
No, you're gonna have $900 in risk. So you go to 220 or 222.
Okay, make that $20 wide.
Yep.
And then 200, 180, $20 wide. So here we have a $20 wide where we're getting $1,000. Not bad.
So that's what I was saying. So if you wanted risk to both sides, now this is to both sides. I kind of like eliminating one side or the other.
But here in this situation, if we couldn't decide, if we said, oh, we could have the risk to the downside or the risk to the upside, we can't really decide. Maybe we should take the risk to both sides.
That was kind of my point when I was like, I could go either way with this. It doesn't matter.
Right.
Now you can tighten it up too. So you can make your peak smaller and your risk less if you pull those wings in one at a time.
Right.
But when you had $700 in risk to one side and we didn't know which side to do it, this isn't a bad trade.
No, it's not. So this is just
an iron fly.
An iron fly.
We haven't done one of these in a long time.
We usually don't do iron flies, but I don't mind this. We separated the strikes slightly because we're trading 201. So we did the 200 put and the 202.5 call. Made the spreads $20 wide. So this, instead of the $5 a day in theta, which the Big Lizard was getting, this is getting $13 a day in theta.
But when you eliminate risk to one side, I think it can come off easier. This time has to march on, and it has to be almost back to where we're trading.
Yeah.
So it's a little bit different.
So if we're getting $13 a day in theta and collecting $10 and only want on an iron fly or a straddle, I think we only want 10%. So if we're collecting $10.70, we want $100 out of this. If we're getting $13 a day in theta, you figure we're going to get out of this in a week if we sit right here. If we stay right here, if NVIDIA bounces around, comes back to around 200, we can be out of this in a week.
That's what the theoretical Greeks are telling you.
Yeah.
Correct.
All right, I'm going to ship it.
It's not bad.
No. 1074 on this.
Yeah, sorry, I should have been paying
fly.
attention. But when you can't pick one side or the other for the Big Lizard, I mean, it's very, okay, if we were, and this is why we started with a strangle. So if you're willing to put the risk on both sides for $4,000, that was a lot.
I didn't want to use $4,000.
You have to bring it in a little bit. So I agree. The common sense side is, and we used to have a script with this. I'm going to try to find it.
What fell?
I don't know. Something fell out of my hair. My clip fell out of my hair. So, but we used to have a script on this. When you have such a big collection, you put your percentage less.
Whenever you're selling the center strike and doing a straddle or a Big Lizard,
what are the spoos doing?
The spoos are down 18.
But they've been kind of staying there.
They've been hanging around here. And we heard a big order just come through. I'm not going to miss this one. I'm going to see it when it prints on the board. There's probably a 30-second delay.
Maybe even a little bit more depending on how big it is because they have to divvy it up.
So when I was 20 years old, think of 20-year-old Jenny down here on the floor.
I knew 20-year-old Jenny.
I was quote reporter, and I would update the board. I had a little computer, and it was
smaller than this. They were small.
A small computer, and all I did was update the board. So when the traders yelled something, I updated the board.
Yeah.
How do you think the board updates now? There's no quote reporter standing in the pit.
I don't know. That's an excellent question. Let me look into that and I'll get back to you.
Yeah. And I never ever thought of I don't want to say I never made a mistake, but I never typed the wrong thing to go on the board. But what if someone would?
Think about how much user error there used to be back here. The user error has kind of been removed because two parties had to yell at each other, use hand signals. Sometimes both thought they were buying, sometimes both thought they were selling. Sometimes the price was wrong. Sometimes the option contract was wrong.
20-year-old me standing in the middle of the pit, of the OEX pit, and that was big and busy.
It was like this. It was as big as this.
But tighter. It was tight. And I'm just typing everything up. I could have typed something wrong. It could have gone wrong on the board.
Yeah, but you didn't have to fight it out as a quote reporter. You didn't have to fight it out.
No.
Okay, now let's send this.
All right, I'm going to send this.
NVIDIA is pretty liquid, so I think we'll get filled right away. I haven't been pushing trades either.
D70. Where did that go? Geez, there's so many orders that are trading that the board sold 4,200. April. Gosh, there's so much filling that the orders disappear before you can even read it.
I believe that because I can't see it because the camera.
Yeah, the D7200 puts are trading. They're selling them. The crowd's selling them. Customers are buying D7200 puts.
Let's take a look at them.
Right.
Ship this and let's take a look at what they're doing. D72.5 puts.
7,200 puts.
7,200 puts.
So in SPX, customers are buying December 72. What? 7,200. Those are in the money. Did you see that?
They are in the money.
Yeah.
They are for sure in the money.
Looks about, I mean, just 2.6 thousand. The crowd sold them.
So somebody's buying the in the money puts.
puts.
Is it Tony from Mexico?
Probably 2,600. That's probably Tony from
That's
Mexico.
his size.
Yeah, probably Tony from Mexico. Funny.
That's his size. No, okay, only because we have a couple minutes left and we didn't really get to go to it. Let's go back to that SPX where you can see what's being traded and the most active. We went to it and then we went to the other ones. I want to look at the SPX because we're in the SPX. I know you wanted to look and see if there's any ideas. I think it's a good idea to do that.
So,
only because we're just looking at the board and we're talking about these numbers that are going up, and it is still, if you hit refresh, that was still 57,000. I don't know if that's going to update.
Well, as far as the 0 days go, who knows what they're doing, right? Like, who knows what they're doing?
But this is all SPX.
I know, but you can see 21st, 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 21st. The most active are the 0 days.
Are the 0 days. So it was the 7,200 that was traded, that you saw being traded. The
that was Dees.
Oh, it was Dees.
Dees.
Oh, wow.
Yeah, Dees.
That's for sure Tony from Mexico. That's his jam.
Yeah, right, totally. And you can see here's the spread. Here's a put spread. June, 5,700, 5,600 put spread. So.
And you can see because they're matched up.
June, 57, 67. 57, 67. All right, I'm going to pull that up. If I sell the 6,700 puts in June, and I don't know, they could have been because in June we've got the AM or PM. So let's just, maybe they're the AM.
Well, you can tell by the volume.
Here, June 5th. June 5th, 57, 56. June 5th. Okay. This is so far down. What are you getting for this? 5,700.
That's why I like to look at the 0 days.
You're getting $1.20 on a $100 wide. You're getting $120 for $9,880 in risk.
That's crazy.
I don't know why anyone would do either side of that trade.
We will never know because that size and that quantity has something to do with something outside of our scope as a retail investor.
But okay, so let's just say 57.56. That's so far from SPX 7,000 that you don't look at that as any kind of protection.
No, but sometimes in the parameters of ETFs and hedge funds, they need to have X amount in there of X amount of units and X amount of downside and X amount of this, and they're fulfilling something. That's what I'm saying. There is no rhyme or reason. I know you want to make logic of that.
Can't make logic
because you wouldn't buy it or sell it.
Anyone would do either.
You don't know why you would buy it or sell it. Correct. Yeah. You're not going to make logic of it.
It gives you like zero delta.
It does.
It gives you no delta, and it's only giving you $125 to have $10,000 in risk.
Correct. That's why Jenny Andrews isn't pressing the button in our account on that.
That's why I'm not sending it. All right, we have about 5 minutes to go. As far as, I would like to see what the fast movers were today, what the big movers were, tasty fast movers. As far as change, what's moving the most today? Bloom Energy.
Oh, Bloom Energy was up today. Is it down now?
Yeah, no, it's up. Bloom Energy, big mover. Enphase.
So the other thing that was up again today was Marvell, and I wish Frank the Great was here because he likes to talk about it.
$3 this morning. But you take a look at Bloom Energy, and that's up $10 today.
Is it really?
Look at it. It's had quite a run. Yeah, Bloom Energy.
Let me take a look.
So we've got that up $9 or $10 today.
Yeah, that's up good. What else is up?
Wayfair was up.
Well, if you've taken a look, and we haven't talked about this, and we are not jumping into this, and I'm hesitant to show you, type in the symbol CAR. It's Avis Rent-A-Car. We missed this boat. This is the biggest meme stock and the biggest craze going on right now.
Whoa.
Yeah. So about
Why?
here, and I have no idea, but it's a meme stock, right? So it's Avis Rent-A-Car. The about the 500 level, Nikki would have blown up the account. He didn't. I'm kidding. But they wanted to short calls so bad.
Really?
Yeah. Look at how high it got yesterday. Is that yesterday's bar or today's bar? The top.
Today is today. That's today.
That's today.
Today got to 612.
612.
No. Today got to 744.
Yeah, Avis Rent-A-Car. This is something that I don't want to touch with a 10-foot pole.
No way, I wouldn't now, but I wish I were in it. I wish I just had some long stock in Avis Rent-A-Car.
For sure.
But if I did have long stock.
But if you had long stock, you'd be out.
I would have sold it around,
You couldn't have even held it that long.
I would have been out at like 150.
Correct.
Oh my gosh.
Correct.
So back to what's moving today. So that's what's moving to the upside. And to the downside, we've got iron, rocket. Rocket is something that I like selling puts in.
It's down today. We could take a look at that.
Okay, it's only $16. 61 rank, $16. We have earnings coming up, but it's one of those that I don't mind selling puts in. Rocket.
And this was on the largest down movers today?
Yeah. So the 16 foot, now, it's in the middle of its range. The 16 foot before earnings is 75 cents.
How much is it to put it on? I think this is cheap, right?
It's cheap, yeah. Now it's cash secure.
Yeah.
Whoa.
Yeah.
It wasn't. It didn't used to be.
It didn't used to be, but I remember looking at this recently being like, whoa,
Interesting.
okay.
So, and back to see what else is moving to the downside. Baidu. IONQ. So if IONQ is moving to the downside, it's QBTS. And then we've got CCJ, Chemico.
That's a Victor Jones special. That was his, wasn't it? Loved CCJ.
It's still up.
Yeah, it's still up.
But that's it. So as far as today goes, we did the all symbols today.
What didn't we get filled on? What are we working?
We're not out of Burke.
I don't think we're going to be.
That's it. But we've sold today we did the SPX downside broke wing butterfly.
Okay.
We closed our Palantir, we closed our VXX, and we put on the NVIDIA Iron Fly.
Yeah, that's not bad. That's not bad. So I've got all of them. So I've got SPX. No, we're filled in Burke. Oh, this was yesterday, apparently.
No, that's yesterday. So today we put on the downside broke wing butterfly and SPX.
Check.
Palantir we closed.
Check.
VXX we closed.
Check.
And NVIDIA we did an Iron Fly.
Okay. Did you put a GTC in for the NVIDIA? I would put that in immediately, and then they're starting to get a little crazy again. I'm going to see where the SPUs are.
SPUs are down 23. So I'm going to put in an NVIDIA GTC to take 10% out of this. And send. I'm not putting any kind of GTC in for that SPX 0 day.
No,
we're leaving that.
No, we leave it.
So SPUs are down 23. So I don't know what the rest of the day is going to bring, but we have seen some excitement here.
So we have, the VIX is keeping its wings up. So this is the time of the day where I like to say, where do you think it's going to go? Let me see where the VIX is, and without you looking, don't look at my screen. Where do you think the VIX is right now?
1990.
Ooh, 1985. Good job. It was a great year, 1985. We were 10. Or 9. But so because the VIX is up 5% today, I think we're going to stay down.
I kind of think we're just going to stay around here. Maybe if we're lucky, wishful thinking. I'm going to say, this is what I'm going to say, Liz. I am going to say today we are going to end the day at 70.75.
Oh, I like it.
Now it's easy. When you tell me where are we going to end today, I'm always going to pick the center strike of our Brooklyn.
That's where we want it to end. So you got a genie blink to get 7.75.
And I think that's a wrap.
That is a wrap. We're cutting in.
Everybody, thank you for watching. Stay tuned. There's a great show after us, and we'll be back on for Last Call.
We will be back on for Last Call, and we'll be back here in these seats again tomorrow. So remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you later.
Bye.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
first thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal, and Microsoft is mooning.
Yeah, that's right. That's
right next to Avis Rent-A-Car.
Yeah. Oh God. You know what though? First down day.
Oh man.
Oh yeah, it's down.
Oh, it was up 100 points about an hour ago, and now it's down.
It was the trading 700 and change, and now it's down. I was asked yesterday, like, how come other places like I don't know CNBC and or Bloomberg don't talk about this? That's what we're here for. We point out these type of things. This is something that a lot of people have not been talking about. We've been talking a whole lot about it. Nick made a great play on it yesterday. I gave him props for it. It might be over. It might be over now. I know. Yeah. I want to get in. This is when you want to get in and get like a position, but it's too expensive. I don't think I can do anything. But this is when you want to try and get the momentum to the downside now.
Yeah. I mean, we were up at 750 and now we're at 580. Like this is the classic short squeeze situation. And yeah, I mean, this has been a insane run. But to your point, it's tough to get downside exposure in a product like that. And look at this. Yesterday we talked about how on the move to the downside, you could see implied volatility get crushed here. And that's exactly what you're seeing. We're seeing 100% implied volatility, 200% implied volatility. This thing's going nuts. But these downside options have gained a little bit of value into this reversal here, down 30 points, but nothing even close to the upside calls that have exploded.
You could buy an upside call spread too, though. Like in case it turns around.
Just a quick 3-day call spread. Like, I don't even know. I can't touch this thing in good conscience, but it's fascinating to look at.
I mean, you could buy the 700, 720 call spread for $4 right now. I waste $400 premium for it. One to make almost $4.
Mm-hmm.
You could do that fondness too. Again, risk defined. Whatever you do in here, risk defined. Just know.
Crazy. Everything's crazy.
Yeah, it's nuts.
But yeah, E-minis and NASDAQ kind of fluttering around flat. E-minis down 16, NASDAQ is flat. Down the Russell are also flat. Bitcoin, ETH down just a tiny bit here. Oil catching a small bid, up 2 points, but nothing too substantial and nothing too crazy here with the market just digesting what has happened over the last couple of weeks.
Well, you guys, you stepped in so graciously to do the show this morning, which was awesome. And as you guys were in here, I think it was at the point you started talking, around 9:40 East Central, our time, gold turned around. Gold like reversed, like down 2% and just dropped. And not sure what happened there. And then not long after that, the market turns and drops and oil goes up and then the dollar went up. So there was this chain reaction that happened, and the 10-year yield went up. There's this chain reaction that happened. Not even sure why it happened. Couldn't even see any reason. Some people were wondering if it had something to do with the confirmation hearings that are going on right now with Kevin Warsh. I don't think so. It was. I don't know. I think it just speaks to how unresolved this situation is.
Yeah, still a lot of volatility under the hood. Even though we've seen a massive rally in some very specific names and whatnot, but. Yeah, we're not out of the woods yet. Not yet.
No.
And I think the crude oil markets are even telling us that too. When you look at the backwardation here, is still there. Still 4 or 5 points of backwardation. Nothing yet like it was a couple weeks ago, but these back months continue to get bid here near the end of 2026. These were sub 70 a couple weeks ago. Now they're sitting in the mid 70s. So I think the market is kind of pricing in more higher prices, more risk on the back end, but not as much craziness as we've seen over the last couple of weeks. So I wouldn't expect, I'd be shocked if the E-minis and NASDAQ just like tanked from here.
Right.
I think we're out of that situation, but the VIX is still elevated.
And much to my chagrin, on top of what you said, the skew is still to the upside. Skew is always to the upside in oil, but it's a little elevated right now. It's gone back up. And I'm still short. I'm a short upside via short an iron condor. I'm staying short that. I still think oil and gold and silver are the best vol sells in the market, but yeah, I don't really love it right now. Being short upside, the 98 and 100 strikes, 98 100 call spread is what I'm short for my iron condor.
Hey, I mean, got to keep trading, but yeah, it doesn't always feel good.
No, right?
Speaking of feeling good, I'm getting into UNH, which I've tried to play to the upside. I've actually taken some profits out of this thing. If we look at the order chains, I'm pretty sure I've done okay. Yeah. So took a few stabs at it late last year when it was down at 300 and below, just trading these small little calendar spreads, diagonal spreads. But I just got back in. They just released earnings this morning, and the stock is pumping back up to 350. And I think we've shown this before with other products, but when you look at a longer term chart in UNH, if we just go to like the last 3 years, this huge liquidation from 600 all the way down to 300 was only a matter of like a week and a half. So the fact that we're all the way back up to 350, and if we can get above this 375 level, like this whole range could be gobbled up pretty immediately. So I want to play for a continuation to the upside here. And I did that with the long June, short May expirations, and just did it small. Went to the expected move in May, which is 370, and got into the long June, short May 370 calendar spread for $440. So nice and small. Reducing cost basis by 50% on the long option with the sale of the short in May, and it's up a little bit right now, but I'm looking for a move to 370, and we'll just close it for whatever it is. It'll probably be like $150, something like that. Nothing crazy.
Love it. Yeah, this is one that I considered doing for earnings last night, and then I backed out. I didn't do any earnings.
It's fair. I'm just waiting for the big stocks.
Totally agree.
Looks like you've been pretty active this morning.
I was active. Yeah. I mean, I've largely talked about how I've been positioned into and through this move. I mean, I've had some long delta plays, mostly some of the software stocks and some Mag 7 names that I was long, and I was getting, short deltas via like whether it was inherently some iron condor that I had in SPX that's now in the money short call spread, or the super bear that I had. And so those are my short delta plays, along with some short vol plays. So I kind of de-risked a little bit today. I mean, Humana is not part of that. Humana is in the same vein of your UNH trade. I just decided to go with Humana instead. As a result, considering that it has earnings coming up, I'm hoping to get a positive drift into earnings. Maybe I can take it off before. So I did that, basically same deal, a few calendar call spreads right around the expected move, June. SPX, de-risk, closed that short. One of them was a iron condor. That was basically the short call spreads in the money. Closed that out. I think that was, this was the super bear. Close that out. Again, loser, but it's fine because I had long deltas against it. And this was the iron condor. And then diamonds was a short put spread that I closed out for a gain. I think I initially sold that thing for like $3 and change. It was a roll too. ABGO was it was a long call spread that I had moved up after basically winning. I had like $1,000 in credits in this, and just decided to close it out again. I'm closing out risk on both sides, short delta and long delta. So closed out the AVGO. I mean, as much as I wanted to keep it, I'm closing it out. Rolled the strangle. So rolled the strangle and made it, rolled the straddle. I had the 27K straddle, which is where we are, right? Basically, we're not far from there. Decided to turn it into a strangle. Same month, just did the 27,750 put versus the 27,800 call. I was able to collect $51 doing that. And then CVX was a strangle that I was short, bought back for a small gain. Basically, CVX and XOM, I closed that one for $45 gain. The other XOM was $100. I mean, at this point, both of them still have earnings coming up. They're only in the high 20s as far as actual implied vol. I was hoping they would have come in a little bit more as oil vol collapsed some, and they did a little bit, but I think it's just time to move on. One strangle I do like, though, GE. So that just had earnings. Vol is in the 30s, and again, earnings are over. So let's just see if we can. It's a nice little chunky strangle. Let's see if we can monetize this thing.
I like it. Yeah, lots of opportunities within the curtains of the market. Even though the market's kind of flat right now, you've got plenty of products that are moving in a pretty big way. Microsoft, love to see it up $8. It just keeps climbing. Even with the NASDAQ selling off right now, it's still picking up some steam here to the upside. So this is going to be really nice if this continues. This will be the trade of the year for sure. It's only April. But yeah, we're positioned well in there. I've got the 435 short call for this week, which you love to see, trading for $200. So even if we get to 435, as long as we don't go beyond it over the next 3 days, this will be another $200 addition to the position overall. And if we get to 435, I can buy this back and roll it out into the earnings cycle and move it up pretty substantially. You can see here, if we go from the 3-day to the 10-day and just buy this back for $2, if I'm trying to replace it for, let's say, like $250, I can move this thing up 35 points and still pick up credit. So not worried about this at all. Feel really good about this position, especially with Microsoft rallying in such a big way prior to the earnings announcement. I think you could see a big blowout move to the upside if they post good numbers and have a strong outlook. So we're positioning for that, but I think it'll make a lot of sense considering we have a good P&L open with this position. I'll probably also do some downside butterflies, some cheap downside butterflies in the weekly cycle for earnings, just in case we see a sell-off. I can capture some of that value with that butterfly.
Like it.
Yeah, but everything else kind of just chopping around. This natty gas position is somehow working out, knock on wood. It might be a first for me, but yeah, this trading in this narrow range, like we talked about with Thomas a few weeks ago here. And yeah, we'll see if it holds.
It's man, I mean, oh geez, oil's 90. Oh my God. Really?
90.
I think overall my thought process has been to sort of de-risk some deltas throughout the week. Again, I've had short and long delta. Right now I still have short call spreads that are in the money, and SPY, IWM, and Qs. These are things that I put at the time. I think I was mentioning how I was trying to sell call spreads up against the previous highs, which at the time was 7,000 and whatever else, and 270 in the IWM and et cetera. And now we're through those highs. And but I don't know if I'm going to get rid of the other longs that I have. I really like them. I mean, it's Palantir, it's Microsoft, it's Apple, it's NVIDIA. It's one of the most hated stocks in a while in MicroStrategies that I have a super bear in. I'm just going to hold on to these for a minute. And most of them are a little bit of some of May and half of June. And that's how we're going to roll, man.
Yeah. I wouldn't be surprised to see just kind of a chop here also. I mean, we've got, if you look at some of these earnings, Mag 7, they should be in this watch list. They might be a little too long dated. Oh, yeah, there you go. So if we look at the earnings in terms of the last price, you can see you've got Meta on the 29th. You've got Microsoft on the 29th. Tesla on the 22nd, so tomorrow after the close. You've got Google on the 29th. So next week is going to be a big earnings event for this entire market. And I think a lot will be said during that time period. And I think we'll finally hear what the narrative is, whether it's blaming the situation that we've seen, or it might be all steam ahead and just be like, yeah, we're just crushing numbers and we're going forward and no problems to see here.
Well, yeah, that's what I'm curious about UAL. I think that's tonight, right? UAL is tonight. Yep, today after the close. I'm curious about them, right? Because they are certainly going to comment on oil. And now it's kind of the situation's a little murky, because you would have thought if this had been a few days ago, they'd be like, well, it's de-escalating. But, I mean, they're still jumping up in oil price here. So I'm curious as to what they're going to say.
Yeah.
I'm curious as to how this is going to go.
Yeah. I don't know. It's going to be wild. I think the curve of oil picking up price in the back end is not great for these airlines. I don't see how they can spin it positively. And it's selling off from 105 down to 98 in the last 3 days. So it could be a bearish event for the airlines, at least in the short term. I might wait and see what happens, and then if UAL just gets decimated, then step in and sell a put.
Yeah.
at a lower price. I feel like that makes a lot of sense, especially because the earnings premium isn't that crazy. We're dealing with a $100 stock, and it's a 6-point implied move, so 6%, we'll call it, which is pretty low, all things considered, especially the tie-in with oil prices being elevated. I feel like that's not being fully priced into the downside risk for something like UAL or all these other airlines too. So, yeah, I think I'm going to wait and then see what happens. If there's a big sell-off, then I'll get in with a put.
Yeah, I agree. I mean, I'm playing the waiting game, I think, on a lot of earnings. I'm not going to get too carried away this time around. Like you said, it's going to be mostly about the bigger earnings for me, the Apples, the Microsofts, et cetera. I like, maybe I'll play some of those, but yeah, UAL. I haven't played an airline earnings in a while, honestly, that I can think of. And they used to be pretty volatile.
Yeah, I don't think I have either. We've just been trading it as it's moving, but it's been a good trading vehicle this year.
Yeah.
We're streaming live on the YouTube channel. If you want to join us on Tasty Live, just head over there and throw in your trade ideas and questions along the right side chat. We'll get to them right now.
Come on.
Watching CL IVR climbing. Let's take a look at
it. Is. I mean, it sucks. I thought we were over this, man.
Yeah, it's been a big intraday move here. This is OVX implied volatility for the USO ETF, but jumped from 78 to 82 about an hour ago.
I was about to say, it was an hour ago. I'm actually, okay, I'm not crazy because I looked an hour ago and it was like 11.9%. I don't know how much this thing updates, but.
I mean, I guess I've got a minute chart with some data, so I guess by the minute. But yeah, oil's picking up some steam, sitting at 90, and the market's selling off. So, and Ryan's chart yesterday when we had him on was great. It was like a 90 inverse correlation with oil and the rest of the market right now. Mm-hmm. So it is still kind of that volatility gauge of the market. And to your point with CVX and some of these other positions, implied volatility is still pretty elevated. Earnings coming up for some of these in a couple of weeks here, but kind of crazy.
Yeah, like I said, the IVR is high, but implied vol-wise, I was like, I'd rather sell mid-30s in GE than sell 28, 29 in CVX and XOM. So
yeah,
I got what I needed out of it.
Makes sense. All right, let's see what the people have for us today. I did a 69.75, 7,000, 70.25 butterfly in SPX for Friday.
Short 7,000?
Yeah. Short 7,000, 25 points wide. 25 points wide. Let's see what this is trading for. Yeah. For $1, really don't mind it. It's not going to really go lower than that. Even if the market climbs higher here, it'll still hold on to value until expiration. But yeah, nice risk reward, especially if you pin 7,000 on Friday. That's when you can really get into some juicy profit territory. But just make sure you understand, like, this is a narrow spread relative to the price of the product. So you really have to hold this to Friday to get anything substantial out of here. But at the same time, it's only $1.
Yeah, it's only $1. Good luck to you.
Mm-hmm.
We will know the Bears picks by Friday.
Ooh. When is that? Thursday or Friday?
Starts Thursday. First round. Yeah.
Love to see it.
I don't even know where it is this year.
This is the Bears year. This is such a Bears year.
Yeah.
Because now you have no DJ Moore, which just clears such a crystal clear path for Loveland, Roma Dunze, and Luther Burden to just pop off. Especially if they don't pick any offensive players in the draft, which I feel like they.
I don't imagine
they don't need to.
Well, you don't need to. I mean, unless somebody falls into your lap, but I don't know if there is those type of dudes like that are going to fall into their lap.
Yeah.
Unless you have like an Aaron Rodgers type drop, not a quarterback per se, but like some wide receiver drops or something.
Yeah.
I hope that they get one of the guys from Miami who is one of the defensive ends, Keem Mesidor. I love that. We'll see. You can always
do
use edge.
Yeah. That'd be fun.
Yeah.
And it would be someone from Miami coming to Chicago.
That would be great.
It'd be magical.
Listen, that's worked out before. Maybe you heard of a little guy named, damn, I'm blanking on his name all of a sudden.
A guy by the name of
the kick returner. Kick returner.
Oh,
Best
yeah.
kick return of all time.
He's from Miami.
Yeah, he went to Miami. Yeah, no, I'm blanking on
He's
his
the
name.
Aussie guy, right?
No, the best kick returner.
Devin Hester.
Devin Hester, thank you.
Yeah.
Thank you.
Thank you.
Brain freeze.
Wizard
Devin
of Oz
Hester.
over here.
Devin Hester is the University of Miami.
Touchdown.
Yeah, that's right. Super Bowl. That's right. Thanks, James. Thank you.
He was
The assist.
electric.
Producer James with the
Absolutely
assist. Anyway.
Someone's asking about a zebra, a put zebra in Avis for car. It's just too expensive.
I should have bought the call spread.
It's really expensive.
It is very expensive. I mean, assume anything you do in here, you're just going to lose money. And if you make money, then it's a plus.
Yeah, I mean, these markets are super wide. I've got this
Zebra is
too
crazy
doubled
expensive.
up. Yeah. I feel like if you're doing anything like this, it's just got to be like a straight up vertical spread.
Yep.
Because a 3-day vertical spread, like that's really all you can do in here. Because the IV won't matter in 3 days because it'll just be intrinsic value or not. Like this will be at 1,000 or it'll be at 200. And either way, you're risking one to make one. If you do a vertical spread here, and if you're directionally right, you can double up on your debit paid. And if you're wrong, at least you know that in a couple of hours, this thing can move 100 points. So,
Yeah, exactly.
yeah, I think 3-day, like short-term vertical spreads make a lot of sense here if you're trying to keep it really small. That's really, I think, the only thing I would consider doing in here.
Stock was $100 a month ago.
Yeah, I looked at some of the values of the upside calls just to play that game of like, what if I got into this with like $100,000? What's that gonna look like? It looks like $36 million. That's what it looks like. But yeah, crazy move.
Yeah, wow.
Short squeeze, extraordinary.
That's
Love
the
to see
thing,
it.
though. You know, like the thing that I always talk about is like, if you got in here on March 30th, you would have for sure been out by April 7th.
Yeah.
At $250 something. You're like, okay, that's it. I'm done.
Yeah. Yeah. Especially with the call options, like you would have bought them for $1,000, they would have gone to $20K and you would have closed them. You're not holding it till up here.
You would have needed to go into a 2-week coma and then wake up.
That's what I was gonna say. I was like, that's the only way.
Wait, close this position.
Yeah.
Where is it now?
You'd have to forget what the internet is, forget that you had a brokerage account, and then remember that you did.
Yeah.
On this day, at about 9 a.m.
Yeah, that'd be crazy.
Insanity.
Yeah.
But hey, maybe that'll happen to Nike.
Maybe
that could be fun for us. That's a different story because we have 2 years on those leaps. I'd probably just hold it.
Yeah.
Happen.
Yeah. Oh, yeah. That's a totally different story. Yeah.
But I doubt Nike's going to feel a short squeeze. But you never know.
You know.
Let's see. So much for my get rich quick high hopes with Sound.
Yeah, I was playing that name a couple years ago. This one and the AI ticker itself. I mean,
should have gone to Avis Rent-A-Car.
Look.
I'm kidding. Like, that's not a real statement.
Look, things like this, I mean, with this low, how low it is, these are the type where you do whatever you're going to do, leaps or buy stock, and just throw it in a different account that you don't look at every day. I mean, I think that's just the way you do it.
Yeah. Because looking at it can be detrimental.
Yeah.
I agree with you. I have leap debit spreads in many names. Would you still take at 50% profit and roll out if you still have a conviction, or because they are leaps, would you hold them? I am more inclined to hold something that has a lot of time. So like Microsoft had a really nice rally. This is a great example, the 500 calendar spread. Like, I'm not closing this unless Microsoft gets 500, then I'll close it. Just because now that we've got the profit on this calendar spread, you can see here the short the short call is trading for $1,200. So even if Microsoft stalls out, this P&L will still stay here for the most part because the short option will lose value more than the long option will, with another 150 days almost on the long option, or 110 days, 120 days on the long option. So the longer term timeframes, I'm more inclined to hold. Shorter term timeframes, I'm more inclined to adjust or manage, which is why I sold this short call against this position, this Super Bowl, and just kind of just chipping away at this cost basis, but still keeping this position on too. So it's up to you, but I would say if you put on a leap trade that's a year out and you got 50% profit in a week, that's different. And maybe that's the case because we've had the huge market rally.
I mean, I think this is somebody who probably has it in their regular account. They're looking at it every day. This is what I'm talking about. Like, it just happens. It's natural. You're looking at it every day and you're like, ooh, look at this gain. I should probably close this out. What do I want? Wait, no, I shouldn't. It creates this indecision.
Yeah.
I think the dopest thing that we have is that you can have different accounts. It's easy and free. You just put in a different account. You don't have to look at it every day, especially if it's a leap. And it just makes things easier. And then you open it up every now and again. You're like, oh, look at that.
Yeah. Fair. And you can even hide it on the platform. If you have multiple accounts on the same login, you can hide it so you truly don't see it.
Yeah, true.
Let's see. Thoughts on an MU trade? It always rallies before earnings. When is earnings?
Micron and Oracle, I just haven't been able to get right. I thought Micron already. No, it did not. Did it?
I mean, they're pricing
I thought they had earnings like maybe a month ago. So they might have it again in June, maybe.
Yeah, June 24th.
Right? Yeah. So I remember us talking about this around earnings. So yeah, it was like a month ago or so.
Yeah. I mean, yeah, you can play for an upside move here if that's what you want to do, but it is at highs, which is a little tough. Like for this, I'd rather just wait for earnings, see where it's at, and then if I'm bullish, I'll place a trade there at that point in time. But if you're trying to play for a pre-earnings move, I like to do it in a defined risk way, but place a trade like this. It looks like July is getting pumped up in terms of implied volatility relative to June. So that's probably just because June 24th is the expectation. But either way, buying July, selling June, or buying July, selling May in like a calendar spread, at least then you can roll the short option into the earnings cycle if you need to, which is always a really nice thing in terms of flexibility.
Microsoft and Oracle, I haven't been able to get those names right. And tough to play.
Intel is going to be interesting. Intel has earnings on the 23rd this week, 2 days from now, and it's kind of a wild situation here. I mean, they got a new CEO. They're burning cash with Intel Foundry, but the stock market is pumping this thing to the moon.
It's been a great story. I'm short of putting here in June. I'm rarely short something heading into earnings, but it's the 55. I can live with it. See what happens.
Yeah, that'll be another interesting one. But yeah, a couple of precursor earnings prior to Micron. That's another interesting thing. Like you can look at these other stocks that are similar or in the same sector and see what happens with them before trading Micron directly. A May call ratio in BE. Bloom.
I like playing with fire.
Yes. A May call ratio 150, 175.
What?
150, 175, sold for $1. Earnings are approaching. Not sure how to manage. Close for a loss. Close only the short call. Any other ideas? So it's definitely a tough one, but with call ratios, so your break even's at 200, first of all, because you've got the 150, 175 long call spread that brings your break even up 25 points. So you're at 201 is your actual true break even. So the first thing I look at with call ratios is what is the value of this long spread that is embedded in the call ratio. It's $20 out of a max of 25. So if you're trying to manage this position, what you could do is you could sell out of this vertical spread. That will bring your total credit received to $2,100 instantly. You would be giving up the extra $500 on that position that you can gain, but if you're trying to manipulate this, I would sell out of this vertical spread, collect that $2,000, bring your basis up to $2,100. Then what you can do is you can buy back this 175 short call in May. If you wanted to, you could roll it to June and manipulate this thing and move it up. So if you're buying back this 175 call, what can you do to move this thing up? You can bring this to a straddle if you wanted to, or a strangle. So you could go to like a 200, 240 strangle, pay a small debit, or, if you wanted to bring this up a little bit. So this, if you were to buy back that 175 call after selling out of the vertical spread, and then you convert this to a June strangle at 210, 240, you pick up another 360, and that would bring your total credit received to, let's just say, $2,400. So you would have a 210, 240 strangle on for a credit of $2,400, and that would make your break evens look like this. So you can manipulate this thing pretty easily, which is surprising to me because you're all the way down here at 150, 175. But the reason why you can is because Bloom Energy has 100% implied volatility.
Yeah.
So that's the nice thing. I mean, that's the risk of trading a product like this. Undefined risk is you have these crazy moves or it just doubles in price in a week. But because it has doubled in price in a week, you have 100% IV to work with, and you can manipulate this thing however you want. But first things first, I would say if you're going to manipulate this and like turn it into a strangle, for example, I would sell out of the vertical spread that's trading for 80% of max profit for $2,000, and that will boost your break evens just by doing that. But you can buy back your 175, roll this up to something like this if you want to lean a little short, or you can move it up, make it neutral. But either way, you'll end up with about $2,400 of credit, and you'll still have a loss for now. But if it settles down, or if you manipulate it and manage it well, you can get out of this thing.
And I was trying to see if they could keep the strangle in May somehow without going inverted, but I'm not sure if it's possible.
Yeah. I think it's just too far in the money.
Yeah, it is.
But, I guess you could go to like this. You're still going to pay a debit.
You're going to pay a debit, though. I was trying to see if they could do it with getting a credit, but I don't think it's possible.
Yeah.
Might be in this thing for the long haul.
Yeah.
By long haul, I mean June.
Yeah. But yeah, you can still do it. You can manipulate it if you want to. I sold a CL. I just sold CL at 90.
Nice. MCL? CL? Either way.
Big CL, which is
scary. Hollow. Is that just a statement?
Yeah.
It's like
a statement.
And the ball's on the table. It's like, yeah, boom. These are here.
Just noticed Tony Batt's options trade today has its own tab on the follow page now. Yes. Yeah. So we're trying to do that, and by we, I mean Nick is trying to do that and give more visibility into some other cool things.
I don't want your option trades today in our bats count is basically what he's trying to say.
Yeah. Yeah. But I mean, I think he's trying to do some other things like with SPX and whatnot. So keep your eyes peeled for some more trader stuff in the follow page. But yeah, I had that on today, so you didn't see any. But you can see here the options trades today are all posted here, which is really nice. If you're watching those podcasts, then you can just come into Tasty Trade, duplicate it, manipulate it if you need to change it, do whatever you need to do.
Mm-hmm.
But yeah, good stuff. Poet is at all-time highs. Poet is rocking today.
Seen
What is
that
this?
name. I don't know, but I've seen it. Like I look at a list every single day of names that are moving up or down, and yeah, I've seen this one. I don't know what the heck it is.
Yeah. These markets are like zero bid.
Yeah.
Very odd.
Yeah.
Very odd.
Are you surprised?
I mean, kind of, with the stock that just doubled in price. But it's still $10, so there you go. Yeah, that's interesting. Sold a CL short call at 130. Okay, there we go.
Yeah, we might be in trouble today. Nah, I'm looking, dude, in like Poet, Open Door, OPEN, Cars, obviously. Beyond Meat is moving. It's like, oh man, this like they're going after all the like the shit. You know what I mean?
Mm-hmm.
Uh-oh.
The meme stocks are back.
Yeah.
People just need that volatility. They need it. EEM, KWeb, USO, looking for international trade ideas.
EWI?
EEM.
Well, no, I know they're saying looking for international trade idea. EWI is the one I'm in. I'm short vol in that one.
Italy.
Why? The Korean one. EWI is what I'm short. But yeah, that's one as well. The Italy. I'm short vol in this one. It's still elevated. The Chinese ones, I haven't touched the Chinese name in a while. How about you?
I'm allergic to the Chinese name. I just don't like the idea of like building an intelligent trade and then there's something happens politically.
I know.
Stock just tanks or just rips like double in price. It's like there's too much political attachment to those Chinese names, so I just don't trade them at all.
No.
But the ETF I think will kind of solve that a little bit. But yeah, KWeb. It's tough, but at lows, multi-year lows, close to them. BBWI, how about a strangle? The return on capital is something you would love. Bath and Body Works. Ugh. Really? I've traded this before, but it's been many, many years.
I mean, I'm surprised it's still trading $20, honestly. Who goes here?
Yeah.
Who goes to the actual store? Everything that they have, you could probably get on Amazon.
Really don't know. But yeah, I'm going to be out on this one. Yes, the return on capital is nice and strong. $400 buying power, $400 credit if you were to just like sell a straddle in June. But sometimes I get into these stocks and then it rips my face off. And then I say, why was I in that stock to begin with? That happened to me in Best Buy, happened to me in Peloton. So I try to avoid these fringe names just because I know that over time, if I keep trading the fringe names, something bad's going to happen. Like that's just how it's been historically.
It's true. It's true.
So I like the IV, but yeah, I would stay like defined risk in here. If you're directionally, if you want to pick a direction, like back up to 30, I would just do like a zebra or diagonal spread. Super cheap to get into either one of those. And then at least you know you're defined risk. That's what I've learned over 10 years of trading.
Yeah, it's true. It's true. We are defined by the lessons that we learned. There's no question.
That's correct. Long-term Tesla bull. Am I going to be proven wrong here? Tesla's just going to go to 700. SpaceX IPOs, it goes to 0. Tesla goes to 700. But let's take a look. Oh, this is a spicy trade.
What they got?
Long-term Tesla bull. Sell 8 of the 350 puts. 120 days out. Why not? Sell 8 of the 350 puts.
August. Okay.
And then buy 8 of the 390 calls.
Oh, wow. Why so close?
Good question. So.
Oh, you want to do this for a credit?
Yeah, I like doing these for credit, for sure. So regardless of whether you're doing 1 or 8, doesn't matter. This is your risk profile if you don't collect a credit. So you've got downside risk. You have expiration risk below 410, we'll call it. where if you make it just a slight shift here, and you're using 16 grand in buying power for one contract. If you make a slight shift and your pop's 38% because you have all this risk in the middle here, slight shift to 400, 410, bring this up, even just a small credit. At the money, pick up a credit, your pop improves dramatically because now you have neutral profitability here. Your risk is still to the downside. Putting up a little bit more buying power, but you have a lot more profit potential in the near term because you're not paying a debit. And you're doing this 8 times. So whatever that debit was, that was a 16 grand debit versus a 3 grand credit here if you were to do this 8 times. So yeah, we like to do these for credits for sure. And you don't, because these are longer term, like you don't really need to have this call be close. You can have it be further up here and you can see your P&L Theo is still really strong to the upside. And you're routing this for credit. You have much more neutral profitability here. Mm-hmm. So I would do something like this where you've got a cheaper call to the upside that has a lot of gamma exposure if you're right, but you have this neutral profit range here if it just chops around here. Instead of losing 16 grand, you'd be making 4 grand. Big swing there, just with a slight difference and a much higher pop. Crowd is up $21.
Saw that. Some positivity today in some of the that space. Mm-hmm. Crowd is up. Oracle, Palantir, Microsoft as well, of course.
Yeah, kind of crazy.
Pandub, as I call it.
Pandub. Yeah, all theyese names picking up some steam. Yeah, Microsoft's still sitting pretty, up 7. I would love to see it go to 500.
Uh-oh.
It'd be incredible.
Just got one of my alerts. I was like, why did my phone vibrate? And then I looked at the computer screen. VIX above 20.
Ooh.
Uh-oh. Oh, boy.
E-mini's selling off a little bit, down 30. NASDAQ down 60. Bitcoin and ETH flat. Down the Russell, down a little bit. But the Russell is down the most, 0.6%. E-mini's down half a percentage point almost. Let's take a look at these SPX butterflies. Yeah, so this is the nice thing about these butterflies. So we had these on 100 points wide, 6,900, 6,800, 6,750. And then into the big rally. Here we go. Yeah, so into the rally, I moved the 6,700 long put to the 6,750. So now I have a 100 point wide put vertical financed by a 50 point wide put credit spread, but I paid $500 to make that adjustment. But what that does is it adds another $5,000 of max profit potential to the downside if we were to sell off another 300 points. Did the same thing in the near term one, 13 days out, moved it from 6,500 to 6,580 for just 95 cents. So that one is an $8,000 profit increaser booster for 95 cents. So what that translates to is the market's barely down right now, $30, but these butterflies, one of them's up $100, the other one's up $100, and these are on like very small moves. So if we get a 100-point sell-off or more, these butterflies are really going to appreciate because I've got way more profit potential in the put spread relative to the put credit spread here. So I like those adjustments into the big rally, especially if you're trying to not add a ton of risk. You can just manipulate those 100-point wide butterflies to bring in that put credit spread. You'll pay a debit to do so, but you really create a lot of max profit to the downside in SPX when you do that.
Yeah, that was a nice adjustment.
Yeah, especially if we sell off here, it'll be a hefty hedge. What else we got here? AMD 300, 320 bull credit spread. To defend, I bought a bull call spread, 285, 300. Bear credit spread, bear call spread, 300, 320. Yeah, that makes sense. Let's take a look.
I'm realizing I haven't traded as many of these. AMD, Micron, Oracle. Kind of left them alone. I feel good about it.
Yeah. AMD at highs. Yeah, it's going to be crazy to see what these do.
Mm-hmm.
And it's interesting because these are much higher, and then NVIDIA is near highs, but it's not there yet.
Yeah.
Somehow NVIDIA is the laggard.
Long a diagonal in it.
Yeah.
For that exact reason.
Yeah. I bought a bull call spread, 285, 300. Yeah, so you just have a butterfly now. If this is what you have, you sold the call spread 300, 320, and then you bought the 285, 300. I assume like into the sell-off down here. I'm not sure when you did it, but yeah, you just have a butterfly now that's 15 points wide on the upside with a 20-point wide credit spread. So you have a little bit of risk to the upside, but nothing crazy. And I think it's fine. It's near term enough, but you still need this to be expiration week and the stock in this range between 295 and 305, I would call it.
Yeah, you got some time on that.
Mm-hmm.
This is the tough part about that time, about those, is like just this time frame right now. You're not far away. You just want some magic to happen.
Yep.
Only problem is you got some earnings in between.
Yeah. You're going to have to hold this through earnings if you really want to get anything out of this thing. Because that's when you'll see the big vol crush after earnings. What do we plan to do with the May Iron Condor sold on April 9th? Should we close the put side? I assume that's SPX. Let's take a look. The May Iron Condor. Yeah, so April 9th. Yep, that checks out. So this is what we're talking about, the 7100, 7110, 6550, 6540. It's marking a $300 loss right now because we're sitting right at the short call spread. If you wanted to buy back this put spread, you pay 60 cents to do so. So I don't hate that move. What if we move it up to like the 6,700? 45 cents. No thanks.
All right.
I'd rather just leave this on. 60 cents. You keep the 60 cents that it'll give you over the next 23 days. And if we get down to 65.50, I don't even care about this put spread that would be in the money because the SPX butterflies would be worth 10 grand. So holistically, from an analysis standpoint, we can show this here too. I have a lot of profit potential to the downside. So I'm not worried about this put spread at all. Because this butterfly would be fully in the money. This butterfly would be fully in the money. My expiration right now is 15 grand if we get down to 6,500. That'd be nuts.
Be awesome.
Yeah. So no, I think we're okay. If anything, if you wanted to, you could roll out the call spread. If you wanted to give yourself more wiggle room for a sell-off, you could roll it to June or something like that. But you're not going to pick up much credit in doing so. So I think I'm just going to hold. What to do with the 7100, 7150 ES call spread for Friday expiration?
Holy cow. Oh boy. Sounds diesel.
What to do, what to do. It's basically a coin flip.
Yeah.
So what you could do is you could buy a butterfly to kind of hedge this thing. So if you assume that we're down below 7,100, you're going to get back $1,500. It's trading for $1,500. You have $1,000 of risk on this current position. So if you were to buy a butterfly that's just like above your price here, it had to be really cheap for it to make sense, but 7140, 7170, 7200. So you could buy this for $160 in ES and have $1,300 of max profit. So, I mean, this could be a hedge 3 days out. It would offset your losses if we're above 7150. So that's what I would consider doing. Maybe add a little more risk, throw on a hedge, but you can't have a huge upside move. You can't have like a 100-point ripper. Otherwise, both of these would be losers. So it's tough.
Yeah.
ANET, short iron condor, 150, 140, 185, 195. I assume in May. Probably in May. Yeah, it's like a risk one to make one. Chicken iron condor setup. Don't mind it. In the earnings cycle though, so you gotta wait. You'll have to wait till earnings. I don't like selling iron condors for the most part in earnings cycles because you have to wait until earnings. But if ANET moves, you take the risk. Couple of final questions here. Ooh, NVIDIA. I have 100 shares of NVIDIA held longer than a year and an in-the-money leap called near expiration. If I don't want to use more buying power for best taxes, do I sell the 100 shares and exercise the call and hold new shares for a year?
It's a tax question?
Yeah, I mean, the tax burden is when you exit the shares. So if you have an in-the-money leap call and that's also held over a year, then it's not really going to matter. You'll have long-term taxation on both of them. So if your in-the-money leap call is less than 365 days near expiration, then I would manipulate that versus the shares of NVIDIA if you're trying to keep the tax burden out. Or whatever the profit is less, I guess is another way to put it. But yeah, consult a tax person.
Yeah.
Because I left accounting. when I was in college, I took accounting 101 the first class. I was like, I got to get out of this. This is not. So I went to marketing.
This is not where I want to be.
Yeah. Let's see. Plans for Costco? 1100 calendar?
Other than just holding it, you mean? I mean, these are the days where it usually appreciates, and it's up a little bit, I guess, today.
Yeah, it's up $100.
I'm just going to continue to do 1,100 strike calendar call spreads in here until they work.
Yeah.
For $3 and change, I'm just going to keep buying them.
Yeah.
$2 and change, $3.
So I'm also going to just hold on to this, and the reason is because this May cycle is prior to earnings. So this May 22nd, the short option we have is 31 days out. If we want to or need to, we can roll just 1 week out, and we can show you here, this 1100 is going to be way more expensive in this cycle. Yeah, so you can roll out to the same calendar for $300, or you can make it a 10-point wide diagonal or a 20-point wide diagonal for a credit still. So because we have this flexibility, it gives us the ability to be more offensive in these holds because we know we can just roll 1 week out and create an earnings calendar spread or diagonal spread and pick up a lot more premium. So that's it.
It easily moves like 1% a day, it seems, in either direction.
Mm-hmm.
So volatile.
Yeah, it's cheap.
Yeah.
Last one here. How would you manage a straddle at 60 in Oklo? It's in earnings. I think maybe you just wait. You're leaning a little short. Trading for $1,500, which is a wide range. Your break-evens are at 45 and 75, with the stock at 64. So yeah, I don't see a reason to manage this really right now, unless you wanted to move it to June, but you're not picking up that much premium with earnings in the May cycle. But that's it. We're out of time. Time flies when you're having fun.
Yes, it does.
Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Stay tuned though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. And we'll be back same time, same place, 11 a.m. Central tomorrow. See you then. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
What is going on, everybody? Welcome back to Risk and Reward. Today's Tuesday, another volatile market We're getting these pretty big overnight gaps, and then we're pretty much rallying to the upside, downside, but a lot of movement overnight. But before we get into everything, brother guys, how are we doing today?
Doing good. Yeah, we're kind of in a weird spot here. I think
we are in a weird
start
spot.
to teeter. We got the ceasefire potentially coming off tomorrow, but I'm a happy guy because I've been long UNH for a long time, and it's logging another very good day here. Finally starting to work its way out of those lows a little bit, so all good on my end. I'm amused at this comment from Point B that says #MikerMall.
Mike and Jamal.
Yeah, #MikerMall. I like that. It's got me thinking about what our combined hashtag would be.
Ooh, that's a tough one. That's a really tough one. Anything come to mind?
No, I mean like egg.
Egg? Yeah, that
came to mind, but there's an extra G in there. That doesn't really work.
Yeah. If you guys want to get creative, you guys have anything on the tip of your tongue, let us know. I think the G and E is kind of a difficult one to work with. Gus and Errol. I don't know. It's so polarizing.
Yeah.
Polarizing. There's no rhyme or rhythm there.
Yeah.
So
ERGU. Yeah,
it's a tough one.
I don't know if I'm seeing it, but somebody will come up with something for us.
It's a tough one.
But UNH, the main excitement of the day in my portfolio. Silver.
Your mic, sorry. That was good. Your mic.
That's good. That might be better.
Yeah. But what else we got going on?
Yeah, silver working a little lower for me. So that's always good. I had mentioned yesterday. Yeah, today's Tuesday, so there was only one day before this week. They all start to run together. I had mentioned yesterday that this was starting to test my levels again, and it was sketching me out a little bit. But we started to run away again. So feeling good on silver. Rivian logging another good day. Will it hold? Probably not. It's Rivian, but we'll see what happens there.
Yeah.
And then, I don't know. Oil shorts still hurt. Affirm not down with the rest of the market, which is frustrating.
Volatility on oil seems to be a little bit more quiet, though. Hasn't it seemed to be that way, or how do you perceive it?
Yeah, I mean, I think it's just at a real decision point here. We are moving considerably higher today. I mean, USO up 4% on the day, which is not insignificant by any stretch. But feels like we're just starting to teeter at this decision point. At least yesterday, and then maybe into today, we're starting to price in the very real likelihood that this ceasefire comes off tomorrow. But the headlines change constantly. It's hard to keep up. Ergus.
I don't know that's ringing a bell for something. Anyways, we'll circle back around to those names. We might have to chef up ChatGPT, see if you can get creative for us, because nothing's coming to mind. But no, nonetheless, Rivian, yeah, to your point, not doing much. Oil has been a little bit quieter. Silver, you're saying it's a little down on the day, but not too much. That makes my FOMO kick in a little bit back into the metals.
Yeah, silver moving pretty much exactly opposite of oil, down 4% on this end. Was sort of starting to move together with oil there for a second. Not that these are correlated assets at all. I'm just bringing up this spurious correlation. But was starting to move kind of along with oil there at the consolidation, but seems to have decided it's going to go the other direction, sliding back off again. And it's just what I was alluding to yesterday, where this seriously down candle yesterday was making me think we might have tested those highs and be coming back down to chase some lower lows. That's the way the chart action seems to be shaping up here. So yeah, we'll see what winds up coming of that. But needing it under 70, 75, it was starting to sketch me out a little bit as we were testing that 75 level. But it seems to be a pretty decisive test and reversal to the downside. So
yeah,
24 days left on those. Hoping we can hold there. I'm starting to think about taking off this Starbucks position. This was a serious leap when I put it on. I mean, I've had this on probably 200 plus days by this point. Days open, 309 days. There you go. I forget I have that as a pinned thing, but yeah, I've had this on for 309 days. Wow. It was about a year out when I first put it on. This was like not right when they switched the CEO over to Brian Nickel, but it was like right after Nickel rolled out his first set of plans. I decided that I was bullish on them, and I got involved with this. It was a 3x2. I've already trimmed it to a 2x1. I'm not going to trim it to a 1x0 and just hold the naked put. That seems a little too risky. But I don't know. I mean, on one hand, we're holding firmly over that 80 level. I'm not super concerned that this comes back below 80 in the next 60 days. I could squeeze the last little bit out of it, but on the other hand, it is my most capital-intensive position in the portfolio right now. So I am sort of beginning to think about taking that off. But I mean, the 80 level is way down here. I mean, it would take. I mean, this is a 2% down day right now. That's a considerably red candle, and it would take. I mean, how many of those candles to get us down to 80? It would have to do this 12 days in a row or something. So, starting to consider that, just to rein some capital back in and have some things, ready to deploy into some short delta should things go sideways on us tomorrow. So might pull that off before the end of the day. Just be content with the profits.
You got a favorite drink at Starbucks?
I'm just a latte guy. Pretty much everywhere I go. Yeah, just a little bit of milk.
Whole milk.
What?
Whole milk.
Yeah, whole milk. Yeah, a little froth. Yeah, I don't know. I've as life has gone on, I've really started to enjoy my coffee darker and darker. Like I drink black coffee now. That was not something I could have said even 2 years ago.
Yeah.
It was like I sort of had to force myself to do it because black coffee is just so convenient. If you can do
it really is. But so you're the one smashing those cold brews.
Well, no, I drink the teas. When we have the teas, the tea is my preferred caffeine source. I figured out we have cold brew in the fridge out there. Sorry, this is maybe an off-air conversation, but we got cold brew in the fridge out there that's 273 milligrams of caffeine for a 12-ounce cup.
Yeah.
What is that? That's more than my pre-workout, which has me wired if I take a full scoop.
Absolutely.
Like 273 milligrams.
Hey, with all this headline risk.
It's made for people sitting at desks.
Agree. Hey, with all this headline risk, we got to be on top of it. You know what I'm saying?
It's true. It's true. But yeah, I can literally just take a 2-ounce shot of that and get like 50 milligrams of caffeine. So I appreciate having it for that reason, but I don't think anybody should be sitting full cups of that. We're talking Panera charged lemonade territory.
Hey, speak for yourself, man.
You fill up a 16-ounce Yeti with that. You're like your caffeine allotment for the day, and I'm sure people drink 2 of them. Yeah. Crazy town.
Last sidebar. Sometimes I'm not gonna lie, I could chug some caffeine and go to bed like an hour later. Sometimes it wears off pretty quickly.
I used to be that way, but it's really shifted now. Like I have to do the full can't have it within 6 hours of bedtime thing. I'll notice it impacts my sleep. Zozo Pagans, Gus, that stash has to increase your probability of profit by at least 5%.
6.
That's the plan.
6.5%.
That's the goal. You gotta dress for the job you want. It's a concentrate, bro. It's supposed to add water. No, it's busy cold brew. It tastes fine. Like it's sneaky. It's not. It comes.
You're drinking this.
It comes in gigantic bottles. I mean, you're supposed to pour it. I mean, you could add water and cut it if you so choose, but I don't. think
you should add water.
Probably, but I don't think that's how it's meant to be consumed. I think they just want you to go for it.
Yeah.
What's going on, Sergio? Organic farming, ranch. Everybody else in chat. Happy to see all of you. Yeah, but I mean, that's really kind of it. No excitement for me. Just sort of holding the bag, still looking to slowly rotate out of some of these longs, keeping on some of the shorts, and just seeing what the market's going to give us here coming off of these highs. In terms of the broader market, we are lagging a little bit today, down about 0.5%. Which seems like it's funny how quickly things shift because we're sliding this whole time and I'm saying it's a 2% down day, like we could fix this tomorrow. We've seen the way this market is going. Then after this rip we get a 0.5% down day and I'm like, man, we're down.
It's like things are getting real now.
Yeah, exactly. But in the broader scheme, still holding over 7,000 and way up at these highs. So definitely a decision point, obviously a headline decision point coming through for us tomorrow, and just deciding how I want to deploy capital as we head into that. Also, earnings season is pretty much upon us, so it could be some volatility the next few weeks.
No, definitely. I mean, we'll see what we get. To your point, I think the tables turn very quickly. But no, the downside action always feels a lot more aggressive than the upside, even though we just floated over 2,000 points on NASDAQ in the last 7 to 14 days. I don't know why the little pullbacks feel so much more aggressive, so much more intense. But touche.
But yeah, I mean, that's really all the excitement I got on my end. You've been slinging anything over there?
A little bit. We got in and out quite a bit today. A ton of break evens, which I'll go over in a little bit. But we could jump to the Tasty platform. Micron has actually been a little bit more quiet today. Micron has finally been trying to pull back a little bit. It's looking like it's trying to stop putting in all-time highs.
Those expire end of week for you?
Yeah, these ones expire. I think I have a little bit longer, 24 days.
Yeah, okay.
So I might just manage this one by the end of week, call it quits. Take the L on 50% of the credit lost.
I don't know. I think I'd continue holding that. I mean, we might have some.
We're at the all-time highs.
We're at all-time highs. We might have some sweeping volatility coming through. These memory stocks are so goosed up as it is. 430 in the next 24 days doesn't seem out of the equation to me.
I like that perspective
on that trajectory, but it has been seeming to want to reject those lows at the same time. A lot of bottom wicks happening.
To the point that you made, though, we are sitting at all-time highs. So I mean, I think that. I'd feel a little bit comfortable at least sitting in a few more days, and then maybe we can get a 5-point move to the downside, and then I would be very happy that I'm still sitting in this position. So I don't know, maybe I actually give it a few more days. Maybe hold it over the weekend, see what happens, maybe manage it Monday, Tuesday. I think from then it'll be about, maybe 15, 16, 17 days left till expiration. Holding a little bit longer than the rule of thumb, but But yeah, we're sitting at all-time highs. It's always nice to have, right, multiple perspectives because you're like, no, I didn't really look at it from that way. We are sitting at all-time highs. At the same time, what is the IV rank is still 70. IV rank's kind of high on it, actually. But I will say the downside today is finally helping just a little bit. A lot of leaning very short delta in the portfolio. So, I mean, if we got a pop to the highs, we would have no choice but to manage most of these positions and pretty much cut most of them. So right now, the goal is to at least manage most of this before end of day. We have a couple open short positions on the futures. We have a couple contracts we bought on QQQ, which expired in about 2 days. Those have been going pretty well so far today with the new lows that we've been putting in. And then we sold an out-of-the-money call spread on QQQ as well. But the call that we sold was 615. And I mean, I feel like the table's only turned to the upside because I don't think this thing is going to be in the money or sitting out of the money by the time expiration rolls around because 615 is so far down here. And I put that on not that long ago. That really shows how aggressive the market was to the upside. I mean, this thing is sitting so far in the money that it kind of feels like a dud at this point. But we'll leave it on. Since it's kind of at a max loss, we have no choice but to at least allow the next 24 days to play out. So even if we scrap a little bit of those losses back on the call spread, that'll be nice. It'll be a W because it's pretty much been max loss since the beginning of last week. And then another thing that we did today was we sold an out-of-the-money call spread. So we started to step away from QQQ and M&Q a little bit more here. SPY and ES is a lot slower moving than QQQ and NASDAQ. So this one expires in about 7 days. I sold the 715. We collected about $1.65 for it. So just about the rule of thumb, just about a third. A penny under $1.66 actually. But I think it's just going to be more about patience now and then managing these positions correctly. Because if we don't manage these positions correctly, most of these trades can come back break even on us. And one thing we definitely don't want to do since we're in the driver's seat right now is give all of it back and then some. So I think right now is just management as we head into the rest of the week. But I'm really hoping at least for the short term we can at least sit here for a little bit. Not even necessarily saying hopefully we get another leg down and hopefully we keep selling off. I don't know what's going to happen. It's really difficult trading at all-time highs. There's so many fake outs, which we'll check out in the TradingView platform here in a moment. But all-time high markets, not the favorite market to trade, but I think the opportunity is there. And to the point that you made with silver, I think silver is still going to be on the radar as well. I think gold or silver getting on some delta in there. I know today we're pulling back about 4.5%. Shoulda, coulda, woulda. Wish I would have had a little bit of short delta on when we were talking about it, even just yesterday. But with the range that these metals have expanded from the beginning of their run, it does seem that the range is still there. So they're not as volatile like to the immediacy as oil and the indices are right now. But for the range, I don't mind sitting in something like that. So that's all that's been going on in the portfolio. I think Micron, just be a little patient on that one, see what we want to do there. But really just managing these positions. Lastly, we don't normally do this, but we bought an option on the futures contract. We bought that one for about $467. That was down a little bit yesterday. It's up a little bit more today. So maybe we take this one off as well by the end of the day. Usually we'll just use QQQ because those options are typically a lot more liquid than the options on the futures. So we kind of have both of those positions working right now. And it was kind of just to get our feet wet because once again, we could have bought that option on QQQ, but test out the options on futures. We'll see where we go from there. How do you feel about all-time highs? Is it kind of nice to just be sitting in all-time highs? I know Vicky says, I hate all-time highs for trading for stocks. I don't know. I think there's just a lot of uncertainty. Like regardless of if you're bullish or bearish, all-time highs is just one that, a lot of people tend to find quite tricky, like myself, I guess you could say.
Yeah, I'm inclined to agree with Viggy. I don't mind all-time highs when it's when we're really cruising. Like for instance, last year, like when we were on the run, I mean, coming out of Liberation Day, pretty much May through like October, when we were making new all-time highs on a weekly basis, it was a lot easier to trade then because you could just be long biased and trust that the next one was going to come through and just make sure you're never super overexposed to the long side in case things do take a turn for the worse. So that environment I don't mind. I dislike all-time highs in the context that we've gotten them here though, where it's like this huge, run to the upside, and it feels like things might be overextended, but at the same time, I know some more bullish news would push us higher. You don't really want to be neutral in this volatility environment. So this current environment of all-time highs, I dislike, although generally speaking, when we're making all-time highs in a healthier and more frequent way, that is an environment that I like to trade. But this current one is it is a little gross.
Yeah, no, it is definitely weird. We got to check on the bird situation, though. We got to check on the bird situation. We got to check on the car situation. Any recent headlines that anybody else has been hearing? I know we're pulling back a little bit on car. Is this the blow-off top that we're finally getting?
Now? Yeah, this thing is.
I don't know.
Insane.
We put in a high at 747, 748-ish, sitting at 617 now. Just a little bit of a pullback, and we're down $100-something bucks. But I mean, from the close yesterday, we're still up on the day technically. So technically today is another consecutive green day it's putting in, even though the bar is red right now. The daily candle's red right now.
Yeah, this thing is still just insanity, untradeable insanity.
Earnings.
Just for funsies, I went to see what it would cost to short one share of stock, and it is $185,000 is what you need to be allowed to short one share of this. At least you got to have that on margin.
Yeah, those brokers are like, yo, you cover your own risk, buddy. If you want to touch that, cover your own risk.
I mean, these spreads on the options are insane. I mean, at the money, 10 DTE is $1,600 notional wide, $16 wide spreads on the options chain. I mean, yeah, even these 3 DTEs, what's that, $14 wide at the money?
Golly.
It's absurd. I don't know how you're ever supposed to get any involvement with this, to the short side, that is. The two owners of car, gross PE firms. Yeah. It's SRS Capital Management and Pentwater, I believe, are the two big owners of Avis, and then the CEO owns a lot of the remaining float. So that's sort of the reason for this, is that there's just not that many shares outstanding. They also just did they filed a prospectus to issue 5 million new shares towards the end of towards the end of March. I want to say March 27th. But it wasn't just like they were going to dump 5 million new shares. It's like they can issue 5 million new shares at their discretion.
Oh, so they can dilute the pool.
Yes.
Oh my gosh.
Of course. If they so choose.
Of course, and they probably will dilute it.
Yeah,
I bet they will dilute it.
I would think so. You'd rather raise capital at these prices.
Yeah.
If you're going to sell those shares.
It doesn't seem like such a healthy company for it to be even doing this behavior-wise. Huh?
Well, yeah. I mean, do you even want this? Like, sure. I mean, your valuation is through the roof, but like nobody's buying this. Like, you can't go to a shareholder meeting and say, "Oh, we've made 600% growth this year." It's like, nah. Everyone's gonna be like, "Shut up! What are you talking about?" We know what's actually going on here.
Yeah.
So yeah, it's weird. I don't know how they'll choose to proceed on that. I don't know how many of those have already been pushed into the market. Perhaps they're all in circulation right now, but they. I believe the prospectus was filed in such a way that they have like a 6-month window to distribute them as they see fit.
I'm gonna go ahead and cover at least.
You guys see the wide ass spreads in USO? Yes, Chuck. I have. I actually have some USO puts in the account right now, and they're long puts. And despite USO being up 5%, I was actually green on this position for like most of the day today because of how wide these spreads have become across the board. If I was car, I'd be capitalizing on that. Yeah, I agree. I mean, you can't hold these levels forever. It's like what I was just saying. If you thought that there was any possible way that you could sustain even 10% of this growth, maybe you try to do something different. But I think, I think it's very reasonable. I mean, maybe you could hold on to a little bit of this. I mean, how far does this thing actually drop when it drops? I don't think we're going to just drop straight back down to 100. It'll probably take at least a little while to get there. So maybe they're planning on just trying to get that to Plinko somewhere in the middle and wind up sneaking out of here with a 200% increase once everything actually stabilizes. But yeah, if I'm car, I would be putting those new shares out right now and just getting my hands on that capital. I mean, you're talking about maybe being able to get twice as much for those 5 million shares as you'll be able to
ever,
3
probably.
weeks from now. Yeah, probably ever.
Probably ever. Dudes, post PDT rule, would the broken wing butterfly be the most defensible strategy for short-term trades? You know what? You just gave an idea that we'll probably have a lot of research moving forward on things like that, because what we could probably do is whip Dr. Jim in here one of these days and kind of ask his perspective and his opinion on a lot of these things that have to do with the PDT rule, because I mean, that brings a whole new variable into the equation. So I actually really like that idea, and I didn't even think about it. We could probably be slinging a little bit more verticals regularly if we wanted to, more more risk-defined strategies without having to forcefully hold these strategies with the PDT rule. So that's actually going to be pretty cool because I know some of those butterflies too are short-term and paying a debit for some of those. So we'll have to ask Dr. Jim, get his thoughts on a lot of those things.
Do you think that you'll find yourself trading futures any less once the PDT rule is lifted?
That's a really good question.
Isn't that kind of,
I think so.
Kind of why you got into futures in the
Yeah,
first place,
100%. I think maybe so a little bit. I think you know what's interesting? I think some of the scalps, the futures are such efficient products. The liquidity on them is so easy to get in and out at like literally the pinpoint exact price that you want because the futures market is so liquid. So in that sense, probably if it's like a longer term swing trade on the day, like for example, today was pretty difficult because it forced you to hold a lot of these trades a lot longer than you typically would. So even though they're both still a day trade, if it were to be with the options contracts, those 0DTEs would have lost quite a bit of value, even though it took so long to sell off to the day lows today. So I think for some of the scalping, I think some of the options contracts could be really interesting if able to manage the risk appropriately. So
yeah, and
I could imagine.
You could be a little bit looser with your stop losses. With
You're absolutely right. You're absolutely right.
Not, you know, this giant product that these little minute swings can really burn you. You know, you can hold the SPY through a $2-3 swing with some options, and you're only going to be taking a $150 hit. That's like a lot more tolerable than if you were to hold.
That's a really good point.
NASDAQ through a 0.5% swing, which is gigantic.
I'm curious to see how a lot of the exchanges and brokers will kind of see behavior changes, even from their customers, you know, after they, you know, get a lot more data. I'm curious to see how the change will be. Because once again, it still doesn't feel like it's real that the PDT rule is going to be gone. But I could just imagine that the 0DTE options are probably going to explode and just so many more ways to be creative with the trades. What's going on, Reds Media? Sergio, earlier I had seen you say, what's going on? What's going on, guys? It's good to see you too.
Yeah, most defensible strategy. That's interesting. Yeah, research team would need to work on that. That's kind of a loaded question. I would really have to sit and think about the pros and cons of all of the strategies.
Yeah, and
post PDT environment.
I didn't even think about like getting in and out of butterflies in the same day.
Yeah.
Like, you know, like you can get so creative. It's actually kind of crazy because like you have your trade assumption and then you can really make that up and express that idea in any which way you want to, which is pretty cool.
You can go the other way. It doesn't need to be a process of elimination of like the first thing is, okay, well, PDT exists, so what is at my disposal? It's the opposite. It's like everything is at my disposal.
We'll have to.
What I want to do.
We're going to have to get really creative because I think, you know, I've heard even Nick talk about before setting up certain strategies to where it'll benefit from gamma a little bit more later on. So it's like, what if you think you're going to get a short-term dip and then you think, we're going to rip after that? It's like, how could you get creative and set up an option strategy that capitalizes on a short-term dip and then a rip, or a short-term dip and then an extended move a week later on? So we'll see how creative we get. We'll see what we get.
Yeah, absolutely.
Got about a minute here left. We can quickly jump to the TradingView platform just for 2 seconds. This is a trade that we have on right now. We just covered one of them down here at the lows. What would be really awesome to get, we're going to hold this until break even, but what would really be awesome to get today, who knows if we'll get it, is to at least take out these lows, these previous lows from Monday, and then this low was from Sunday night. So we're going to at least try and hold that one contract until then. But if we rip back to the value area low, I'm going to manage the risk. We're going to have to give back the $220 in profit. That's fine because we're looking for a larger swing to the downside here. Our next level of value is sitting at 26,287. So we're going to try and hold the options for that level at least. If the market reverses on us and reclaims these levels, we have no choice but to manage some of the delta on in the portfolio. But if it plays out, it could work out pretty well, but it's going to come down to how we manage the position. I know we're out of time here. Anything else top of mind before you wrap for the day?
No, I don't have anything on my end. Just being very careful. This, like I said earlier, all-time highs are usually an environment that I like. But with how quickly we've reached these, how much uncertainty still remains, trying to proceed with an abundance of caution here until we have a more established and healthy direction.
Agreed. A lot of uncertainty here. Viggy, Reds Media, and Ranch. Ryan, everybody else, thanks for taking the time to hang out with us. We'll see what we get for the rest of the last couple hours of market open. It's looking like cars flipping back pretty green on the day. Might retest the highs. We'll see what we get. But with that being said, that's going to do it for today's segment. Be sure to stay tuned for more coming on next. And we'll catch you guys next time. Peace.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was not a paid, you're not getting paid for this advertisement.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Design if they wanna buy me, baby, I'm too pricey. Yeah, I'm cherry, I'm nice things. I'm ice cream, I'm melting. Well, I'm high speed, wanna bet. Look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip. Everybody count to 3. Okay, you wanna see?
We're back. It's still Tuesday, April 21st, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Jamal Chandler. Jamal, I'm just going to get ahead of this. How's Cancun? The Bulls aren't in the playoffs.
You know what? That doesn't even sting. It's fine because I've already made peace with what happened last night. Yeah, that's right. I got back up. Last night, wow. Jeez. What happened? Oh, that's ugly. That's an ugly loss last night. You know, that's the kind of loss that could lead to something. I mean, I don't know.
What could it lead to? I'm already a Mets fan.
You know what? That's what I'm saying. I mean, you guys.
FanDuel put up prop odds, Jamal. There's a special page on FanDuel now. When will the next Mets win come?
Is it 11 games still, or is it 12 now? I haven't been able to keep up.
It's 11. You know, I had these days circled on my calendar too. It's like, oh, we're going to play the Twins, the Rockies, the Marlins, the Nationals. Like 18 games here. We're going to go 18-0.
And why is it? What's dude's name? Mom Diamond. Why is it his fault?
Because he hugged Mr. and Mrs. Met.
Oh yeah, she has some cheeks on her too. Anyway, I saw that video today. I was like, is she supposed to look like
this? This is a safe space, Jamal. Tell us more about that.
It is. I could say that about a character, right? It was a character. It's a character. We're not talking about a real person. Mrs. Met's not a real person. It's a character. I can say that. I can say that.
A guy plays Mrs. Met. It's a little known secret here. But anyway, go on.
Well, then that's even more interesting because that suit fits in an interesting way. No, back to this collapse last night. I mean, that was rough, Chris. I don't know how you went to that. You know, I almost texted you. I was like, he's probably asleep, but he's probably not. That was really rough. It's man, upstart Hawks team. I tell you, you know, I've seen this before.
It's nice seeing that someone I knew from college, CJ McCollum, do well. He was at Lehigh when I was at Lafayette, and he had come over to our fraternity house a few times to party, which was fun.
He's actually a cousin of this guy I know here, and they look very similar. This guy used to work with at Finnery. He's a cousin of his. Yeah, he was upset last night too. He was upset.
Me too. I was upset too. I'm like, CJ, how could you do that? Okay, so let's go to the slides here. We're wasting time because we're getting ready for a deadline here. It's not the end of the show. It's the ceasefire coming up tonight. Is it Wednesday? That's what President Trump said. But the Pakistan delegation this afternoon said 7:50 Eastern time, 4:50 a.m. Pakistan time, PKT, Jamal, and that is correct. So don't Google it.
No, that's not how you... It's a fun Tuesday here on Futures Power Hour.
Okay. I see where we're going today. JD Vance is not in the air on his way to Islamabad. That was the report yesterday. Today it's not. Oil volatility is up. Oil's at session highs last time I checked, above $91 a barrel right now. More importantly, how is volatility evolving over the course of the session, Jamal? I think that is the number one concern here. And what we're seeing in the futures curve, at least in the VIX futures curve, volatility futures, it's not exactly the most reassuring thing. There was a point at the start of this week, or at least the end of last week, when we had a sub 18 print on VIX. When you look from VIX to the back month, you were seeing 6-7 points wide. Today, it's only about 4 points wide, and it's pressure on both ends. You're starting to see that we're getting this lift here at the very short end of the curve, right? And then all of a sudden the compression's coming back in at the bottom, a little bit of a twist right now. Jamal, I know we're not back into any sort of backwardation like we were a few weeks ago, but the movement that we're seeing today as the market's coming off the highs, it does raise an eyebrow because it is not something we have seen in, say, 2 or 3 weeks.
Yeah, I mean, it's the most meaningful pullback we've seen in the last several weeks, like you said, and of course, coupled along with that, we're seeing oil making a strong move again. So it's almost like deja vu, and you start to wonder if this is the fear that we've been worried about. What everybody's saying, too far, too fast. Is this really the materialization of that? It's hard to say as of yet, and we've seen these type of things, you know, before when we're approaching catalysts, if you will, the goalposts. Like you said, Wednesday, supposedly the ceasefires is there's not going to be any extensions on that. So I guess we'll find out real shortly here what it's going to mean. But I don't know. I have a hard time believing this means that we're going to drop back down to like 6,600, 6,500. And again, if that happens, I think it would be a stair-step situation. I don't see us dropping 600 straight points in a line as a result of the ceasefire ending and undoing all this good that's happened in the market. So I think it's been, I think this speaks to more as how you should be trading over the last several days. And if you haven't, maybe even now, reducing risk. I mean, that's what I've been trying to do the last 2 days, closing out different positions, longs and shorts, because some of my shorts, like probably many of you, are 200 points to the downside or, 150 points to the downside. And I just don't foresee that type of scenario just yet. Oh, you're on mute. It's like, that is a hell of a pause.
That. Yeah, right. Really letting that marinate. The market's been conditioned in a Pavlovian sense that if there are dips, it's simply an effort to get long again. I mean, how many times over the past 3, 4, 5 years, if first flush the market's down 5%, you bought and then went away for a month, you weren't looking at something that was doing a little bit better. Maybe for a period in 2022 that didn't work. But for the most part, again, you start buying by May, June of that year. By year end, your position's back above water 6 months later. So volatility going up right now. What does it mean? Well, throughout March, Jamal, we didn't see much stock selling. We saw a lot of hedging activity. Maybe this means that we're going to see more demand for puts over the intermediate period as we work this out. But then again, it's such a fluid situation. The market seems to be taking it day by day, 5-minute macro, not committing to any sort of view because the news flow could change. We could see a plane in the air. We could see a delegation moving, and all of a sudden what the market was reacting to, it is now old news. It is now stale. But right now it's fresh. The idea that we were supposed to have a delegation of American and Iranian representatives meet in Pakistan again for negotiations was helping keep the market higher in recent sessions. J.D. Vance yesterday was supposedly on his way to Islamabad in the air, according to the New York Post. White House says that he's there right now. But stocks are off their lows as we've digested this news. We did fall below 7,100 here a few minutes ago. And just looking at the chart right now, it's jumping up back to 7,124. This is going to be a fluid situation, right? The market's clearly waiting to see if one of these headlines drop, to see if there's an unfreezing of the talk progress of getting an extension of a ceasefire. If it's anything to watch right now, it's probably oil intraday, which is guiding effectively everything else. As oil breaks out this morning and starts to run higher back above 87, 88, gold goes down, stocks start to struggle, bonds come off, the dollar starts rallying back. It's too early to commit to oil being the only important thing once more because we've clearly moved on to the macro and to the earnings. But oil is clearly the thing that we're watching, at least for the remainder of today's session, as we wait to see the ceasefire news.
Yeah, definitely, especially me, since I'm short vol in there, and I feel like a lot of people are. But look, this is back to being a headline-driven market again. And I say back to because, honestly, in the last several days or so, 7 to 10, it didn't matter what was said. It didn't, and I feel like there's been a lot of manipulating of the media in general, but it didn't really matter what was said. The market made its mind on October 31st that it was going to go up, and it's just been straight up from there. Now the headlines are starting to matter again. Now it's a matter of, because again, we're getting close to this quote unquote goalpost that has been moved to the ceasefire. And so once again, I guess we're going to wait and see if it's going to hold or if the taco trade resumes itself.
Whether or not it resumes itself, 18 minutes ago, U.S.-Iran diplomatic process is stalled, awaiting a response from Iran. Pakistan a few minutes ago saying that there's ongoing contact with Iran regarding the confirmation of the delegation. All that news is well and good, but there is a blue line here on the chart that matters much more than that, Jamal. That little horizontal line where we caught ourselves this morning on the sell-off that ended about 20 minutes ago, and maybe it continues, that's the former all-time high that we established back in January, on January 28th. It also represents the one-week moving average here today, up at 70.95. So you have 70.98, 70.95, a low today of 70.96. That's right in that zone. And the market's starting to get a bounce. I'm just going to put this out there. The S&P 500 right now, as long as we're holding above that 70.95 area, the bulls still have it. But if you start to leak below there, okay, too far, too fast. We've lost the momentum. We've cracked below the former yearly high, the former all-time high. 1 week moving average is gone. Maybe you get a little bit more of a pullback taking shape then. But that is the only level to watch today. Forget the news. The charts will tell you what you need to be looking at. 70.95. That's what divides the bulls and the bears right now.
Yeah, I mean, the market is still very strong right here. And again, it looks, it has the look of something maybe potentially scary, given the fact that, like we've said, we talked a whole lot about this too far, too fast type of situation. But I mean, look, man, we're still basically, futures is still holding 7,100. We've danced around that line. VIX, same deal. The VIX index is danced around 20 today, so that's fascinating. Oil dancing around 90.
Headline, by the way.
What's that?
CNN just announced that Vance is departing to Pakistan tomorrow morning.
Oh, okay.
So 7:50 p.m. Eastern tonight as the deadline. One may presume that we're going to kick that down the road a little bit because JD Vance and co aren't going to be in Pakistan until past the ceasefire deadline ends.
There it is. That we just wait from here on out. Man, I'd be surprised if we close. Like, I think it would be something to worry about if worry is a strong word. If we close below 7,100. We don't do that. Like you said, 70.95. I mean, I think somewhere in that range, that's something to like, ooh, as this is still developing, is that something to keep an eye on. But until then, I mean, look, this is a market where I want to be maybe shortfall mostly, and with other things that we'll get to talk about later. And I directionally at this point, I don't really have a lean. I'm starting to get to that point. I really don't have much of a lean directionally. I think it's entering earnings season, and it's anybody's ball game at this point.
Anybody's ball game at this point. I think the level is just the one to watch. I know IVR is up at 50 right now, Jamal. That feels a little rich given what we're seeing, and it's a 1992 VIX, not ready to commit to jumping back above 20 here, which I think is something noteworthy unto itself. When we take a look at the volatility, though, broadly speaking, as we started off the show, I know that we're in a place right now where the market's bounced back a little bit here. If we were to go down to that 1 minute time frame, we could see here how this news of Vance potentially leaving tomorrow morning over the past, say, 25 minutes that it's filtering out has led to a little bit of a vol compression right now. Oil prices likewise have come back in. Those were tracking above 91, near 91.5. They're back now down to 89.30. So this market is clearly riding the headlines right now, Jamal. The highs that we had the other day, though, what's your perception on us punching through them in the short term? I know that a lot of our focus here is on these longer term charts, but just look at the OCC data, 30% of people are trading zero DTE SPYs right now. What's the number one consideration that if you're one of those shorter term traders that you're paying attention to? Is it the shape of the vol curve? Is it the level 70.95? What say you?
It's all the above, really. But I mean, that's one of the reasons why I decided to flatten out here. Look, this has been a massive run. I mean, not only just a run to erase the deficit that we had in the market, but get back to all-time highs and exceed them. So I think when you have that type of situation, I'm not saying that we shouldn't have done that. I mean, you could argue that, save for this manufactured crisis, if you will, we probably would have been here anyway, right? And how does that chart look? Do you like it better at 70? Do you like it better being at 7,100 with a V bottom situation, or do you like it better that if we had just naturally drifted there, right? Like, it doesn't really matter the fashion in which we got there. And I think, it bears mentioning that trading wise, you might want to flatten out some deltas in this general area, because this is the type of thing that's going to happen. Now that we're getting here and you have this ceasefire goalpost, what's the next move? Nobody really knows. And I think until we get a little bit more confirmation, or if we get a little bit further away from this catalyst that has been the U.S.-Iran war, then maybe we can start to look at markets clearly. But it is a little hard. I mean, sure, we can make technical analysis on this, and we can draw all lines, but the fact remains is this has still been a market that has been driven by headlines. And so at any given time, these headlines can erase any analysis that we make. And so that's why I had positioned myself to be mostly long heading into it, trying to get a few shorts here and there on the way up at 7,000, at 7,100. But now I think it's a time to kind of flatten out deltas and see where the next direction is, or do we start paying more attention to earnings?
We start this week with a gap open lower Monday. We spend all day just grinding to the upside. We ultimately close that gap here in the early morning hours today. When we do pull back, Jamal, technically we have set a higher low than where we started the week. That low comes in at 70.85. One of those little micro level clues that maybe the bulls still have it, right? The juice is still there. That's why I want to pay attention to this 70.95 level. we can get back below the former high. You start to chip away. Then I get the weekly low. We had a gap open lower. We cover the gap, and then we move below the opening print lows. Not exactly the most bullish type of setup. So short term, that could lead to a little bit more weakness in selling here. The macro calendar really isn't all that much in focus this week. I know we had retail sales this morning, Jamal, and those were better than expected, in part because people are spending money well beyond the gas station. For example, X autos up 1.9% versus 1.4% expected. The retail sales control group, which strips away everything that wouldn't go into GDP. So you're not going to double count gas, up 1.7% versus 1.4% expected from 0.7. So good data, good consumption data, good earnings data thus far through the cycle. This morning, we had GE, UNH, RTX. After hours, it's going to be Intuitive Surgical. Tomorrow, though, Tesla, a little bit more important here. Just broadly speaking, Jamal, we're starting to get our way into these tech earnings. Tesla, Intel, over the next few sessions. Do you see either of these as tentpole type of earnings releases that matter to the broader market, or are they now being perhaps subsumed by this latest bout of headline paranoia that we've shared here recently?
No, I think this is going to be one of the more interesting earnings cycles based on what people say regarding how this current situation has affected their businesses, right? Tesla's obviously consumer discretionary, and I mean, they're sort of, like you said, tentpole situation of tentpole company in that, they're consumer discretionary. And so, how many people are being affected by this scenario? Retail sales came in better, but in general, people seem to be willing to spend despite, higher costs, which things are definitely higher costs. I know those eggs that you buy are still somewhat a little on the expensive side, right? So people just want to. No, they're lower. Wow. Okay.
Egg prices are cheaper now than they were prior to Trump taking office. I bought an 18-pack, two 18-packs on sale this weekend from Eggland's Best for $2.99 each.
Wow, that is pretty cheap. Maybe I need to pay more attention to egg prices. Nevertheless,
I'm building my strategic egg reserve again.
Nevertheless, I just think it's going to be fascinating to hear what some of the companies say for this time around. I usually, it really takes situations like this for me to see, our company's going to be talking about their current situation with the dollar and how it's affecting their business, how costs are in general are hitting them. So I do think these are going to be interesting. I want to see, I guess, if this is going to be one of those situations where earnings are going to be big blowouts, or if they're going to be big fails. I mean, as a whole. So I'm always fascinated, but this time around, I think is really interesting based on the current dynamics in the economy.
Jamal, before we get off of stocks here, you and I passed up the opportunity the other day on Signal versus Noise to discuss Avis because it's Avis.
Yeah.
For those that don't know what we're talking about, go over to our YouTube channel, Tasty Live Show, and check out Signal versus Noise. Jamal and I break down significant options trades. We see these big prints on the tape, and we talk about them. You and I decided to talk about Meta the other day because it's Meta and it's not Avis. Meta, of course, is one of the more liquid stocks in the world. But when you see something like Avis,
almost same price point.
Yeah. Exactly. Who wouldn't trade a share of Meta for a share of Avis these days? Reddit, likewise, is picking up with this activity. It feels like memes are coming back into play here. Do you pay attention to this kind of stuff in the market as a sentiment indicator?
100%. I mean, this is something I've been paying attention to. I've been all over it. I find it fascinating that there really is no real story. I mean, you can make up a story. I'm hearing stories about TSA being related to this. There's no real reason why this stock has gone from $100 to $600 within a short time period, other than something going on with the float and the guy who owns the company owns most of the float. So owns most of the shares, I should say. This is a very unique situation. But look, you're seeing other names all of a sudden start to pop up. You mentioned some of these mean names. I see you got Lucid up, but then I've also noticed ticker POET. Poet is one of them. I've seen a few other names. BlackBerry the last 2 days. I mean, who's trading BlackBerry anymore? Who even has a BlackBerry anymore? I want to know. Nevertheless, these names, Double B, BlackBerry, these names are moving. And one name doing this
around here somewhere.
What's that? BlackBerry? You
I
still
still
have
have
one?
an old BlackBerry. I still have one in some box.
I mean, it was definitely one of
take it
my.
out for the kids.
It was one of my more favorite phones. I will say. I used to. I mean, that was one of those phones where you could literally like text on and you don't even have to look, just because you could feel the keyboard. That was kind of fun. But I pay attention to this because, like I like to gather data. This is my scientist background. I like to gather data before I make assumptions. And you're seeing car moving, and by itself in isolation, maybe it's nothing. But once you start seeing a bunch of names do this. That people are saying, car is going to take the market down. Well, no, it's not. It's just one name, and it's like $34 billion market cap. It won't by itself, but in aggregate, when you see car, you see poet, you see BlackBerry, you see these type of names, that's a situation where it's like, okay, now that we've had this huge run that we've had, people seem to be piling in other things and trying to find alpha, and that's when usually we see a pullback in the market. What size magnitude in the pullback? Well, I don't think it gets us back down to 6,500 to 6,400. Only the remnants of war, again, I think can do that. But that's usually when you see a pullback. So that's why I paid attention to it.
Yeah, there's just, I have a stock screener up here, the most shorted stocks right now. I'm looking at have the biggest percent changes today, at least for stocks that are trading above $10. There's a kind of a read through here. Tech, AI, green energy. That's really where you're getting the squeeze, except for Groupon. Although I suppose, given all the inflation that's coming, people are going to be using Groupon more. Jamal,
never used it myself.
Maybe that was the. I used it a few times, like a decade or so ago, like post global financial crisis, living in the city, and then you go to like a restaurant during restaurant week with one of like the Groupons, and they'd be like, "Oh, you're one of those customers."
Exactly. Yeah.
We only have seats at the bar, right? We only have seats at the bar right now.
Yeah.
You're like,
no, it was big here because they were headquartered here, so a lot of people used to use it.
I think that we can move on to bonds in a moment. I just want to take a quick look at the Nasdaq. It was down 0.5% earlier. It's only up by 0.15 now. Very much like the S&P has had a close above its 1 week moving average, effectively every single session since March 31st, right? If we were to take this former high that we had up here, where's the market dancing around right now? January 28th high, we have our 1 week. We haven't closed below there today. We've tried to get down there. We haven't. You can see how the S&P and the Nasdaq have that very similar technical structure. If you lose your former January 28th high, you lose your 1 week moving average in both. You see a pretense for a little bit more of a pullback. And then why not make it 3 for 3 here? Where if we take the yearly high that we carved out in January in the Russell and we put it up against our 1 week moving average, Jamal, you know what? I see a pretty good line in the sand near 2765, 2760. So that's it. If I'm a bull, 2760 for the Russell, 7095 or so for the S&P 500. If we're above there, we're good. If we're below there, the chart doesn't look as good anymore, Jamal. And, we've lost a lot of upside momentum, and maybe we need to have a 2 steps back before we can take another 3 or 4 steps forward.
Well, let me ask you this question. And I'm unashamed to say so, I really haven't read much of the war news. I can't.
Good for you.
I can't try to be a war strategist. I can't. I'm not. And I also feel like, to be totally honest.
If I'm not doing that, Jamal, I'm watching the Knicks. So, I mean, what choices do I have here?
Yeah, no, okay. neither one is good. And I also feel like, and I don't think I'm alone in this, that Trump, and maybe rightfully so, has found a great way to manipulate the media to use it to his advantage. So this is one of the reasons why I also am like, well, why am I reading this? I'd rather just look at the market. I can see, okay, VIX is in, dollar's down and oil is down. Things are de-escalating. But what I'm getting at is, what kind of headline do you think creates a situation where all of a sudden we're back at 6,800? What kind of headline would that take?
I think it would be an accumulation of headlines. I think the first several blushes of ceasefire over, right? I mean, Jamal, you tell me, if you see a headline tonight that the ceasefire is over, fighting to resume, are you going to go, oh crap, I got to sell everything? Or like, let's see what happens next before I commit to a strong bearish conviction?
I've already said I'm in to see what happens next because I'm just looking at markets.
Well, look at what happened in March, right? It was steady. It wasn't a crash. It was just percent here, percent there, 0.5%, up 2%, down 2.5%, right? Edging lower. Maybe that's the market that we go into, where the market's like, we don't want to commit to being full bears, because we've seen how Trump tacos. But, we have an opportunity to hedge a little bit. We can do that. So I just want to watch the level here. If the levels hold, then we know the news is holding up. If the levels break, then we know something's changed. And that's all there's to it. And, quite frankly, if the market tomorrow we wake up and S&P's at 7,000, and then on Thursday we wake up and it's back above 70.95, then we're back in breakout territory and we adjust and keep moving forward. But can't get married to any of you right now.
Yeah, no, you really can't. I mean, again, things are ever changing, but for the most part, they seem to be good, and it just seems to be noise. Speak on the signal of noise, and I'm going to ignore the noise.
We do have a day. Don't like that arrow. We do have a day where the bonds have fallen back here, Jamal. They're off by 0.5%. It's another day where we are capped by that very friendly 50-day moving average. It feels like we were here last week when we spoke, because that's right. We were here last week when we spoke, when the market was challenging its 50-day moving average. Notes going nowhere fast either. Those are down by, we'll call it about 12 ticks. Uptrend off the recent lows is still holding up for the most part. And below the 50, nothing's really changing. Jamal, volatility is back a bit though. 25.1 IVR here in ZN. We did have some readings in the teens this week. Last week, 14.5 was the low on April 17th. Talk to me about this. Do you see anything that's worth trading here? This has been a market going absolutely nowhere for now 2 weeks of a torrid equity market run.
Strangle, you sell it, you don't even think about it, or iron condor, honestly. I mean, that's about the only plays you can make in here. Directionally, like you said, we've gone nowhere, so why try to pick a direction? It's been hard to do that. You had to be perfect on the timing on any time on bonds more recently, and if you haven't, you've lost. So I think, when you sell the vol pops, that's really the best you can do. Is there Armageddon on the other side of it? Well, I don't know. I mean, do we get to 4.5% at some point in time? I mean, it's possible, given everything that we've seen, but you can't forecast that. I think you just try to trade the vol as it pops and, look for it to come back in. It has breathed like that, and so it's been kind of, I feel like a lot of times when it's popped, it's come in fairly quickly. So I think you just got to be nimble.
I don't know what to do here. Going nowhere fast. Is the Fed going to be able to cut rates? Did you listen to Warsh's hearing today? Does it sound like he's going to be in a hurry to cut rates? I actually don't know if he's going to be in a hurry to do anything.
That's political theater, isn't it?
Well, he's like, listen, Fed speakers, they talk too much. And I don't believe in forward guidance, and I don't believe in giving rate forecasts. Like, okay, so then what do you believe in? I don't know, Jamal.
I mean,
what I will tell you is that it looks like that the Fed is still going to stay stuck. Poly market here today, right? I know some people have said, oh yeah, the confirmation hearings are going on. He's clearly going to get confirmed. No, I mean, if he doesn't make it out of committee, because Tom Tillis says until the investigations are over, then he's not going to be the next Fed chair. John Thune, the Senate Majority Leader, said the investigations need to end 2 days ago when talking about Powell and Warsh. So we can have this confirmation hearing. Right now, it looks like Powell is going to be the Fed chair beyond next month as things stand, which probably means no rate cuts in the foreseeable future.
I mean, there's plenty of seats in that room, right? Why is it that, there's more than 3, and there's certainly more than 3 that are visible to the camera. Why is it that Larry Fitzgerald is in the screenshot? What is that signifying? Kind of interesting, isn't it? Why do you have a Hall of Fame wide receiver? I know he's your friend. Why is he sitting?
Hype man?
Huh?
You could have a worse hype man than Larry Fitzgerald.
No, I'm not. I'm sure. My point is why is he there? What is he there for? I mean, I know he's there as a friend. I know but he could sit anywhere. He's sitting in the shot. It's signifying something.
And Kevin Warsh's financial statement is worth going through. It reads like a Silicon Valley investor's like dream portfolio. Early SpaceX investor. Nice. Very nice. In fact,
very nice.
Bonds, I don't know where they're going. We talk about the Fed and the confirmation hearings, and look, volatility has come back in a little bit today. Oil prices are up. Gold is down and the dollar is up. That's the dynamic that we're working with here. Although maybe the fact that treasuries aren't down substantially, maybe we've wrung some of it out of the system. The point is there's a liquidity reach again in today's market, right? There is that kind of match and price action right now where you could tell the story. Folks are selling their gold and their treasuries, their safe havens to raise capital and cash because just in the event that no ceasefire is reached, then energy prices are probably going to bump back up in the middle of the night at the front end of the curve. And that's going to make obtaining the energy our countries require to keep moving forward and avoid political strife. We're going to have to pay up for that. So we need cash to do it. So this is going to be the thing here, Jamal. We have notes and bonds, very much like our equities, where we have a former low from January. If bonds break below there, it means that we've obliterated the low from April 17th. Why does that matter? Bullish engulfing bar here, set a new low relative to last Thursday, closed above the Thursday high. If you break below that low, you're also below the low that we had from January 20th. So I'm watching that for notes and bonds here. If this thing's really going to accelerate to the downside, those engulfing bar lows that also coincided with the former swing low for the year, those will have to be lost. And if you start to see 111, 110 and a half print, something's changed. And that's probably going to be bad news for the stock market. I'd look for like a 111 print in ZN to see if we get a move below 70.95 in ES. And if those things are going hand in hand, short-term reacceleration or reignition of maybe an early March, mid-March type of environment when it pertains to the war.
That's a good point. I mean, that's probably the one trade that you can probably do. If you are short oil vol, like I am, and you are long equities, then you can probably feel comfortable buying, you can pick a direction in bonds to the upside if you so choose. Again, I mean, it's somewhat of I hate that we got just an offsetting trade. I won't call it a hedge. It's just an offsetting trade, right? Because again, short vol and long the equities are basically the same trade. If you decide that you're a little bit worried about one of those getting hurt in that oil vol continuing to go up, like we've seen today, and markets coming down, being long bonds theoretically should work. Why it's not working today, I am not so sure to some degree. But again, this has kind of been the market that we've seen. We've seen the sell-offs. We've seen more of the interest rates going higher, obviously, right, than bonds being sold off throughout this duration of this war. And so I think it's just one way to play the other direction. But for the most part, it's probably just easier just to sell the vol if there's little pops. I've largely I haven't touched bonds throughout this whole thing, honestly. It's been more. I've just had better success trading equities and or gold and oil vol. I mean, I haven't touched bond vol. I haven't touched bonds that much throughout this whole thing.
Yeah, I just no interest right now. Oil at session highs. This is the headline that I wanted to see here. Jamal Juan Soto rejoining the lineup tonight. Oh gosh, did we need that? CLM6, $89.50 here. It's a 60 IVR. So vol has started to bounce back ever so slightly. We had hit lows on Friday in the 38s. And you can see that we're staying above what may be perceived to be a neckline. I know lots of commentators are out there saying, let's look at this head and shoulders pattern just like that, ignoring the original spike highs that we had at the start of March. But granted, let's just play that game here, Jamal. If you think that oil's topping out, you're looking for a move below 80 and then a sustained move down below there for this even to make sense as a particular head and shoulders pattern. And then you're talking about the distance between the head and a neckline around 82 or so. And that gives you a target, maybe 65, 64, 63, depending upon your highs and lows. Technically sounds good. Fundamentally, there's a problem. What are the odds that we're getting back in any sort of reasonable expiration cycle that we're looking at here, Jamal, next 30, 40, 50 days, where we're going to go back to our pre-war lows in oil, knowing the scope and scale of the infrastructure damage and the pipeline shut-in and the number of tankers that are displaced. So the way that I'm approaching this right now is I'm still looking, we're not going to run up through the highs here. We're not going to break down through the lows. But if we were to start to see a head and shoulders pattern play out, I would be less inclined to buy a 65 put than I would be to say have confidence to sell calls on the upside. Because if the market's going to commit to a move down below 80 in the front month contract in CLM6, you have to figure that the news flow is supportive, that the strait's actually reopening this time. And it's not just another Boy Who Cried Wolf. We're opening it, we promise. And then nothing changes.
Yeah, that's my bet. I'm not even sure if it's essentially where you're what are these yellow lines?
I just took the range basically from the low that we had pre-war to the highs that we had in April, ignoring the illiquid panic spike highs that we had on that Sunday evening.
Well, the 0 and the 0.5 line are essentially where I have iron condors lined up. As a matter of fact, the downside is more of a 76 and is in the 70 is that 76 strike 76 and there's 2 points wide to 74, and my upside is 98 to 100, just a little bit inside there, and that's where
what cycle?
In the May 14 cycle, which has a decent amount of volume right now. Yep. Or maybe the other one where the options are 14. Yeah.
There we
14.
go. And you said 74, 76, and then 98, 100.
Yep. That's where I've made my bet. I mean, look, the obvious point here is oil vol is some of the highest vol in the market right now. And so that's the vol that I want to be short. Not often do I love selling vol, but I love to sell high vol and things that are very liquid, and this is one of them. And I know it's a little scary right now, but I think when you've had major shocks, a lot of times it is a little bit scary to sell vol, because you're like, man, it's recency bias. We were just at 100. But again, we've seen so much de-escalation in this situation, and I know we have a ceasefire and all of that going on. But when you look at it on the chart, those are the areas that I want to try to attempt to sell some vol in, and I think it's worthwhile doing. So the other part of this is believe it or not, prior to the last 2 days, I was a lot more worried about a fall through 80 than I was about a rise above 100. Because again, the de-escalation just was happening fairly fast. I felt like we're going to hang out around 80 for a while there, despite everything. I didn't plan on the last couple of days of what's happened here, but I'll tell you that I still feel good about those strikes. I mean, again, being short at 98, being short at 75. I mean, those seem to be good areas to me. There's going to have to be meaningful stuff to happen to push oil higher once again and or through those 80 lows, like you said.
It's kind of just spinning right now until it gets out of this range, Jamal. I understand why you're leaning directionally neutral. It's a lot of chop. I'd love an opportunity again if we do get a headline that says this thing is coming off. Give me the shot at selling some puts under 65 that are reasonable. Maybe not short dated per se. You get compensated a little bit more, but going out to like 56 days. Right now, the one standard deviation move is down to about 67. I mean, that already 67, 68 is just outside of a 4-to-1. So imagine we get oil going back down to like $80. What kind of trade are we looking at here? Going to 65, 66. You're probably going to be looking at something that's we're talking $15 away then. So we'll go to 15 would be like, I know, 70.
But it's a trip. I mean, when you look at it, it's not, obviously backwardation is not as bad as it was, and it's only $4 difference. But when you look at the skew, I mean, there's like easily like 20 to 25 points difference in skew between downside and upside right now. So that tells you that like the upside skew is coming back in as people start to worry about this ceasefire ending.
And if we get a bounce here, Jamal, I mean, should we go back out to the 148, 150 strikes like we were doing a few weeks ago and take the opportunity to sell up there? I mean, I'm feeling pretty good about those not being hit right now in the short term, even if we do see a reacceleration in the headlines.
Yeah, for sure.
The incentive structure is for an off-ramp for both sides. Iran needs goods in its country. The U.S. is not achieving the goals here. And the goal of the war is now to reopen the Strait of Hormuz, which was open before the war. So, I mean, what are we doing, folks?
Yeah, what are we doing? We're selling oil vol.
I think
that's what we're doing because it's still high.
We're selling oil vol. Give us a rally, we sell the vol. If we get and you know what? Either way, it's almost feeling like if you get a bounce here, short call spreads. If you get a break below 80, directionally, maybe this thing is capped now, short call spreads. And then if we get low enough, like get under some short put spreads under the pre-war lows near 65, 66. If we can, looking at a 2-to-1, maybe a 3-to-1 risk to reward, I'll take that bet all day of the week.
I mean,
given what we know.
the nice thing
how
about
oil's traded.
the nice thing about right now versus 3 weeks ago is that at least the smell of de-escalation is in the air. I mean, it was nowhere near before, and it just felt like we were going to continue to go higher as this thing was ratcheting up. Now, at least we've seen what potential de-escalation looks like. So, sure, you might sell some. Let's just say you're not lucky enough to sell 148, 150. You're selling 100, 102, right? And you're getting worried because oil is above 90. But at least you know that there's potential around the corner, right? Like it's totally different than it was selling 3 weeks ago.
Totally different. And the market's going to continue to evolve. So just let's see if JD Vance gets on the air. I feel like we're watching Shohei Ohtani. Is he going to Toronto? No. Because JD Vance on his way to Islamabad? Okay, so metals are still hinging on this liquidity perception on the market today, Jamal. Oil prices bounce back on some of these headlines. Silver tried to draw me back in. Sometimes I'm so grateful that this is an illiquid contract and futures options. Sometimes I'm just so grateful. Let's consider this one of those times, Jamal, because I could not get filled at my 84, 85 call spread yesterday. And now, all of a sudden, where is the market again? We talk about the market being in like a where are we heading course direction. The fact that silver's back below 77, we've lost the rally point off the lows from the war lows. This was a swing level here, resistance, support. That's no bueno. Gold prices too, Jamal. That pesky trend line, October, November, February swing lows here. We really haven't been able to crack on through it in many, many months, many weeks. First got up here on April 1st, and now we're turning away from it again. So reading the tea leaves right now, the folks that are operating in the market today, they may not be willing to sell their stocks, but they're certainly doing things on the margin to get some cash on hand. If it's through the treasury selling, if it's through the gold and silver selling, if it's through the dollar buying, I think that's the immediate read-through right now in the short term. And it should be noted how weak gold and silver are compared to stocks right now, which leads me to believe if we get any sort of good news, it's going to be the stocks that run to the upside. Gold and silver recover, but not looking at 5K gold in the foreseeable future.
I don't think so. No, it's a good point mentioning about today because at about 9:40 a.m. Central Time, 10:40 Eastern, that is when we saw the sell-off in gold. Gold sell-off and silver sell-off actually preceded what happened in the market. That was the first thing that I noticed this morning, and they've been weaker all day long. I will say silver in the form of SLV is one of my best winners on the year being short vol. Gold, silver, and oil are some of the highest vols on the board, and I've been short them. I never thought I'd say that with those three, but here I am, short vol in all three in multitude of ways. So I think that's your best play right now until things change. And I got short gold vol. I was short something in GLD, but now I'm short GC options, and I'm short an iron condor in there. And where am I? In the May 26th cycle? Yeah, I'm short. I'm short 5150 to the upside, and to the downside 4500, which is closer, obviously, to the downside right now. But that's the area I feel, and so I'm just gonna hold on to those and just continue to see how long those work.
Ride it into the ground.
When it stops working, that's your cue to start getting long again, I think.
If just again, what caused the buildup in gold and silver last year? If we want to buy the central bank narrative, Jamal, once the war ends, are they going to take all that cash they set aside, capital that they raised to pay for the higher energy bills? Are they going to put it right back into treasuries and into gold? Probably not. It's a cushion after all. So they're going to wait and see, and then they'll rebuild those reserves again over time. And when they have the excess reserves, they start to pile back into gold. So this may be a significant problem, right? The worst case scenario for gold moving forward, the war kind of just lingers on, the effects of it linger on, oil prices stay elevated. And so there isn't the incremental dollar at the margin to allocate to gold right now on the sovereign level to help prop up price like it was doing all of last year. The charts here are not great. They don't look healthy. We're breaking below former swing levels on both ends. We're losing the uptrends off of recent lows. So silver, if I'm long here, which thankfully I am not, I'm having a really hard look at where this chart closes today. If we're back above the 1 month moving average, 77.16, you get through the former lows that we had here, February 19th onwards, 77.5, you probably stick through it. But this is one of the more disappointing looking setups that has not pulled itself together here in recent sessions.
Disappointing if you're trying to get long, that is.
Speak for yourself.
You can't let it go, can you? You can't let it go. Gold and silver, it's not
I've been
there.
trying to get long. I haven't put on a new silver trade since the end of January.
Good.
So at least I'm avoiding it.
Good.
Yeah. I wish I could be making money. It's always a better outcome, but at least we're not losing it there. Jamal, what's going on with these arrows today? Let's wind this up on the dollar here. The dollar bounce, I don't think, should be ignored, right? Short term, though, what's happened to the dollar on the other side of this war seemingly being resolved? Oil prices aren't lower, but the dollar is weaker than where it was before the war started. And that in and of itself is an important consideration. Because if the war ends, where is the US dollar then likely heading? Probably not in a good place. If we thought the dollar was losing favor last year, Jamal, because of everything that was going on here in our domestic politics, thanks to tariffs, for example, do we think that the recent spate of events is going to increase or decrease people's desires to hold dollars in size, or might they feel the need to allocate elsewhere eventually once the dust is settled? I think they're going to allocate elsewhere. So I'm not looking for any sort of dollar strength here to buy into. If anything, maybe it's an opportunity for a bit of a counter trend move. I mean, the euro getting back down to like 117 and a quarter could be a pretty compelling long situation, given how the markets started to try to bottom recently. You can see it in the British pound, 84.4 IVR, right? Where are we bouncing today? 134.75. So the currency markets, they're giving you that liquidity strain, just like gold and treasuries are. But they're not screaming panic like they were at points in the early days of the war when people were clamoring for the US dollar. So, I mean, I think we're just waiting on this silly headline. Is JD Vance on a plane to Islamabad? That's all the market's going to care about, because if he's on a plane to Islamabad, it means that de-escalation is still possible.
These days, I express my opinion in the dollar using the TastyFX account, and just about every position is long dollar, solely for the fact that, again, I'm short vol in my equity account, and I mean, it's not necessarily all equity vol, but in some ways it is. I mean, at this point, the moves in gold and silver and oil are linked to how equities perform, and so my thinking is obviously pretty straightforward. Markets going up, those things are going to subside, and the vol is going to collapse in those. And if ever the reverse happens, well, the dollar is going to go up, which is basically the day that we're having right now. So that's literally the only reason why I'm long dollar in the TastyFX account, as a result of the positions that I have in the regular account.
I mean, that makes sense. You have to, everything is a piece of the puzzle, right? You don't want to put too many eggs in one directional basket here.
And it's nice that they actually work that way right now.
Yes. Yeah, no, very true. I'm looking at the yen here in particular, because among all the major currencies, Japan is a significant energy importer. Different problem than Germany, which shut down all of its nuclear power plants. Japan just hasn't really done anything to change its energy infrastructure since Fukushima in 2011. So when you have a world where there's high demand for dollars and higher energy prices, an energy importing country like Japan tends to get hit harder than most, harder than the US, for example. I see the yen here, Jamal. This not for nothing is on approach to what would be either the third or fourth lowest close of the year for 6J. And if we think about this, or the tail of the Iran war extending out further, the yen would be in greater risk than most nearly everything else. Even though it's a liquidity currency, you don't want to own something if you have to print more of it to pay for the same amount of goods prior. Volatility here in the FX space, though. If this is a canary in the coal mine, this is the world's largest, most liquid market. IVR is at 50, 60, 80 there in the British pound. I don't think that's something that we should ignore. We can take advantage of it, perhaps, and I'm certainly trying to take advantage of it through the Australian dollar and the Canadian dollar. But I don't think we should ignore it as a potential clue in the grand scheme of the gold move, the treasury move today, about how maybe a little bit of anxiety is creeping back in here, and we are waiting on tenterhooks for something to show up on Flight Radar.
Yeah, Flight Radar is a fascinating app, by the way. But yeah, I mean, I think the market is just flashing a lot of signals right now based on tomorrow, and I guess on the other side of it, we'll see how it all turns out. Most of these things in recent times have turned out to be a big fat nothing burger, but there's always chances that things change.
Just looking at some of the commentary that's coming out here from Iran. By the way, blockading Iran's ports we consider that to be an act of war. Well, we're at war. So not sure what you were expecting.
I mean, is the rhetoric, see, that's the thing, is the rhetoric, all of a sudden meaning that the last couple of days, it didn't really matter what was said, but now as we get closer to the Wednesday, clearly it's starting to mean something as markets are starting to reflect that. So it definitely seems as though these goalposts that we keep, see being moved around, those dates mean more than what's being said. This is one of the reasons why I felt the way I felt about reading the news for the most part. It's always been more about the deadline than anything that's said in the news.
Yeah, the Iranian foreign minister saying the blockading of Iranian ports is an act of war and a violation of the ceasefire. Adding that striking a commercial vessel and holding its crew hostage is an even greater breach of the ceasefire.
Does he know that I'm short oil vol and I don't want to hear this right now?
It's true. This is also unexpected, right? If you're going into negotiation, you stake out a very hardline stance because at the end of the day, if you have to compromise, if someone thinks like, oh, I got this really, hard-headed guy to move off his position, that's a win for me. Even if he's still getting most of what he wants. He didn't get everything that he wanted. So we're doing this jockeying back and forth. What Trump has said matters more. And I think the last few weeks noticed that he's been, when there are good things that are happening, Trump is the one to relay them. When there's an update that is not so good, Pete Hegseth is the one to relay them.
Go.
So last week, when you had Trump out there giving more of these briefings, the stock market was rallying. And today, as we're watching this news flow come out of the White House, this isn't information coming from Trump. It's information coming from around him. So not for nothing, Jamal, Trump does seem like a kind of guy who likes to take credit for things, put his name all over stuff. And so to that point, depending upon who from the U.S. administration is speaking and delivering the latest updates on the war, I think there is a sign or a tell there in and of itself. So just noteworthy. Today, haven't heard much from Trump. It's been the administration talking, not him. Stocks are down today. Dollar is up. Oil is up. Nothing to take credit for.
No, nothing at all. All is bad for now.
Not great, Bob. Not great.
Not great,
Jamal, Bob. Where do we go next? And yeah, I know Trump was on CNBC this morning, but that's not him posting 9 things in a row on Truth Social in the span of 25 minutes like he did on Friday. We're not getting that type of stream of consciousness right now as he's trying to, push the market around. What's next on the calendar for tomorrow? British pound in focus because of UK inflation data in the morning. Outside of that, though, maybe oil inventories are worth paying attention to, but it's a macro calendar that is quite thin. Of course, if you are trading NQ or ES, you're probably going to run into some of these earnings reports that are due today after hours or tomorrow after hours today. Intuitive Surgical, Chubb, Capital One Financial. Good on them, I guess, for reporting today. Not sure why I said that. And then tomorrow, Tesla, Lam Research are after hours, GE Vernova, Philip Morris are before hours, and also IBM Texas Instruments are after hours. So I think tomorrow you got enough of these tech names, Jamal, that are in the earnings space where NASDAQ futures might have something else to pay attention to, if only for a little bit of time. But it's the headlines from the war that we still need to worry about at this juncture.
Absolutely. It's the number one thing moving the market.
War may be over, but maybe it's not. I guess we'll find out later on today, Jamal. I'll catch you after a brief break. Tasty Live programming continues next. Dr. Jim Schultz with From Theory to Practice. See you there.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade. right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Perfect timing, I'm on the run, wait till them tell me something. Said I love it, I'm working, I'm perfect, and you know I know I'm worth it. Well, I'm high speed, wanna bet, look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip, everybody count to 3. Okay, you wanna see? Let's go. Well, I'm high speed, wanna bet, look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip, everybody count to 3. Okay, you wanna see?
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. I'm so glad that you are here because it is only because of you all that we can do what we do. So thank you guys so very much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can celebrate if you're a bear pretty much across the board. You can commiserate if you are a bull, but I can assure you it will be a good time had by most. And if you have any questions for me, drop them in the chat. I'll try to get to as many as I can right around the second part of the show. The expected move on the number of questions I get to per show is somewhere between 0.001 and 0.003. So the earlier that you get the question in, the higher the delta that I will get to that question, and you might land inside of that very, very, very tight range. But anyway, guys, here's what I need from you guys. Guys, I need prayers. I need lots and lots of prayers, because today, after the close, you know what I'm going to do? I'm not going inside to hang out with my family. Like, I'm not going inside to spend time with my children. You know what Autumn is doing? She is sending me off into the wilderness, into the forest. That is an afternoon, early evening Costco run. Like, she's making me go by myself No defenses, no support group. It's just me and my shopping cart, man. Like, that's it. It's me, my executive member Costco card, and my shopping cart. And so I need from you guys, I need thoughts, I need prayers, I need whatever you can send my way, because I am not looking forward to this at all. Market down 40, metal's getting ripped, silver getting ripped, who cares? It is nothing compared to what is coming on down the chutes for me personally. So I would really, really appreciate any mental and moral support that you could offer for your boy. But Josh, bring us into the market. Man, let's do it. Let's see where we're at. Man, I'm not looking forward to this at all. Like, literally not at all. Even the S&P is down 35. Risk-free instrument, also known as the NASDAQ futures, extremely high-risk product. It's seen better days, down 52, but it's catching a little bit of a bid here. Maybe, maybe not. I'm not sure. Boomers down 220. Russell 2000 futures index down 24. On today, you got bonds down 18. You got notes down 12 and a half ticks. Got oil up a little over a couple bucks. Got UB40 down 15. You got the shifties they're getting smacked around a little bit. Gold down 108. And then silver also falling on hard times. The Hunt brothers down 342. They're going to have to amp up production. They're going to have to amp up the cheese and pepperoni. They're going to have to amp up, the margarita pizzas or whatever you call those guys. They're going to have to do a little, I don't know, a little pesto, a little something different to kind of get some new people in the door with silver down 340. You got British pound is down. Euro is down. The VIX is up. Volatility futures up 20 cents. And then spot volatility, the old VIX, that guy's probably going to be doing very similar to futures volatility. Now it's up a little bit more. So it's up $1.16 on the day. So volatility is up. And the market is down, and it was pretty strong this morning. But, guys, don't forget, tomorrow afternoon. I mean, is this the end of the civilization thing, the sequel? Like, is this part 2? Like, apparently the ceasefire is going to end tomorrow afternoon. It's ending at like 4 o'clock or 5 o'clock or what have you. And so it appears that we are staring down the barrel of the apocalypse. It is right on our doorstep. I have a feeling that we're going to be dining on many, many tacos, whether it be tonight, whether it be in the morning, whether it might be a little lunch rush, taco buffet tomorrow afternoon. I don't know, but I have a sneaking suspicion that a lot of things are going to happen between now and then to walk it all back. And yeah, so but we'll see. We got that thing coming on down the chutes tomorrow. So what I want to do though, there's not that much to do today. Because, we have earnings coming up tomorrow. We've got Josh actually brought United Airlines earnings down. He brought it down. No, he didn't bring it down. He just brought it to me, up, down, whatever. He brought it. He Amazon primed it to me in my Teams chat. So we'll do some United Airlines earnings here in the next couple of minutes. And yeah, tomorrow we've got Tesla, we've got IBM. So you've got the heavy hitters coming on down the chute starting tomorrow, basically. And then next week, of course, yeah, Tesla, IBM tomorrow. Next week is going to be crazy. I'm not even going to be here, man. Isn't that crazy? That's so crazy. And now she's sending me off to Costco in the afternoon. That's crazy stuff, man. Now, I don't know what's worse. You guys help me out. I want to know. The algo's dying to know. What is worse? Afternoon, like post-work Costco run? So, I'm going to get there. So I'm going to leave here probably about 4:30. Takes about a half hour to get to Costco. You're never closer than a half hour from Costco. Even the people that live right next to Costco are like, yeah, it's about 25 minutes. And so if I leave at 4:30, we get there at 5 to 7, a 5 to 7 Costco run? Or do I do a Saturday morning Costco run? Like, what's better? Like, I feel like we're kind of choosing between, the lesser of two evils here in terms of what's going to be worse at the end of the day. But that's what I've got coming on down the chutes. And then, yeah, next week we're going to Great Wolf Lodge. It has been confirmed Wednesday, Thursday, Friday. So I will be out of commission, enjoying myself by just beating up on all the homeschool kids in the pools, and it's going to be fun. It's going to be a good time. But yeah, but next week, man, you guys got your work cut out for you. I'll tell you, because you got to keep it above zero. Starbucks 428, Amazon 429, Chipotle 429, Google 429, Meta 429, Microsoft 429, Apple 430. Tim Cook left. What is going on out there, man? What is going on out there? Tim Cook is gone. He is just an afterthought now at this point. And so, yeah, so next week, good luck to you all. It's going to be no small feat, but let's go ahead. Let's go into the portfolio. Let's take a look at a couple of things that might be going. I see you guys though, man. Look at you guys in the chat, getting some work time. I see you guys offering up some Costco thoughts. And so I appreciate that very, very much. I see some people are saying Saturday morning is better. What do you mean by better? Do you mean better by not as busy? Do you mean better by not as crazy? I don't know the last time I've done like a post-work Costco deal. It's always been in the morning. It's always been like weekend mornings. And so going after work like this, or autumn goes with the kids like during the day, which I mean, for me, that's the best case scenario, of course, because I just sit here with you all. And then I walk into the house and it's all there, like all the Costco snacks, all like the huge bags of chips and all the stuff that we all know, love, the JoJo's. Man, those JoJo's in the middle, that's gotta be the goated treat at Costco. Do you guys know what I'm talking about? Those little JoJo chocolate squares where they've got the chocolate, they've got the nuts, they've got a little cranberry, a little pistachio on those guys. Man, those guys are absolutely unbelievable. And so, yeah, just a steady supply of JoJo's that I can kind of toss down the gullet. And it's amazing when I don't even have to go. But now I got to go. Whew, man, it's brutal. But anyway, maybe we'll talk about something else. But I see you guys in the chat. And I see you guys a lot. Steve Aguilera is in the house. Joel James is here. Man, Ash Finn is here. Brian Rackham. Look at Ryan LP. Look at MT5850 is in the house, sending thoughts and prayers my way. Man, I appreciate you very, very much. All right, let's go ahead and so what do we want to look at? I mean, MES, we've got our short call, our begrudging short call. I'm not going to talk about it. It's obviously working out a little bit today, but I'm still kind of upset that I even have it on. But other than that, there's nothing really to do or even talk about. So I actually want to spend some time putting on a couple of new trades here in a couple of minutes. I mean, Alcoa, it's a do nothing situation. Johnson & Johnson, do nothing situation. QQQ, we could use it a little bit lower, do nothing. We sit tight. We don't really need to talk about this anymore. Starbucks, I'll tell you, man, I'm really trying hard to get this thing in the money, but I just can't do it. Like, I feel like we should just roll it in the money. I feel like I should just roll this thing down in the money. Like, all right, it's finally in the money. What do we do? Like, it's finally in the money. Like, let's go ahead and figure out what to do moving forward. But that feels very synthetic to me. Like, that feels like we didn't do it the right way. That feels like I didn't get in shape on my own. I just took a whole bunch of peptides. Like, that feels like, I don't know, maybe we should rethink our strategy from the ground up. So with Starbucks here, I think we're going to sit tight. We're not going to do anything, and we'll see if this thing can just naturally, organically move in the money, and we'll just kind of go from there. But Starbucks, we do nothing, and then that's going to be that. And of course, Snapchat's getting hammered. That's pretty par for the course. And look at our TLT long put spread. That guy's printing some cash, and we're already up 12 cents on the trade. Man, look at that thing, man. That's like what? That's a quarter of a bonefish before tip. So, I mean, the longest journey begins with the smallest step. And so for the our bonefish efforts, TLT is definitely helping the cause there. All right, so that's TLT. There's the whole portfolio. Boom, done, out the door, 90 seconds or less. Don't even worry about it. What I want to do today is I want to do two things. So number one, let's get back into, because again, you look at the watch list, you look at the Tasty Default, you look at Tom's watch list, you look at whatever, you're going to see a bunch of earnings. You're going to see your Teslas, your Chipotles, your Apples, your Amazons, whatever. And so it's like, I don't really want to trade those right now with the earnings so close. I'm going to wait for the earnings day, and then we'll kind of trade those at that time. I don't want to do that here today right now. And so what do you do in a scenario like that? Well, a lot of times you kind of shift your efforts and shift your focus over to the indexes. So now I'm doing the major market indexes, or I'm doing, maybe some non-equity, not indexes, but non-equity exposure. So like gold or like silver or like fixed income or like energy or what have you. And so I was looking at the list earlier and I saw our old pal GDX. And I was like, man, maybe we do another GDX trade. So we just did a ratio spread in here, I think maybe a week ago. It wasn't that long ago. Maybe it was even less than a week ago. Hang on, let me bring out my change here really quick. April 17th. Yeah, we did this guy. I mean, we put the trade on April 9th. So that's about a week and a half ago. And then we took it off on April 17th. So that was just on Thursday of last week or Friday of last week. And so that was a pretty quick turnaround. Well, the volatility is still there. You can see the IV rank is still 67.4. So there's plenty to do in there. It's not a problem of the premium not being there. It's not a problem of the options not really having any juice. That's not a problem at all. And so for GDX here, I'm like, man, let's get back in here and maybe we'll mix it up a little bit. We'll do a different strategy that, in my opinion, is no less effective, but just to kind of shock the muscle a little bit. I mean, the muscle's expecting Tuesday to be back day. Let's roll in there and train arms. I know we're not supposed to. I know if we keep doing things like this, the earth is going to reverse its spin, but let's just give it a shot. Let's just give it a go. What's the worst that could possibly happen? So we go into GDX here. Maybe I go to June, 58 days to go. And, maybe we just do a strangle, man. Like, let's go in here. Let's go 16 deltas on both sides. 16 deltas approximately. if I do a 16 delta put, that's going to be the 80 strike. So you can see that right there on the option chain. Which, oh, by the way, the reason why my mind started to drift there. Did you guys see last night's calculated risk? So we are upping our technological prowess for calculated risk now. So now from time to time, I'm going to bring in the platform. So now, because that opens me up to do a lot more things. A lot of the calculated risk episodes to this point, by a lot, I mean every single one, has just been me just talking and me just pontificating about whatever the topic is, which my hope is that still brings you guys some value and helps you guys understand certain aspects of the market. And so we'll still keep doing that to some degree as well. But now we have the technological capabilities for me to also do like these pre-recordings, by also bringing in the platform and having all those things, at hand for the editors to do the things that they need to do. So last night we did an episode on expected moves in the platform. It was like a mixture. It was like half like face to camera and like half the platform. So let me know what you guys thought, because I want to keep doing that more, but I'm only going to do it if it makes sense. I'm only going to do it if it kind of, if it's something that brings you guys some value. I mean, I just feel like when I'm talking about certain things, like an expected move, I mean, don't get me wrong. Your boy can pontificate on an expected move for no less than 30, 35 minutes if you give him the time. But still, for you guys understanding and learning, I think it's a lot better and a lot higher value to actually be able to see it. Like, let me see an expected move. Like, let me see strike selection. Like, let me see these different things. And so that's kind of the direction that we're going with that show for some of the content, at least. Like thinking about like a strangle, right? Like a strangle. Like I put on a strangle, how do I adjust it? Again, we could talk through that, no problem. But if we're talking through it and showing it on the platform, I think that's kind of nice. It almost has a bit of a from theory to practice feel. Although you'll notice the tangents are very, very kept under wraps. Like the tangents are few and far between. The B- humor, few and far between. I still sprinkle it in there from time to time just to keep you guys on your toes, but it's not like the steady diet that I keep feeding you guys here on From Theory to Practice. But anyway, I digress. So with GDX, we could sell the 80 put. So we'll do that. And then we go down to the call side. We just kind of mosey on down to the call side. We could sell, we could do like an 18 delta call, I should say, which is the 115 strike. And we're going to be able to do that for about $1.70 maybe. And so if I sell both of these guys, you can see right here, I can do the whole thing for $3.26. If I do it today, we can go to business for the one-time low cost of $3.26. And so my probability of profit is 74. That's pretty good. My P50 is 84%. That's also pretty good. My delta is pretty neutral. I'm a little bit bearish on gold. That's fine. Doesn't really matter either way. Got a decent amount of positive theta. Our maximum profit is, of course, going to be the credit that I collect. My maximum loss, we'll put that in a different color because that's going to scare the children a little bit. Maximum loss is negative infinity. And the buying power effect is $900 or $946. So buying power wise, very, very nice and favorable. Now, of course, if you're brand new to the show or brand new to trading, welcome aboard. I hope you stick around. There's a lot of great programming here on the network, whether it be my show or the other shows. There's so many different things to choose from. And so stick around, poke around, and if I can ever help you in any way, please, please, please let me know. I'm happy to do it. If you are brand new, though, you're looking at the screen right now. You're like, wait a minute, Jim, wait a minute. You can't just skip over the Glacier Freeze oval and just send me on my way because I see a negative infinity. And I'm not going to lie, Jim, my underoos got a little soiled when I saw that on the screen. So let's talk about that. Like, let's make sure we understand what a negative infinity maximum loss actually means. Does it mean that theoretically you could lose an infinite amount of money? That's exactly what it means. Does it mean that theoretically you could reach a state where you are never not losing money? Yes, that's exactly what it means. What needs to happen for you to reach that state? That state where not only are you losing money, but your heirs are losing money. Your lineage is continuing to hemorrhage cash long after you have expired and you are gone. That means for that to happen, what would need to happen is GDX would need to print positive infinity. So GDX would need to be positive infinity bid, positive infinity plus one offer. That would need to be the quote on GDX. Now, is that theoretically possible? Theoretically, yes, it is possible because stocks have no limit. Stocks have no cap on the upside. And so there is no theoretical limit to how high any stock could go, whether it be a GDX, whether it be a NVIDIA, whether it be a Snapchat. Obviously, we're talking about purely theoretical things at this point. But you have to understand that there is no cap. There is no potential maximum ceiling. Okay, is that likely going to happen? You have to do your own analysis. You have to make up your own mind. But I'm going to say it's not very likely. I'm going to say it's not super likely that we're going to get to a state where GDX or NVIDIA or most certainly Snapchat prints positive infinity bid, positive infinity plus one offer. And so understanding that, theoretically, yes, this could happen. But practically, is it going to be an outcome that I'm going to have to face? Most likely not. And by most likely, I mean I've not seen it in over 2 decades in the markets that I've been trading. But what might you have to endure? You might have to endure 10% in a day, 20% in a day. I mean, that would be an astronomical move, of course. You might have to endure, 50% in 6 weeks, like we saw in Dell. Those are very, very real. Now, even those are few and far between, but that's a real base case outcome for a worst case scenario. Whereas some infinite amount of loss, theoretically, it is the maximum amount. And I have to make sure that you understand that that is the theoretical max. But it's not something that's going to practically happen anytime soon. So anyway, so for GDX, we go ahead and we push out our strangle here. All right, perfect. So we got filled at 326. Okay, so we're in GDX. Now what I want to do, the other stock that's in play, obviously, is going to be USO. So here's another stock that's in play, given all the things with oil, given all the movement with energy, specifically oil, with all the things going on, abroad and all of that. I'm like, hey, why don't we go into some USO? And I don't want to do anything undefined risk in here because, as you're going to see, buying power wise, it's a little bit high. Like it's a little bit on the upper end of the range here. Like if I sell like a 100 put, for example, and even if I went to strangle this off, but just starting with the put margin, you can see I'm at about 3,700 on my buying power. So that's over 10% of my account. So it's not really something I'm interested in doing, from a position sizing standpoint. So I'm kind of thinking instead, maybe we go in here and we do something defined risk. Let's just take a shot. Like, let's just go in here. Let's take a shot. Like, let's take a shot on oil. And obviously, understanding the backdrop that we're up against, understanding the world around us, got to be bearish on oil. So why don't we take a shot to the downside, playing a little USO. So if you're bullish on oil right now, I'm going bearish, so you're welcome. I'm playing it to the downside, so you, sir or madam, are welcome. So if I go to, you've got the stock at 125. What if I do a 128, 122 put spread? Ooh, man, that's expensive. Wow, I was really kind of hoping to pay about $3 for this, and they're getting me for it, man. Look at that. 385 for something that's basically like a 50-50 shot. I mean, it's a little bit over 50%, but not that much more. Wow, 385. I don't think I can do it. That's a little bit too expensive for my liking. Let's try. I mean, I'll do like a 330, 340, but I'm not gonna risk to make one on a 50-50 shot. That doesn't even really make sense to me. And so let's go ahead, and it's not even positive theta, it's negative theta. Like nothing lines up about this. I'm going to hang on here for a second. Again, for the new people watching, or even people that have been trading for a while, I think there can be a lot of things that can be learned and gleaned from. I see a trade, or any one of us sees a trade, and we pass. Like, why am I passing? Like, I don't want to gloss over this because, as you're out there on your own and you're trying to figure out, should I put on this trade? Should I not put on this trade? What have you? You're trying to decide, what is a good opportunity? What is a not so good opportunity? In my opinion, this is a not so good opportunity. And so I am going to pass on this iteration of the trade. Now, we may change it and we may try to, fiddle the strikes around or whatever, but I don't really like this for a couple of reasons. Number one, when I put the trade on, you can see that the stock price of USO is 125. So I'm straddling the stock price basically as closely as I possibly can, given the dollar-wide strikes in the June cycle. So I buy a 128, I sell a 122. I'm basically symmetric on both sides. When I do that, or when anyone does that, in any stock essentially, I'm expecting there to be about a 50-50 pop. So the fact that the pop is 53, that's fine. If it was 47 or 48, that would also be fine. It's going to be somewhere around 50-50. Okay, that's great. Usually, though, when you're buying an at-the-money spread like this, one of the reasons we like to do this is a lot of the time you're going to be able to get into the spread for about half the width of that spread. And so this is what? This is a $6 wide spread. And so I'd be looking to pay about $3. Now I may have to pay $3.10. I may have to pay $3.20. I may get a little discount. I may get a little break. It may be $2.75 or $2.80. It all depends on the volatility skew and the pricing along the chain and what have you. But because oil is so crazy right now, the pricing is so skewed that I'm going to actually have to pay $3.85 for this put spread right now. That's way too expensive because it's shifting and tilting the risk return metrics away from me in a really unfavorable way. And so now instead of risking one to make one, which is kind of what I want to sign up for here with an at the money vertical spread, I'm almost risking two to make a little bit more than one. And I don't have positive theta. I don't have time going by to help me. Like I don't mind risking two to make one, but I do that when I sell options and I do that when I sell premium. I do that when time passing is going to help me, reach whatever profit targets I might have. Here, this is not the case. Like this is a directional shot. I'm going to need oil to go lower. And so I don't have a problem with that, but the pricing has to line up and all the metrics have to make sense to me from a probability standpoint, pricing standpoint, and then risk return standpoint. So I'm going to pass on this iteration. Hopefully that makes a little bit of sense as to why I'm passing. But let's go ahead and let me try to move this down a little bit. 127. Well, no, it just got worse. No, come on, man. What's going on? These markets must be crazy wide. Yeah, the 127 put is pretty wide. But, okay, wait a second now. Hold on. So now the plot thickens, right? I mean, this is like, it's basically like watching an episode of Lost. Or it's basically like watching, so our new show at the house, so that me and Autumn watch when the kids go to sleep. Our new show is from like 2011 or 2012. Person of Interest. Where are my person of interest fans in the house? The same producer as Lost, J.J. Abrams, and also has Benjamin Linus in it from Lost, is in person of interest. We're like 3 episodes in. It's pretty good. I mean, it's not going to change your life. It's not going to cause you to like reflect on like the philosophical nature of the world around you, but it's very entertaining. Like for 40, 41, 43 minutes, I'm like, yeah, I'm pretty locked in, man. Like this is some good stuff. And so let me know where you guys are at on person of interest. I mean, I would love to know. The algo can't wait to hear your thoughts. And so when I look at this though, I'm thinking, I wonder if this mid price is even real. Like, I wonder if we can't go in and get filled for closer to half the width of the spread on the original strikes that I set up. And so let's give that a try. And then maybe we'll do a little United Airlines earnings if there's any time left. Okay, so this is telling me it's 385, but I don't think I believe it. Now, I could go in at 385 and hope for the price improvement. But again, you never know who's on the other side of that. Like if it's somebody in the Batista lineage, like he may indeed end up taking most of your money. You may have to endure an infinite loss if you're running in the Vinnie Batista pits. And so for us right here, 128, 122, let's give it a shot. Let me go in at $3. I don't know, man. Maybe it'll work. Let me go in at $3. I don't think I'm going to get filled, but maybe I do. Okay, I did not get filled at $3. That's not surprising. But let's just see. Can I get filled at like 310? I think it's possible. I still don't think I'm going to get filled, but I don't think it's crazy. All right, we didn't get filled at 310. Can we get filled at 3.25? Maybe we do. No, 3.25. Okay, I'm going to try it one more time. What about 335? This is going to be my final offer. And you can see they're coming down too. Do you guys see the negotiation that is happening in real time? I'm coming up and they're coming down. Now, I don't know who they are, right? But they're doing it, man. Like they're making a good effort at getting this thing done. A little good faith negotiation. This is what I like to see. Well, I'll try 335. It's going to be my final offer here today, though. All right, so no takers at 335. All right, so we sit and we wait as the market just catches a little bit of a bid. Interesting stuff. And so all right, so for USO, I'll see if it gets filled while we're on the show. But that's gonna be that. Let's go to UAL really quick. So United, again, I'm a Delta guy. I've talked about this many times before. Have to play United to the downside. It's not nearly the pleasant experience that Delta is. And they have earnings today after the bell. I don't really want to do a Tuesday butterfly. Nah, I don't really want to do a Tuesday butterfly. Let's mix it up a little bit. I'm going to go to June. I'm going to do a skewed strangle. So let's go to June. And instead of doing like 16 deltas on both sides, I could sell an 80 put and then I could sell, like a 120 put. That's fine. I'm going to move the call in a little bit to skew this thing to the downside to give me a little bit of a bearish bias while allowing me to sell premium on both sides, which is obviously a very strategic way of approaching the market. So I'm going to roll my call into the 110. And so you can see, so now I've been able to kind of muster up a little bearish delta on the position. And I'm short a 110 call. I'm short an 80 put. This is a short strangle. It is a skewed short strangle, skewed a little bit to the downside. My pop is 68%. My P50 is 85%. A lot of positive theta. Maximum profit is my credit collected. Maximum loss is negative infinity for all the reasons we talked about earlier. And the buying power effect is only $1,000. So really nice from a position sizing standpoint. So let's go ahead and do it at 641. Can't get a taker at 641. Let's try. Oh, we got to take her at 641. All right, perfect. Okay, so we're in 641. So there you go. Awesome. Okay, so Josh brought me, he Amazon Primed me a question. Man, let's go. 2 questions? Wow. Man, awesome. I'm going to go with, let's see. I'm going to go with the first question by Aunt Duh. So what's going on there, Aunt Duh? I appreciate you very, very much. Please send my best to Uncle Duh. So what's going on there, Aunt Duh? Aunt Duh says, in a post-PDT world, will broken wing butterflies hold the best defensive advantage? Man, great question, Aunt Duh. So Aunt Duh. So this is such a good question. I don't know. So I don't know about broken wing butterflies specifically. Broken wing butterflies are great strategies because they allow you to collect a credit, to take risk off of one side of the market completely. If the market, it's very similar to a ratio spread in that regard. Like when we do a put ratio spread, you collect a credit. If the market rallies, then you just keep the credit or you manage it at some percentage of the credit, right? A broken wing butterfly is the exact same thing. If I do a broken wing butterfly with puts to the downside and I pick up a credit on entry, which you almost always want to do that, if the market does rally, I don't have any risk. Whereas with a butterfly, as we've seen, if you're wrong on either side of the market, then you end up in kind of a bad spot. You want to nail the move directionally and the magnitude of the move. A broken wing butterfly removes kind of that, that magnitudinal, or I should say that directional element of it, where you've got to be right on the one side of the market, but the other side of the market is not going to hurt you. And so that's really, really helpful. I don't know if it's going to be a better or the best defensive strategy per se, but I'll just say this. In a post-PDT world, in a world where pattern day trading goes away, which I heard it's June 4th. Like I heard it's June 4 and it's gone. It's gone away. Man, I think that things are going to be a lot different in the markets. Now, I don't know what that means specifically. I think it could mean a lot more whippiness. I think it could mean a lot more back and forth because all the traders with smaller accounts, they're going to be freed. Like the chains are going to be off. Right now, obviously, you're going to have to make sure that you're disciplined with that and you understand what you're doing. You understand what you're getting yourself into. All the things that we talk about on the show, all the things I talk about on this show every single day. But still, when it comes to the back and forth and it comes to, dealers having to hedge the other side of all the flow that comes in, I think it could actually add to the whippiness, which from an opportunistic standpoint, I think it could be good for us, man. I think it could be really, really good for us. So I can't comment on the broken wing butterfly aspect of it. I'd have to think about that a little bit more. I don't know that I would put that at the very top of, being kind of the best defensive situation, but it could be solid. And so, but I see you guys in the house, man. Look at you guys. And so, wow. So, okay. So a couple of things. Wow. Look at you guys at the end. So I'm going to surprise and delight a couple of people at the end. They're helping me out personally. And so I appreciate you guys. And so let's see. Emmett Morrison says Person of Interest is a great show. Too Late Jake is there. Let's see. Dip Enjoyer, greatest show ever. Man, that's a big claim right there. Right. Brian Ratkin, I love Person of Interest. Okay. All right. I mean, it's going to be very hard to beat Lost, but the fact that it's the same producer, like that's like, all right, we got a shot, man. Like it's in the conversation potentially. But Javier says great series. Okay. I appreciate you guys. Man, I appreciate you guys very, very much. And so, all right, let me go all the way back to the beginning. All the way back to the beginning. Look at this, man. The algorithm is going to be so confused. Like the algorithm knows that when 2:30 Eastern rolls around, it can take the hour off. Or I'm sorry, it can take the 3/4 of an hour off. Like it knows that it gets a little bit of a break, but not today, man. Today, you guys are doing it. And so the Preston is in the house. What's going on there, the Preston? Dr. Jim, you're the king, man. I appreciate you so much. What do you think about NVIDIA? Is now a good time? Thank you for all that you do. Man, let's take a look at NVIDIA. So good old NVIDIA. Wow, 200. Man, they're really doing it. Look at that. Oh, you got earnings on May 20th. That's the day after my birthday. Man, I'm a May 19th guy, as if it's my choice. It's been May 19th now for it'll be 45 years. It's been May 19th. So the day after my birthday, we'll have to do a little NVIDIA. We'll have to do a little something in there. I mean, I would say, again, if you look at the chart, that's a monthly chart. But if you just look at any chart, you could look at a daily. Like here's a daily deal. I don't know how you can be anything other than, super, mega, ultra bearish on NVIDIA, just generally speaking. But with earnings coming up on May 20th, I don't want to do anything now because we're still getting what am I going to do? Am I going to do something in the June cycle? Then I got to worry about earnings. So I don't want to do that. Am I going to do something in the May cycle? That's too short. I don't have enough time. And so I'm kind of in no man's land where it's like, all right, I've got the earnings out there. It's not quite the 2 to 3 week window that I'm really concerned about, but it's just on the outskirts of that. And with the option expirations, the way that they're set up right now, I'm not going to do anything in here right now. But if I had to choose, I would be bearish on NVIDIA, obviously. So if you're bullish on NVIDIA, you are welcome. And so Wolf is in the house. What's going on there, Wolf? Hey, it's Dr. Jim time. Let's go. What's up, my friend? I appreciate you very, very much. Thank you, Wolf. Sam L is in the house. What's going on there, Sam L? Doc, that thumbnail from the latest calculated risk, it is straight Hollywood, man. That's the team. The team getting that done with a little AI magic to make it look, sometimes borderline creepy and sometimes borderline like Hollywood-esque. And so I think we kind of maybe got closer to the latter there than the former. But Sam L says, does Miss Autumn know how handsome you've been looking lately? Man, I don't think she does, Sam L. And so, man, I appreciate you. And we're gonna have a talk about this. We need to have a little discussion about this. And I appreciate you for reminding me that she might be forgetting this. Actually, she's maybe forgotten for quite some time. And so, but thank you, my friend. Harold's in the house. What's going on there, Harold? Of course, I'll be here to support my Yankees. That's correct. Today's Yankees Red Sox. And so, Harold, we both stink. Now, we stink a lot, but you guys are stinking in your own right. Like, we're both not looking. You guys are in first, but you're up by 3 games or whatever. Like, over us, and we're in dead last. And so it's like, man, that's crazy stuff. And so we got a little 3-game set. Man, if the Red Sox take these 3 games, we'll be a game back. Whew, man, Harold, good luck to you, my friend. I wish you good luck. You got my boy Connolly early tonight. And I'm going to tell you, if you haven't seen Connolly early pitch, you probably saw him in the wild card, or not the wild card, but the little 3-game series last year where you guys ended up beating him. But he's a rookie. He's 14 years old. I think they got him out of middle school. Wait till he takes the mound tonight, man. He's about 5'8", about $145, and he throws 98. He's got 98 two-seamer. That's just nasty, nasty stuff, man. And so good luck to you tonight, my friend. And yeah, I appreciate you, Harold. And so N1C is in the house. What's going on there, N1C? Thank you, my friend. Thank you for being here. I appreciate you very, very much. Ranch is in the house. I was going to roll panel to, this is a previous thing. So I'm going to skip over that there, Ranch, but I appreciate you so very much, my friend. Thank you for being a part of the show on a regular basis. Sam L. Doc, we need that TA expertise. Check the car charts. Oh, is this Avis? We were looking at Avis. From 80 to 600. What? No, car. Whoa, look at that. What is this? What is this? Look at this. You can't even see these candles. Look at that. If you squint, these are daily bars. I'm not looking at the Errol Coleman settings tick charts. We're not looking at 15-second bars with, Gus and E. Those are daily charts. Daily bars. Look at this thing, man. And then all of a sudden, whoop, there you go. And so obviously the next move this guy's going to make, it's going to be one of these jobs. Right now, obviously you got this guy, right? And then, the next likely move is that guy. But man, if this thing can really get on its horse, it's going to do one of these jobs. It's going to give you a little time back. It's going to give you a chance to get in earlier at an even better price than you could have gotten in today. And so I'm pretty sure that actually works against you. But either way, man, that is a pretty powerful chart. I got to be honest. Now, again, just using common sense, right? This guy was 600 yesterday, 700 today. Yeah. So it's a good thing we didn't sell it yesterday. But I don't know how you can't sell it today. You got to get short a little Avis. You got to get short a little CAR. I don't know what's going on out there with CAR, but yeah. And by you got to get short, I mean you got to get short. I'm personally going to pass. But you guys let me know what happens with car. Man, that's some crazy stuff. Are we looking at GameStop in 2021 again? Like, am I looking at the latest crap coin? Like, what is this, man? Like, this is some crazy stuff. Wow. We did not look at this yesterday. I had no idea. I saw you guys kind of clamoring about it after the show, but I still didn't think to check it. So Samuel, thanks for bringing that to my attention. That's crazy stuff. Yeah, I'm going to pass on car. There's some crazy stuff going on in there, and I don't know what it is. Orgdenu's in the house. What's going on there, Orgdenu? Hello, Dr. Jim. For every gimme, there's a Greek you didn't see. That's correct. That's good, man. I'm going to steal that for sure. For every gimme, there's a hidden Greek. Right? For every gimme, there's a gotcha Greek just waiting, lurking around the corner, kind of like what you see here in the old CAR chart. And so, yeah, that's some crazy stuff. Sam L. Doc, time to burn some stacks of cash. Earnings trade on UAL or BA. Are we flying or crashing? Yeah, UAL, I'm going to pass on that now because I didn't do anything. And I want to get to more questions, and we just got sidetracked with some other stuff. And so that's pretty typical, though, if you are brand new to the show. This thing we just go where the wind blows us. I mean, there's some main things I want to cover, but sometimes the wind blows us, firmly in one direction. Sometimes it's softly in the other direction. And so you kind of have to just, let the spirit guide you. And so Sergio's in the house. What's up there, Sergio? Doc posted a new video. System, why is he glowing? That's exactly right. That's exactly right. You got that little bit of that glow? Yeah, that's a little AI magic for you guys. SC Golfer in the house. Hey, Dr. Jim. I'm here for the algo. I'm just trying to learn, man. I appreciate you, my friend. Thank you for being here and being a part of the show. Shane, I appreciate you so much. Obviously, if I can ever help, man, let me know. I'm happy to do it. And just thanks for being here and being part of the team. Hopefully it gives you some value. This show, Calculated Risk, the Where Do I Start series, which I started over the weekend, which I'm very excited about. I'll record. I'll probably do episode 2 tomorrow. And so that will be posted this weekend. And so let's see. Jay's 2 sats in the house. SPX gap fill back to 70.51 seems like a natural place to test unless Stick Save headline comes out. SPX. Okay. 70.91 or 70.91 right now. You said 70.51? Yeah, we didn't quite get there. But so does that count? You guys help me out. Does that count as a gap fill? I mean, I think the answer is no, but I genuinely don't know. So it's a gap, touch, right? I mean, it's a gap entrance, but it's not a gap fill. So for a gap fill, we've got to fill the whole thing, right? And this may seem like a really kind of silly question, but I'm not sure. Like if I touch the gap, is it enough? Can we count that as now filled? I'm assuming the answer is no, but you guys let me know because I don't know. And I don't think the algo knows either. So the algo needs to know so that we can improve its knowledge. We can improve its knowledge base to get ready for the singularity. And so Sam L's in the house. Algo running analysis. Trade solid. Thumbnail even stronger. That's right. That thumbnail was on point. 100%. Emmett Morrison, good doctor, is in the house. I need my daily dose of B- humor. Dr. Jim, and I'm here for you. I think we're kind of hugging the bottom end of the range again today, though. Probably more closely around that C+ range. But we should revert back to the B- level by the end of the week. And so Boston Frank is in the house. What's up there, Boston Frank? I think SPY is going to go sideways until 4 p.m., just like it did yesterday. You might be right. Although it appears that it's got a nice little rally going on. I mean, EMA S&Ps are almost unchanged now. I mean, they're down 20, but it feels like they're almost unchanged. The NASDAQ is actually unchanged, down 2. You got the boomers getting on their horse. You got the Russell getting on its horse. And so you got a little something happening in the overall market. Mr. King is in the house. Dr. Jim, how about the expected move downside butterfly in Tesla for this Friday? Yeah, maybe tomorrow. So you got to tune in tomorrow. So I'll trade Tesla for sure, but that's for tomorrow's show because the content's not going to write itself. And you guys need a reason to come back. Like you guys need some type of impetus to come back for tomorrow's show. And yeah, there you go. So Tesla earnings tomorrow, maybe some IBM, and we'll see where the wind blows us tomorrow. Vicky Zags in the house. What's up there, Vicky Zags? Oh, that ghost that lose the most. Need that snap. You heard. That's right. I could use a little bit of ghost today, actually. But I've got what am I working on? Because again, it takes me like 4 or 5, 6 days to get through a full can because I take my time. I just kind of nurse it. I think I've got like a blue raspberry in the fridge right now. Again, don't tell Autumn. This is our little secret. But I think I've got a little blue raspberry deal out there. And I put it like way in the back, like behind like all the stuff that she'll never move. So like behind the stuff like, like the baking soda or like the tuna fish or the applesauce. She knows not to go in that corner of the fridge. So if I put the ghost behind that stuff, right, then I'm safe. I know that it will not be found, and I won't be found out as long as you guys don't rat me out. And so Ranch is in the house. Let's see. I think it's been great. Claude is, you guys are talking about Claude. Claude's very cautious about earnings, as he should be. And so he's learning the landscape. And so there you go. Oh, there's Anta. What's going on there, Anta? Again, send my best to Uncle Da. I appreciate you. Sam L. I'll go, no, Doc looking like a movie star. System recalibrating expectations. I don't know about that. I don't know about that at all. But we're doing what we can. And AI can do some pretty magical things, as evidenced by your boy's thumbnails. And so Ashfin is here. What is going on there, Ashfin? I appreciate you. A. Wills is here with Mrs. A. Wills, probably somewhere nearby as well. And so it's time to burn a pile of cash. UAL earnings tonight. What we doing, Dr. Jim? I had to pass. Just because I got sidetracked with other things. But of course, with oh wait, no, hold on. Wait a minute. No, I did UAL. That's right. I did Skewed Strangle. Man, I gotta get back on this blueberry game. Guys, I've been off. I've been doing like dragon fruit and like blackberries and all this rigmarole that Arm's buying, thinking it's healthier, thinking it's this, that, the other thing. We got to get back to the basics, guys. And so this one is on me. Like, I let you guys down. I totally missed the mark. I will get back on my blueberry game tonight and in the morning, and the memory will be on point for tomorrow's show. But I got to go because I'm out of time, which is crazy. It just goes so fast. But I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please reach out. You can email me. I'm jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Turn it up.
Hey, Tim Knight here about charts, as usual. It's a red day for a change. Wow, first time in weeks. Amazing. So we've gone from all green to red. It's not calamitous, but in this market, I mean, the incur's down 0.06%. It looks like a crash relative to everything else that's been going on normally. So I'll take it. I've actually been avoiding big domestic stuff. I'm not running around shorting the spiders or the IWM or the diamonds or any of that stuff. I'm kind of, they talk about American exceptionalism. Fine. I'm focused like overseas and things like gold, stuff that isn't like politically powerful, like getting the spider up there. No thanks. I'll just stick to weird stuff. I'm also going to spend a little more time than I usually do on one particular symbol today, car, because there's a lot of interest in that. I am not trading it. It's on fire. It's one of those things that 20 years from now, people will still be talking about what happened in these weeks with this particular stock. Just like people now talk about what happened with Volkswagen back in 2008, which is the closest parallel to that. So we'll be going through symbols at a normal pace, but we're going to kind of put the brakes on with car and take a deeper dive with that. So having said all of that, let's jump into the charts and catch up with this briefly read market of ours. Here's the spider. We've got a bearish engulfing pattern. That is the candlestick. We're floating way up here. The past 3 days, we've been just kind of hanging out up here in the upper stratosphere above this red line, which was the former lifetime high. And like I said yesterday, we could fall 5 days in a row, and that's lovely, but it's not a pattern. We're going to be in a pattern-free land for a while on most charts, which stinks because I'm a patterns guy. There are patterns out there, and I'll highlight them as we go. But things like this, no. There's nothing that can happen in this chart for a long while in which I can say, okay, here's what we've got, because we're in la-la land right now. And getting a little bit away from la-la land doesn't send you to a different territory. Here's the diamonds. They have not achieved lifetime highs. I listened to the president this morning on CNBC. That was supposed to be like the big event everybody was waiting for. It turned out to be just like 40 minutes of just whatever he wanted to chat about. So nothing market moving there. But he did repeatedly cite the stock market as an important element in his thinking. He cited the 50,000 Dow and 7,000 SP. The man knows his numbers, that's for sure. He must be a sloper, I guess. He's watching those charts, so he knows the numbers, and they're important to him. But nothing said during the interview moved anything. The Dow itself isn't at 50,000 quite. That's, humans love big round numbers, so that's something they would like to see. Hasn't happened yet. But as it is now, the Dow opened very strong, and it has sold off during the day, and now it's a little bit down by about 1/3%. But things like XLK technology just continue to muscle their way higher. Lifetime high on this one. I'm glad that I won't be repeating that phrase except this one time during the show, but it has been just a bottle rocket higher. SOXL, the leveraged bullish semiconductor fund, also lifetime high. You're just about triple digits now. So we've gone from like 40 to about 150% gain in a matter of a few weeks. I mean, this is like car, but car's not leveraged. This is a triple bullish, and it's just been just bonkers, powerful. Now, but like I said, the reason that I'm, here is because I've been trying to keep my powder dry, trying not to get too aggressive, and trying to focus on opportunities that aren't so prone to monkey business. So I've been keeping things overseas to some degree. For instance, we've got FXI, which is the Chinese ETF I've mentioned in the past couple of days. That right triangle pattern is doing its job as God intended. So far, so good. The orange lines there define that right triangle pattern. We are down 1.27%. I'll take it. Looks good. Gonna hang on to that one. Also short EFA. Talked about this yesterday with respect to its gap and the wedge, and it is down about 1 2/3%. Again, terrific. Love it. And I'll just, with all of these, I'll just tighten the stops along the way. But that's definitely doing what I wanted it to do and what I hoped it would do. Because, the movements we've been seeing in domestic stuff, like say everything, have been baffling. And I don't like being baffled. Another example, EEM. This one is down, not quite as much, not quite 1%, but we are reversing away and have a teensy little gap right there, Friday versus today. So that's looking decent. I like the look of EFA much better, but I do have a small short position in this one. Another item to keep a close eye on, as always, is Bitcoin. And this is IBIT. This is not Bitcoin itself. This is a big, heavily traded Bitcoin fund. And here we see a pretty good head and shoulders reversal top. If I would give it a grade, B minus. it's okay. It's got some good elements here. The right shoulder is lower than the left shoulder. We've got a pretty well-defined neckline. It's a little bit sloppy. If I was in a better mood, maybe I'd give it a B, but that's what it looks like now. The absolute do not cross this line is right here. We don't want to see it cross above that gap. But even better would be if it would stay below Friday's peak. But Bitcoin, I think, let me put it this way. I trust what Bitcoin and gold are doing much more with respect to like how is the market direction than I do just even the spider. So, if the spider is strong and muscling higher and then gold and Bitcoin are weak, to me, that's like this spider strength ain't going to last. It'll wake up soon enough. So I keep a close eye on that. And of course, on the weekend, it's all you got. So, I've often wondered, like, what good is Bitcoin? And I've said, well, it's a gambling token. Well, it's all we got on weekends. It's helpful. Kind of gives us a sentiment how things are going when the markets are closed. I'm really pleased with how gold's behaving itself. We're down about $100 on gold. I've mentioned going bearish on precious metals. So gold's down. Here's silver by way of SLV. It's down 3.5%. Not bad. Here's GLD, which has a couple of gaps going on. Hello, not that fast. So we had a nice little shooting star on Friday, a nice gap down yesterday, and a continuation of that weakness today. And I also made mention yesterday of turning my old friend in Palladium to the authorities. I figured he'd be going down. And so Palladium's down about 1.5% below this topping pattern. So precious, just on the whole, is behaving itself quite nicely. And so the position I was most focused on with all of this is good old GDX, the gold miners. And that's behaving itself quite nicely today. We're down almost 5% on GDX. We've had a couple of nice clean gaps on this one. Here's one gap up here. And more recently, there's this one. And then so on Friday, that very, very strong day, we had a pretty good shooting star on that one. But importantly, it did not violate the gap. It got close, but it didn't push past it. And we started to weaken some yesterday, and then today we really started to get some juices flowing. So I've just tightened up the stop on that one as well. Naturally, GDXJ, the junior miners are down almost exactly the same amount percentage-wise. So those are going all right. And with all of this, for those who can't short or don't want to short or for whatever reason but want to participate, of course, our old friend Dust is available. He's up about 10% on the day. And this is really cool, look how well that gap is held up. See, that was the bottom for Dust. And it gapped up, and since then, with all this rise and all this fall, the closest it got to sealing the gap was Friday, and it did not do so. Instead, we've got a little hammer going on here. We got some strength yesterday, and then today it's off to the races. We're getting some power behind that. So that's going nicely. Okay, so now, since I sort of raced to this portion, now we're going to slow down and talk a bit about this madman, Car. Just to review on this, Car is, big car rental company. Avis Budget, I believe is the name, Avis Budget Corporation or something like that. And it is normally a pretty dull stock, but from time to time, and it has a long history, but from time to time it does some crazy things, down and up. Because back in, say, 2008, I don't necessarily want to scroll back that far, but down in 2008, it looked like an upside-down version of this. It fell constantly and went into penny land, became a penny stock. But these days, it is doing no such thing. It has raged from about $80 up to $730 now. How can this be? Well, a couple of things. First, in terms of like, how is this happening? My understanding, and I don't pretend to be an expert in what's going on with this trade, but my understanding is there are a couple of large funds that own pretty much all the stock. And they are benefiting from this rise naturally because there's very little, if any, supply out there. And it's got a pretty goodly short interest too. And so the poor souls that were or are short this thing are just getting out because there's only so much pain you can take. And I suppose some are thinking, well, just wait till this craziness blows over. But at some point, you just can't take it anymore, or you may be required to get out. And further, my understanding is that not only do they own a tremendous amount of stock, but by way of equity swaps, they own, and I know this sounds impossible, and I don't fully understand it myself, but they own over 100% of the shares, which, again, sounds impossible, but that is the math. And you just reach a point where even if you're short and you want to cover, you want to buy some stock, there ain't no stock to buy. And you just have to wait helplessly while those quotes go higher. And I don't know what the theoretical limit of this is. As you can see, it has been green every single day. It's up 21% now. I don't know what poor bear corpses are out there suffering under this thing, but it's got to be nasty. It's sort of like if you desperately need gas, you just need a gallon to get your family to some destination. And maybe gas is 50 a gallon, or 100 a gallon, or 500 a gallon, and you'll just pay anything. Or you may pull up the gas station and be like, I will pay anything for a gallon of gas. There's no gas to be had. You'll have to wait a while. And that's kind of the situation going on here. And there is a parallel to this, which is Volkswagen, back in 2008. And Volkswagen was at the time also kind of a boring stock, and Porsche started buying up shares. And they bought, and they bought, and they bought, and they bought, and they bought. And the stock, which had plenty of short interest too, kept going higher. So Porsche was gobbling up those Volkswagen shares. And weirdly, and cars definitely doing weird things, but this is weird too with Volkswagen, this was in the midst of the financial crisis. This was like in the autumn of 2008 when everything was collapsing. And here's the crazy, crazy part. For like a brief while, maybe even just a day, Volkswagen was the most valuable company on the planet. These days it's probably like 900th or something like that. But, it was like the NVIDIA of its day. Nobody was worth more. And as you might guess, at some point, that nonsense stopped. And it fell all the way back down to where it had been. So there's nothing actionable in this. It's just kind of an interesting tale. At some point, this will stop rising. And at some point, we're going to see a lot of huge red bars, I think, just like we're seeing all these huge green bars. So as I've said day after day, I like to watch this from several football fields away where it's safe. But this will be the one I'm going to be talking about for a long time. Okay, that's our cars segment. In the minute we've got left, let me just bang through this real quick. Here's AXP, American Express, which looks pretty good, but I got to tell you, I got out of it. I'll probably hate myself for it. I had some puts on this and just threw my hands up because it's just pushing into this pattern. But, XLF is doing the same business. XLF has a beautiful trend line. Look at that, which was broken. And we've pushed against it, but we've pushed a little bit above it too. So financials are being a little stronger than they should be, in quotes. We're seeing a lot of that lately. As far as semiconductors, we saw the outsized version of that earlier with SOXL. Same deal here, but in a normal sense. So here we are, lifetime high on those semiconductors. We just got a few seconds left, so I'll just say a couple of things to say goodbye. No huge events this week except really for earnings. And those are tumbling through. But for my own disposition, this is one of those markets where actually stock picking is helpful because you can kind of separate the wheat from the chaff. And so far, so good. It's working out. And of course, with Wednesday tomorrow being ostensibly the end of the whole ceasefire thing, there's going to be some surprises, good or bad, along the way. It's going to be an interesting 36 hours, I would say. Thanks for coming by, as always, and I'll see you here tomorrow. Bye-bye.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Hello, everybody. If you didn't see enough of us on the trading floor, we are back. This is Last Call. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. Jenny, you look very tan from the last time I saw you until now.
Do you think so?
Oh my God, yeah. Did you go spray tanning in between?
Was out doing some yard work. Got some quick sun. It is sunny and I hesitate to say warm out because it is windy, but I've been planting flowers.
Well, your vitamin D level is up, up, up. Do you know what else is up today? Lots and lots and well, not lots and lots and lots. A handful of earnings.
We do have a handful of earnings coming up. I don't know if there are lots and lots and lots of stocks up. The only stock, there are some stocks up. NASDAQ's up. Microsoft's up. There's a handful of things up, but coming up, earnings trades. Earnings trades. If we want to jump in I'm going to go to the earnings art card real quick and kind of take a look at it. This is what we've got on deck for today. Today, after the market closed, we've got United, Capital One, Interactive Brokers, and I don't know why they made Intuit so like it was like a vision test to read Intuit. And then before the open, you've got Boeing, CME, Veritiv, I've never traded that, Philip Morris, and AT&T. And it is so hard to read. I think it's intuitive.
And that's what I said, intuitive.
Oh, I thought you said Intuit.
No, I said intuitive. I don't know why they put it so small.
I don't know. So far, the two of us, right before the show, we put on an earnings trade in you all, put one on in Boeing. I put one on in telephone. So let's jump in. We have a lot to do.
Let's do it. I'm going to glaze over that. Okay, so let's go first. Let's go let's go down the list. You can guide me which one you want to do first.
Well, also, let's take a look at our SPX Broken Wing Butterfly from earlier today.
So this is interesting because, Jenny, the SPX was just only down 6. And I was like, this is definitely not going to come in. It's coming right back into the middle of our butterfly, so we can keep an eye on this as the show goes on. But
we'll see where we close.
The only reason I was talking to you during the show is I'm going to go to something real quick. CBO's most active. I saw this. So take a look at this. 163, 104 on the 60, 100, 60, 110. And
7100.
I'm sorry, 7100, 7110. Jenny, when I went into this was the 7100 was in the money. It was $6 when I opened it up 5 minutes ago. And now it's up.
Right now we're down 20. So the market is moving. I mean, we were down as much as I saw us down 40. I don't. Right? Did I see that correctly?
We were down. We were definitely down. And we did just get a breaking news message from our super producer.
Oh, let's pop into it. Ain't no party like a
ain't no party like a PDT party because a PDT party
ain't no party like a PDT party. PDT rule eliminating on June. I don't see June 4th on there, but I thought I heard June 4th.
Dance. I can't wait.
Okay.
This is just the floodgates have been opened.
Tell me, do you see June 4th on there? After 25 years, the $25,000 minimum equity requirement, pattern day trader designation, and 4 times leverage buying power are going away. Intraday margin standards for day trading. So, effective June 4th. There it is, right up on top.
Oh my God, did you see Josh, our super producer? It's literally at the top.
June 4th, we're going to have a big party. I'm going to look at what day of the week it is right now. What day of the week is June 4th? Because we're going to wear our party outfits.
Do you know what else?
It's a Thursday.
4 times leverage buying power are going away. Because do you remember how sometimes you'd have those on and you'd have a lot of buying power at use? Yeah. It's a Thursday. We're going to be wearing red.
What does that mean? 4 times leverage buying
You
power?
and I both know this. Sometimes when you'd be in a 0 DTE, you'd be holding up a lot of buying power at the end of the day.
Oh, yeah. That's going away too. Great. Yeah. Great news across the board.
We didn't even think about that one. That one's gone too. Look at this. We are coming into the middle of our butterfly. Spoos are down almost 30
It's
again.
too soon for that. It's too soon. I'm not going to get excited about that. It's too soon. I want to see that at 259, not at 240.
I know. Well, then close your eyes because we're going back to the platform.
All right. We want to see that later. I don't want to see it now because I don't want Spoos to keep falling. I know we had
but I did want to show you something with these, which is kind of fun. So take a look at this. It's up $50 right now. You will notice at some point, sometimes you can be up more than your credit, and you can take them off for that if we want to jump into it.
Yeah, you can. You certainly can. Let me take a look. Okay, someone asked me, they want to know the times and strikes I had for SPX because on the show I said I was out. I pulled it up. I had the 71.15. I did a very baby trade today, $10 wide. 71.15, 71.05 for $4 at 8:37, and I closed it at 847, 10 minutes later, 71.15, 71.05 for $3. I took only $100 out of it. So 10 minutes, 8:37 to 8:47. They wanted to know my strikes. I think most people who maybe put it on at 9 didn't get out.
Yeah, and I mean, our study does say 9 o'clock. You did do it a little bit earlier on the train today, but this was just one of those bad days. But like I said, it was interesting because I saw this 7,100 in the money 10 minutes ago.
The market's kind of, we've been all over the place. We've been all over the place. But we haven't really been up. Were we up then? 71? No.
We had to have been up.
Like we were up this morning. This morning we were up. But when I put that trade on, suppose we're up 1 or 2.
Yes, and then all you needed was a quick pop and you were out. So sometimes it's better to be lucky, but you had your GTC in and you got hit, so that's good. It's very good. All right, let's go to Boeing first. Let's go Boeing. Boeing's on deck because this is a timed show, unfortunately, and it's 42.
Okay. All right, then let's get some earnings trades on. Boeing has earnings. We both looked at it and thought we could do the 217 calendar.
So I want more profit potential than this, Jenny Andrews. 138 is not bad. We can land here and I'm fine with it.
Honestly, I don't mind it. The 217 calendar, it's cheap, right? And actually, I looked at the diagonal. I looked at the calendar. I ended up with the calendar because the diagonals just seem too expensive percentage-wise to the width of the spread.
I'm just going to show this real quick. Percentage-wise to the width of the spread. So I would be buying the at the monies in the 10-day and then going to the 3-day and selling the just out of the monies. So here you've got it's 50% the width of the strikes almost. Mm-hmm. You've got a 750 wide for 390.
Yeah, it just seemed kind of expensive. So in Boeing, I just went with the calendar to have something on, but very little risk on.
And just to clarify, if somebody's new, she's not saying that that's too much capital for her to pay. What we're looking for is the width of the strikes versus what we're paying. When we say expensive, we try to have it less than 50% the width. So say you've got a $10 wide, you want to pay less than $5.
I mean, SPOO's down 55 now. So
oh my God.
Yeah. It took a real ugly turn.
Oh my God.
Don't look at it. Don't look at it. That's why I said, like, there's no cheering at 240.
Well, we could have closed it for $80. That's part of the problem with these and leaving them. Okay, so I agree with you. 217 calendar, and it's right at the money's now. We're going to sell the 217, and we're going to go to this 217, call it.
But as quick as we are down 55, we could, and I don't know if there's any news. If you're out there and you're watching on Twitter, and then the breaking news came out, share it with us on Twitter, and include the hashtag LAZGNY. I'll be keeping an eye on it.
I will too. We will be keeping an eye on that. Okay. Now, so that Boeing is in. I want to make sure we get filled. I'm just trying to go to the working orders. And look at how much that's getting away from us.
Yeah, the market's really moving.
Okay, we're filled. 145 in the 217 Boeing calendar. Technically, that is the...
So here, Iran will not attend Wednesday's talks according to... This is coming from a secret source. This is coming from one of our important sources. So that maybe that news just came out, and that could be why the market's going down.
Why the market fell out of bed immediately. I'm sure that's what it is. Okay, so we're in for Boeing. Now that actually makes me happier that we're doing that instead of the diagonal, because sometimes I think sometimes the earnings follow what the market is doing.
Yeah, I mean, look at the market now. It's down 60.
Yep, that's a big one. It's a big one. It's a big one for 15 minutes left. So we can continue to slide or we can rebound back. I think we're going to stay. I think we're going to stay down.
I don't know.
Now let's go to you all.
You all. We went with just a diagonal, right? We decided on a diagonal because there's more profit potential than a naked put. And then you don't have the unlimited risk of the naked put.
True. Okay, so let's take a look. So the diagonal. So when I was looking at you all, I'm just going to go through my thought process real quick. These markets were much tighter earlier.
There's still, I guess this one's tight. I
It's
thought
only- it's
originally,
only that 89 that looks like a wide market. It's weird.
that's the one I was looking at because this was too
Well,
much.
and the 91, some of them are wide. Some are.
I was looking at the Jade Lizard, so I was like, why is this 60 cents, 90 cents? That's insane. That was originally what I was looking at. And so if we're going to go through the diagonal process again, it's the same concept. If you think you're going to be, this is a bullish trade. We did it in Netflix. We have one in Tesla as our earnings trade already. And we're going to try it again. Third time's a charm in you all. Selling 103 and buying 197. You're spending this is interesting because we're $6 wide and we're 291.
It's there. I think as we get later in the week, tomorrow's Wednesday, doing these diagonals, we're paying closer to 50% the width of the spread instead of a third, at 33%, which is what we saw on Monday. But it's okay. We're risking 300 to make 300. If UL stays right here, there could be some recourse. If UL goes down, we can get out of this and just sell a put then. I kind of like the bullish diagonal on earnings. And if it goes down, sell a put to make up for the debit you paid for the diagonal.
Because I sort of thought this earnings cycle would be a little bit better. I mean, we're not in it yet, but everybody has such high hopes for this earnings cycle, which that also leads me to believe that everything's probably going to go down because of that.
I don't know. We are bouncing back a little bit. It's only down 51.
Yeah.
We need SPX.
We're not too far. We need
75.
We need 10 points, right? If you go to SPX, I'm going to ship this. I'm going to pay 304. We'll see if we can get filled. I'm not going to penny it up though. So what we need, and then we'll go to more earnings too. But we need SPX at
70.75.
And we are not too far away.
Go to the position page. Well, how much is? I want to see how much this is right now. It's $135 loser.
You can see it moves, it bounces around right now. We sold it for 55 cents. It's now 190.
Yeah.
You get this up a couple points and we're not in bad shape.
No.
We're rolling the dice.
Well, that's what we said when we put them on. We would just put them on and leave them. These will put them on and leave them. If otherwise, if you're playing for the credit, don't do a butterfly or Brooklyn butterfly. If you're playing for the credit, do a spread.
And so this was my bread and butter last year. Do you remember this, Jenny? And I hit. There was no greater feeling in the world than when you hit the butterfly that you didn't expect to hit. It's the greatest feeling in the world, right? So this is. I mean, and you have to be playing with fire at the end in order to hit the butterfly.
Right. You're right. If you're putting these on for a chance of hitting the butterfly, you are playing with fire at the end. Because at the end of the day, and if you're close to hitting it, it's touch and go right there. Winner, loser, winner, loser, winner, loser.
Yep. And we've seen that as we've been sitting here watching it. It's kind of fun to watch a butterfly with you at the end of the day. I've had these on for a long time. I've been trying these and they've been pretty good. They've been
We'll have to put these on every Tuesday since we're on last call. We'll have some fun entertainment on a Tuesday last call. Okay. So next,
I want to go to, here we go. Oh, that was not what I meant to do.
What do you have?
Oh, there we go. Okay. Now we have Boeing so don't look at Boeing. Boeing's in already. We're working you all. Indirect to brokers. Is there anything you want to look at here? You put on an AT&T trade. So let's take a look at that too.
Oh, my AT&T, you can look at the premium and guess what I did.
Okay. Is it just plain T? Yeah. Okay. Yeah. AT&T.
And I know the last time I think I called it telephone and I got a lot of slack for calling it telephone.
You did get a lot for slack. So I'm going to guess in AT&T, because it's got a decent dividend, you just sold this put.
Oh, no, I didn't even think about that. Pop out the side. What is the dividend in telephone?
You always talk about telephone's dividend.
No, I'm not in it anymore.
It's got a 4% dividend.
No, I didn't. You know what? All I did, I bought I just bought a call. I bought the 25 call.
You gave up 34 cents in extrinsic value?
But I should have sold the 25 and a half put. I'm going to take a look at the chart. Let me see how high.
You're not putting up a lot of capital. So that's the reason I went with that one. Part of when you said look at the premium, I thought you might have gone with the 26 because there was more premium in the 26.
No, I felt like there was not enough premium in these options to justify earnings risk. That's why I just bought a call for $1. $1.50. Yeah. But the market's kind of wide. Pop open the chart. I just want to take a look because that may have been
Yeah, I think I didn't want to sell the put because we could be back to 23 tomorrow. That's why I thought I'd just spend $100 on a call.
We've been talking so much about dividends and covered calls. I thought for sure you were selling that, saying if I could put the stock, so what? Because now I'm long the stock. It's not bad. But you know what? We'll risk less and jump in with you because I don't mind. Well, I would rather pay less extrinsic value.
I know, but then you got more risk on the.
Yeah.
Or throw in the diagonal. The diagonal is going to be so cheap. Throw in the diagonal.
Well, you're only getting to. This is where.
Yeah. It's going to be 26, 27.
This is where the common sense lies.
That's why I just bought an in the money call.
You're paying 50 cents for the 26, 27 to make 50 cents. Might as well just do the wrapped around the at the money call.
The money, yeah.
Okay. Yeah. I kind of agree with you, and I know we're not going to trade it, but I do want to take a look at Philip Morris.
So here's where with that wide market, 25, 93 cents is parity. We want to pay I'm going to pay 40 cents over parity. So you pay $1.30.
You want to pay 30 cents over parity. I'll see if we can get it.
Well, I mean, that 30.37, I don't think you're going to get filled. I think you're going to have to pay $1.30.
Now, what she just did was the math. She took the extrinsic value of the, I'll go 130. We'll see if we can, 132.
Yeah, I think, and then you'll get filled. There.
132. Perfect. Okay. Filled. Spoos are only down 50, which is crazy. Okay. I did want to take a look at Philip Morris.
Sure.
Philip Morris is a $54 product. You've got 3 million shares traded. It's come down quite a bit.
It's come down quite a bit.
It's come down quite a bit. It's still a $150 stock though, so you got to take that with a grain of salt.
Price out the diagonal, the 155, 160, 155, 160. You got to flip it.
Oh, I flipped it. Flipped it. Hold on. So I'm selling the 160. This is going to be expensive. Not expensive, but it's over the width.
$250 for $5.
So the reason I just want to walk through people that haven't been with us for a long time. When you're calendarizing this, or you've got a diagonal, meaning you've got a spread that you're using over 2 different cycles, you don't want to pay 50% the width of the strikes because otherwise you'd rather be in the same strikes.
Yeah, you don't want to pay that much. It's kind of weird. We like to see less. If they're 50%, we don't do it.
Right.
We don't do it.
Right.
So I don't know. What else was on that list? Can you pull up the,
we have some big ones after the market closes tomorrow.
CME Group.
No, we can take a look at that. I think it's pretty high. Sorry, I have to keep going through that.
I never look at CME Group.
CME Group and SIBO have been are pretty high.
But I bet. We love our CME partners.
We do love our CME partners. And it's not like these are, you want to talk about, look at the volume and the open interest in this. This is an illiquid market.
Yeah.
I haven't opened up a volume and an open interest that low in a long time.
Can I see the chart again? How high has it fallen from?
325, 330.
Yeah, it's a 284.
Yeah. And it's not, the rest of the market's at all-time highs and this is down. That's kind of interesting.
I kind of want to make a play in CME Group.
The problem is this: you've got $340 at $4, $250. These are wide markets. Now I know that doesn't necessarily matter on earnings, and especially if you're going to let things go. So we kind of said that with SPX and things of that nature. If you're going to let it go, fine, because you're either going to come in long the stock or you're going to have your premium.
I just threw in an order. I'll see if I get filled.
What'd you put in?
I just did a wrapped around the at the money call spread, the 280, 287 and a half, or it was like 333.
And this is exactly why you wouldn't diagonalize this, because if you're going to pay 50% the width of it, you'd rather be down a little bit, where if it pops up, you can make some money. The diagonals that we're doing. So
then I could make full profit. I could make full profit by the end of the week. You know what I mean?
Well, right. And I'm just going to make it very obvious. Here we go. Here's you got the 280, 290. You have just about 50% the width of the strikes. If it goes up, you're going to make some money at the end of the week. If you're throwing in the diagonal, I'm going to go 92 and then we'll open it up. I'm going to do $10 wide. 82. You're paying over it and you're not going to make full profit. Even if
I'm
it
not,
does
getting,
go up.
I'm not getting filled though, FYI. Like,
I know, because that was my big thing. This is the most illiquid market I've ever seen. Take a look at this. Look at the open interest in volume. That's insane to me.
So if, like, my thought was, if CME is down, this will all be out of the money. It's not worth anything. If it's up, you could let everything exercise and assign. A $10 white spread would be worth $10 on Friday. It would all exercise and assign.
Yes.
And you don't have to. But these markets are very wide. There's not a lot. I just thought, I'll play it because we like our CME partners. But,
we do like our CME partners, and they're not mad at you for not putting a diagonal.
I'm working the spread that'll probably never fill.
Okay, I know it's early, but I'm going to it.
256.
Look at this. We just need a little bit. So we needed 70. We need $6. We need 70.75. We need $12. 12 points.
Filled on my CME order.
So it could work. You're filled on your wrapped around the at the money CME order?
I had to make some adjustments. I had to give something up. But, okay, so back to your SPX. We still need a 10-point jump.
We need a 10-point jump. Any point jump over 65 will allow us to not be in the exact danger zone.
Yeah. So again, that's like, that is the issue with these. If you want to pin it when it's near that, you're always in that danger zone area.
I mean, when you put it on at 10 o'clock, you're playing with fire till the end of the day. And that's what we did. And that's where we are. But anything can happen. This is going to sound insane. It's 57, right? Am I looking at the right time?
Yeah, we have 3 minutes.
It's 57. So 3 minutes is an eternity. And are you surprised? We're not down more than this, given the event risk that we just got from our super producer?
Again, nobody tweeted about anything going on. That's just what Josh had seen. But the market's not really doing much. I mean, we went from down 20 to down 60, but now we're bouncing back.
Well, no, we went down pretty quickly because remember, we were almost unchanged. That's what I was trying to tell you. We were almost unchanged, and then we went down rapidly. We were at 7,100. It was 71 was in the money.
But all day today, we had these quick moves, right? So during our show this morning, we saw a handful of quick moves, like Spoos down, move 20 points, 20 handles in a flash. So we've been seeing these quick moves throughout the day. It's been kind of a weird day.
Yeah.
258, how are they we need a rally on the close. We need a little bit of a rally.
I mean, they have been rallying a little bit. We were down almost 60 points just now. Now we're only down 47. So this is still anybody's game. Because we're trading, 70, 63. So, and you'll see this. When the bell rings, this SPX print will stop. This will widen out, and the bid and ask, I'll stop saying this. The bid and ask will widen out, but the print will stop.
And you'll see it. SPX will stop. Does it stop?
SPX stops moving. Yes. When the bell rings, SPX stops moving. And you can see where you are. The bid and ask will widen out.
Okay. Well, we've got 1 minute. 1 minute, Liz.
Yeah. Well,
1 minute. What we want is like anything over 70, 65. Anything over 70, 65 is going to save us a little bit of money. So that just saved us $1.30 if at 66.35. So like any little bit up helps. And this last minute.
It is
anything
kind of
below 70, 65, not so good.
Not so good.
And when the bell rings, if we're below 70, 65, that's when it's like, ooh. Oh man,
here it is. 70, 64, 19.
70, 64, 03.
Okay, there we go. Then did it lock? 70, 64, 03.
Rough. Well,
it happens.
Yeah. But is it going to stop you from doing this again tomorrow?
No, because I'm not going to tell you what happened to me.
What do you mean? I pinned it. My one from yesterday.
Oh, from yesterday.
The one I put on last night.
For today.
I was rooting for this one because I would rather have just taken my credit. But it's tough. That's a tough one.
No, I know, but that's what I mean. Is it going to stop you from doing it? No.
And I like the fact that we do them on Tuesdays because then we can keep an eye on it. But take a look at that. We stopped where we were, and then now we're continuing to slide. Spoos are continuing to slide.
This afternoon, I just thought, oh, we'll keep that $55 that we took in.
Yeah, that's usually.
I thought for sure. Oh well, we're just going to end up keeping that $55.
We would have until 10 minutes before the end of the day.
Yeah.
That's exactly what would have happened. Is we would have kept that money until 10 minutes before the end of the day. All right, we're cutting into the other show. Everybody, good luck with your earnings trades out there.
Yes, remember to trade small, trade often. This is not the end of the
last call.
This is last call. Everyone have a great night. We'll see you tomorrow. Stay tuned for overtime.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
No trip to Pakistan. At least that's the rumor. It's still Tuesday, April 21st, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 27 minutes as we wind down the trading day. A day marked by more of these headlines, Ilya, where the market is grappling with whether or not a second round of U.S.-Iran ceasefire negotiations will take place. The deadline is set for this evening. 7:50 p.m. Eastern, 4:50 a.m. Pakistan time. So less than 4 hours, unless the fighting doesn't resume then, which I suppose, Ilya, that would be the first sign that we're going to take another bite of the apple looking for a ceasefire attempt. If the ceasefire ends and no missiles go off, that's probably going to be interpreted as good news by the market. But we now have this clock ticking, and J.D. Vance not on a plane, despite the reports yesterday that he was flying over.
Not on a plane. This is where we've arrived. We're watching whether J.D. Vance gets on a plane. Is this not how you look at a market and go, man, they've over extrapolated everything to the point where all the good news is already priced in?
Perhaps it reminds me of the Shohei Ohtani chase when he was flying to Toronto. I digress. We have a range here carved out at the start of this week. S&P 500 fell to a low today that matched its low print on Sunday evening when the futures market first opened, 70.85. We're currently teetering, hugging the year-to-date high that was set in January prior to the recent breakout higher. So that's a former all-time high that we're sitting on. And we're sitting upon the one-week moving average. So it feels like this is a loaded market ready to decide whether or not it's going to give up the goose here for a little bit of a pullback, or this is simply a bull flag with a mere pit stop on the way to another swing to the upside right now.
Which it could be.
It could be, but oil here, the deciding factor, back to 91.72. It did crash below 80 at a point on Friday, so a quick little 12.5% bounce or so from last week's lows. Ilya, that's where this table is set here. It feels like the next 24 hours are going to be a market that rewards people who are particularly nimble.
Yes.
And are paying attention to the news.
Yes. I mean, I think that's exactly the way to look at it. I mean, I have been of two minds in the way I've structured my exposure. I have my put verticals and call verticals in the various assets that I'm looking at on one side of this, and then the futures exposure on the other. And the futures side, because it's Delta One exposure, I'm either long or short the dollar. I'm either long or short gold through the 1 ounce futures. That I've managed much more aggressively, where if things don't appear to be going in a direction that makes sense, because these are Delta One instruments, I flip them over. If things have broken some level that is an invalidation point, just like you and I used to trade good old spot FX back in the day, flip it over. If the market is telling you you're wrong, don't just close, go where the market's going. And so what I've done just since Sunday is gotten long dollars and short gold. And today, that turnover seems to be working. It was a little bit dicey yesterday, but pointedly, there continues to be this disconnect between the rabid optimism in stocks and every other war trade asset.
The war trade
has not done what stocks have done.
That war trade was definitely in effect today. Stocks down, treasuries down, gold down, oil up, dollar up.
Yes.
That's the
which is what we saw at the weekly trading open. And then everybody said, nah, wait. If there's one thing that this thing is known for, it is the consistency of U-turn. So if it opened this way, it'll U-turn the other way. And yesterday they flirted with that. Well, we're right back down to where we opened, essentially.
Effectively here, and this isn't a big range, so just for what it's worth, if we were to talk about a potential pullback, a measured move, as you see with any equidistant range, we'll call it 71.80 down to 70.85, and not 100 points. You're looking for a pullback maybe just south of 7,000 here, just from that particular consolidation. And given where that would take you, 1 month, or this is the 12-hour chart. So effectively the 10-day moving average right now is just around 7,000. Right, 12-hour chart, half a day, 21. So 10.5-day moving average is right around 7,000. That wouldn't be a hard case to make for this market to pull back into, and some jitteriness here. Mm-hmm. But I suppose the question is, let's just play this out here, scenario plan, Ilya. Let's say it's 7:51 Eastern time. Instead of being forced to watch the Knicks have one of their worst playoff losses in history, you're sitting here watching the market and Twitter to see if oil futures start moving because of a resumption of conflagration between the United States, Israel, and Iran.
Yes.
Is this market going to be a liquidation market because people got too bowled up too quickly? Or do you think that we go back into an early March, mid-March mindset where we just kind of start grinding and chipping away lower in somewhat of a Pavlovian fashion? We've been conditioned to think that there's an off-ramp coming. Trump's going to taco. Why get bared up too aggressively in the early days if the ceasefire ends?
I don't think you do get bared up aggressively in the first few days. I think the market is clearly willing to grasp at straws here. It's also because we're watching whether J.D. Vance gets on a plane to Islamabad as though anything matters, as though it matters whether he does or not, as though what we have seen in the recent days is not Exhibit A for we don't know who we're negotiating with, because the two sides aren't negotiating with each other within the Iranian regime and clearly don't agree, which is how we have this U-turn. We've now had very clear reports from credible sources like The Economist, say, my favorite, where you have readouts from the initial J.D. Vance summit in Islamabad And the news is simple. It isn't that the Americans and the Iranians couldn't come to some sort of understanding and bring their positions together. It's that the different parts of the Iranian delegation couldn't come together and bring their positions together. And Pakistan spent more time mediating within the Iranian delegation than they did between Iran and the U.S. So, and we see the results. The strait is open. It's not open. Go ahead. Don't go ahead.
Hold on, Ilya. Things don't just happen
I see friend of the show, Nick Batista, in the messages here. Woo, hello.
Yeah, there's a headline, 7129.
Are we grasping at headlines again? Wait, he got on the plane.
Based on the fact that the government of Iran is seriously fractured, not unexpectedly so, and upon the request of Field Marshal Asim Munir and Prime Minister Shehbaz Sharif of Pakistan, we have been asked to hold our attack on the country of Iran until such time as their leaders and representatives can come up with a unified proposal. I have therefore directed our military to continue the blockade in all the respects, remain ready and able, and will therefore extend the ceasefire until such time as their proposal is submitted and discussions are concluded one way or the other. Indefinite ceasefire. There's your news. There's your news.
But the Strait of Hormuz is blocked for everybody now.
For everybody now, which Iran earlier today said that the U.S. blockading the Strait of Hormuz is a breach of the ceasefire and taking the tanker and the
we've imposed
crews.
our own ceasefire and blockade. Got it.
It's one of the many reasons, Ilya, when I'm looking at the news here today, I'm just like not super worried about oil making another trek towards 105, 110, 120
It
again.
doesn't seem to want to. It seems to be locked in at about 30% more expensive since the start of the war. I mean, if you looked at the retail sales numbers today, they looked very juiced by people having spent much more on energy.
But also, the retail sales control group was a blowout. And that's the
It was
GDP
solid. It was very solid. And so you get this sort of tale of two cities, right? On the one hand, consumers are obviously still resilient. On the other hand, you can see how they're going to have to trade down and get some of this spending crowded out if energy keeps doing what it's doing.
You know, we had a lot of revisions to forecasts for the economy over the course of the first quarter. When you make your way to last week, first quarter GDP estimate for the Atlanta Fed falls to 0.9%. Not for nothing. What we've seen since Friday has produced a bump to 1.2% here. So as we're making our way through the March data and getting away from surveys and some of the harder figures, we're beginning to track a little bit to the upside. Not that 1.2% growth is good. That's not good growth by any stretch of the imagination. But you get the end of this war at some point, right? Permanent ceasefire. Trump really wants to get out of this war.
He's done with this thing. Maybe.
He recalled Huckabee today. He's recalling Huckabee to tell him, like, listen, you can tell Bibi, like, we're not going back to war.
He's called this thing an excursion. That's sort of where you see his mindset, I think. And
I mean, right, because like neither situation, neither group of negotiators right now are actually doing anything other than talking tough to try to gain some superficial veneer of leverage as they head into a second round of ceasefire negotiations, right? But no one's firing missiles. There's no drones that are going like, oh, Iranian drones spotted over Syria. You're not hearing those headlines. They can be bluffing like that. No one's bluffing like that right now. I mean, this is going to keep a cap on oil and probably keep a floor under equities, even if they start to sell off. But you see here at the end of the day,
a floor under equities, I'm not so sure. We're going to have to find out just how resilient the market is to the idea that there's not going to be rate cuts at all this year. I mean, we heard from.
Well, forget this year. I'm saying floor right now. We have the yearly high from January at 70.96, right? 70.98.
Yes.
We have the swing low from the start of the week at 70.85.
Yes.
We have the swing low from today at 70.85. I would just posit, right? Like the floor that we have for us is 70.85, 70.95. If we're below there, bears are in control in the short term.
I would agree with that. Yeah. No, I think that's right. And And it would be a pretty emphatic signal if we held under that range since October, broke it, and then failed. Failing on the break here would be a pretty ominous sign. But we're not there yet. So far, you have to treat this as a bullish breakout.
Yeah, love that ceasefire. So much for 7:50 p.m. Eastern tonight. Looks like I have to watch the Mets, which is a nightmare unto itself right now. Ilya, the dollar today, it does have a bit of a bounce here, although it comes back over the past few minutes as we've seen, broadly speaking, risk assets rally, so dollar off. But there was that particular wrinkle or contour today's market action where you had this reach for liquidity again, right? As much as the stock market has been wobbly, it's only off. NASDAQ's flat. S&P's off 0.3%. Oil's up 3%, but gold down 2%. Silver down over 4%, right? Treasuries getting hit again as well. People aren't fleeing to the safety of treasuries, and you see here how they're up on the back of this news. What are we missing right now in this market? Why is that liquidity trade still poking its head up above water? If that dynamic is done, if we're ending the war, how come we're seeing some of that type of relationship unfold? Oh, this is a last gasp of the war trade before we got the taco right now?
I mean, like, this really has been the essence of why I've looked at equities with suspicion over the course of this rebound. Because it's just not anywhere else. It's not in oil, which, to your point, it isn't rallying. It's also 30% higher than it was before this thing. And by the way, it was already trending higher. So this is not year to date 30%. This is just since February 26th, when the war begins. 30%. So is it unclenching? No. If it's not unclenching, why would you get anything better in yields or gold or the dollar? You're not. So you've come back some way because sentiment has obviously played a part. And at one point, oil was up 58%. And now it's 30%. So it's better. You've had a little bit of a relief in the bonds, a little bit of a relief by way of a pullback in the dollar. Look at what gold is doing today. What a clean kiss of the underside of a trend line and rejection lower. Is that the sign of a market that thinks that rates are going to normalize back to where they were before this war? Negative. So this is the issue. If the concern at the start of the war clearly was this will keep rates higher than the markets want them, and you could go down the list of assets and watch the reaction. Oil up, so inflation expectations up, so yields up, so dollar up, bonds, gold down. Could it be any clearer or any more textbook? And now on the way back, only equities seem to want to do the full 180. Nothing else is. It's off a third in the other direction. It's off half in the other direction. But this so-called unclenching of the war trade, it only exists in equities. It doesn't exist elsewhere. And those rate cuts are not back on the board. They're nowhere in the Fed funds futures. Next year, we have a little bit more easing, 43 basis points baked in for next year. So the market is at essentially one cut and about 50-50 shot of a second, give or take. So you look at this and you go, well, which thing is wrong? And that's why you look at equities and you go, okay, surely this is the market that's biased higher structurally. So, and we were going into earnings season, and surely nobody wanted to be on the wrong end of some explosive AI to the moon report, just in case.
You know, I'm thinking about right now, I saw a comment earlier, what if the U.S. and Iran follow Korea's path? And I'm thinking the reference is, what if Iran and the U.S. follow the path of North Korea and South Korea coming out
Just
of the
a
Korean
conflict that's frozen in time.
War. Yeah, because they signed,
not unlike Russia and Georgia, say.
Yeah, so 1953, the U.S. and South Korea signed an armistice with North Korea, but no peace treaty is ever ratified or signed. And so, technically speaking, the two countries are still in a state of war. The ceasefire established the demilitarized zone, the DMZ.
Yeah.
And, Trump's ceasefire announcement today, Ilya, indefinite ceasefire until a proposal submitted.
Well, this is sort of what we talked about yesterday, right? The strategy here may be enough shot callers, for lack of a better term, inside of the regime have been killed. Now there is a power vacuum and a struggle for who's going to be next. And you can see that clearly in this incoherence in their policy response and their negotiating position. Maybe the president is doing this on purpose and saying, you know what? I'm just going to sit here and let you all figure this out because this is exactly the kind of instability that I wanted. This is exactly how we're going to get to regime change. We're going to shake this thing loose. Everybody is going to fight with everybody, and we're going to stop throwing missiles at this thing because how in the world are people supposed to get out into the street as they did in December and try to tear this thing down if we're raining missiles on them? Why don't we not? Maybe this is the strategy. He's playing for time.
Yeah, because I love this. The Iranian state media official report is that the negotiating team sent a message to the U.S. delegation that they will not be attending the peace talks on Wednesday for various reasons. And the decision's final. No details.
Various reasons.
This is a ceasefire, but it's also a blockade. It's a siege and a blockade. Looking over the numbers
the
here today,
diplomatic equivalent of it's not you, it's me.
15 to 20 days. 15 to 20 days before Iranian wells start to get shut in.
Mm-hmm.
And then the damage to the Iranian economy, even if no missiles are flying, then they can't get money and they can't keep the regime.
Well, and then China. And we get back to where we were before this war and the conversation, why is oil creeping higher from January? Because China is getting squeezed.
I feel like oil's going to be stuck here for a bit. If it's going to be 80, 85, I still feel compelled to stick to my, thesis from yesterday, even after looking at the broad sweep of the market today. If this thing gets a break below 81, 82, 80, right? I'm not going to treat it like a head and shoulders and buy the deep out of the money, the far out of the money puts. I'm just going to treat it as a way to, we're not going to break 100, 105, 110 again. If we could start to sell calls up there or maybe look directionally neutral again, with a tighter strikes, that's feasible. But it's a 63.5 IVR. And so if we get a rally up into 95 or 100, I'm going to use this as an opportunity to sell calls. If it's a permanent ceasefire, why would Iran break the ceasefire? There's no reason, there's no incentive for them to break the ceasefire right now.
I mean, they might be too busy fighting amongst themselves to even think about breaking the ceasefire. But you might just have other fish to fry.
Speaking of the ceasefire, it kind of feels like this all started getting undone over the weekend when we woke up on Saturday morning to news that the IRGC had attacked an Indian flagged vessel. Ilya, the audio from the bridge was leaked out where the Indian ship captain was saying, we paid you. We're second on your list. We paid you. Why are you shooting at us? Stop shooting at us.
Uh-huh.
Why do I have Bitcoin on my screen? Are those two things connected? They very well may be. There's a fun little rumor going around right now. And there's lots of rumors that go around. Many people say things. But this is coming from various folks in the crypto field who I think are usually credible. And I'd encourage people to go check for it themselves. But apparently the kerfuffle is because the Indian ship was scammed in a crypto scam. Yes, Ilya. Scammers got in touch with the Indian ship and said, give us the $2 million in USDT and we will get you through the strait.
Incredible.
And so they sent this money over to the scammer and USDT. And sure enough, the ceasefire looks like it's breaking because, well, what news is going out there? Iran is attacking Indian flag vessels that are paying the toll. Apparently they never paid the toll, Ilya. This could just be a rumor. But it would be really interesting to see a true use case for crypto out there in the wild right now, not just beyond.
Well, I mean, one of the interesting things about this is Iran is one of the Bitcoin mining hubs in the world. It's a huge mining hub. And one of the more interesting things here could be if you start to really starve Iran for energy, one of the things you're going to disrupt is a very large crypto mining node.
Oh, what would that do for short-term supply? Well, it's an interesting looking chart.
I mean, I'm long. So when it started to look like risk on last week, rather than take my stock positions off, I started as we discussed, I started putting some risk on exposure on as a counterbalance. And much of it is IBIT. So let's see.
IBIT looks decent, 75,000.
I've got call verticals here.
It's up 1% in the after hours, Ilya, just for what it's worth. It was 75.06 on the mark close. It's now 75,790. So stocks risk stabilized. If you missed the beginning of the show, permanent temporary
ceasefire.
Permanent temporary ceasefire. Ceasefire is going to be happening until Iran submits its proposal. So no proposal, no end to the ceasefire.
The flogging will resume until morale improves.
I'm tired, boss. I've had some friends asking me who work in finance. They're like, how's the last month been for you? I'm like, oh, why do you ask? Oh, headlines are crazy, but like no big change. I try to ignore the headlines. What about you? It's like, well, I am mainlining them right into my veins because I have to watch every single thing that President Trump tweets about oil because oil's moving around very much. So it's just delightful. It's fun. We're having fun.
Well, I mean, this is why ostensibly the markets wanted rate cuts, right? They wanted to not have to do this. They wanted to have cheap money so they could sleep at night.
That's fine. Let's get done with the war. We have great earnings coming up. Earnings calendar tomorrow, Ilya. I don't know if there's anything that's going to make people pop besides Tesla. Does Lam Research Corporation or Philip Morris do it for you? I don't know.
No, I think it's probably a Tesla situation. IBM could be interesting.
IBM tomorrow, Intel on Thursday.
CSX could be interesting if you wanted a kind of barometer on the business cycle at a time when energy costs are jumping. That could be something to keep an eye on. Boeing, likewise.
But, I think one of the considerations here is if we were in the throes of our will they, won't they, ceasefire on, ceasefire off, it's so easy to watch these earnings become subsumed by the macro picture.
We saw it today.
The one driver.
Did UNH do anything?
No. But now if we are in a series of, so listen, we're now in an extended ceasefire. The only movement that occurs is if Iran comes for a proposal that then the two sides go meet. So until we get that headline, macro starts to take a step back, subsides again. It becomes one among many drivers. These earnings that are coming up over the next few days have a chance to maybe stick their heads out a little bit more and drive the market, help rejigger our center of focus. But, Ilya, overtime is out of time for today. So I suppose we'll wait for the next shoe to drop. Some Truth Social posts tonight. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central. So for Ilya Spivak, I'm Chris Vecchio. Good luck trading. Stick around. Ilya's up next. Macro Money here on Tasty Live.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. Number 1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. Number 30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. Number 6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. Number 18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você.
Did we just get a permanent ceasefire in the U.S.-Iran war? This is Mac Romani. I'm Ilya Spivak, head of global macro here at tastylive. And what a day it's been for financial markets. Things looking very much the same as they did at the weekly trading open, with a bit of a detour from positivity to negativity, and now back to uncertainty. We're going to take a look at what all of this might mean and take a look at how the economic data fits into the picture, because we finally got a little bit of a view on the U.S. economy from some real and substantive economic data to get a sense for what could be and the emerging influence of all of this on the bottom line, the actual economic growth rate, the risk of some sort of a downturn, and the way that sentiment is likely to react. So let's first begin with the price action, and of course, what could be this permanent ceasefire that's emerging here just in the past hour or so. We can see here over the course of the day, crude oil popped higher. It tried to break lower last week around news that the Strait of Hormuz was reported open by both the U.S. and Iran after the two sides reached a ceasefire, and the U.S. managed to strong-arm Israel into a ceasefire with Iranian-backed Lebanese proxy Hezbollah. So we're looking now at a situation where over the weekend, of course, that ceasefires seem to break apart. Iran seemed to change its mind, signaling that it's unclear who is actually the negotiating partner for the U.S. and who's actually in charge. Because after Friday's statements from Foreign Minister Arakchi, from Speaker Ghalibaf, suggesting that indeed we have a ceasefire, we're going to keep talking, we're going to try to figure out next steps, and in the meantime, the strait will be open. By Saturday, that was no longer the case. A couple of Indian ships attempted to traverse the strait and were shot at. The U.S. responded by seizing an Iranian tanker off the Gulf of Oman that had just passed the strait, enforcing its blockade of the waterway. And so we're looking now then at a situation come the weekly trading open where the war trade comes back. We can see here crude oil prices gap higher. And today, because we don't get an unclenching here, kind of paused to see what would happen yesterday. We gapped higher, but then ultimately didn't go anywhere. Today, oil moves higher as it appears that the president has declared a unilateral ceasefire all by himself. And has come out and said, look, we're not going back to Pakistan to negotiate because we don't know who we're negotiating with. Because the other side doesn't seem to have a unified position. And so we are going to sit back and wait. And the ceasefire can continue while they're figuring out what they're doing and what their position is going to be. But our blockade of the Strait of Hormuz will continue. And so Iranian tankers will not be able to leave the strait. Now, of course, that cuts off any meaningful flow of funds to the regime. And so ostensibly there's a natural timer here. But for the moment, it looks like what the U.S. has done is imposed a one-sided ceasefire and said, you all go over there and talk this over and figure out what you want to do, but in the meantime, you can't sell oil to anyone. Now, of course, that also means that Iran and the IRGC continue to block the strait for non-Iranian ships. And so, for now, the waterway appears to be effectively closed again after maybe a brief window when it was effectively open. So, this is where we find ourselves now. This news is just across the wires. And so we look at this now and say, okay, well, what have we learned and where have we landed? Well, as far as crude oil, this was the broad range established by the breakout of this conflict right here. Roughly, let's call it between 119 and a half and $76 a barrel. 77, let's say. We'll round it up. 77 to 20, let's say. And we're nominally toward the lower end of the range. The midpoint of the range seems to be somewhere between $99 and $101. So call it about $100 oil as a baseline. And that's where we sit. And this, of course, raises a familiar question. We've seen exuberant recovery in stocks as though the war not only is over, but its impact can be fully dismissed and we can go right back to where we were before we ever thought about it. Because not only do we have a rebound that erases the war move, that was up through to here, we also have a move all the way up to erase whatever this pullback was earlier, capped from late October by the Fed chastising markets about over-extrapolating rate cuts. Here, the markets aren't just erasing the war, they're powering higher and making a bid to break out. Well, today they stall as the war trade comes back, and we essentially end up where we were at the gap open for the week. So we can see here, this was Friday's break. We gapped back down basically to this 7,100 level. We're right back there again. So the stock market, much more optimistic than what the situation in oil would suggest. And at least today, facing a little bit of friction. Now, that doesn't overturn the upside breakout, but it also doesn't portend a great deal of confidence. And of course, the entire issue here has been, if you lock in the price of oil here, well, then it is 30% higher than it was before the start of the war, and more than that since the start of the year, because we can see crude oil has been drifting higher since the beginning of the year. So you look at this and you say, okay, well, if we're in a situation where crude oil is becoming less reactive to the individual headlines, it's just locked in higher now because the strait is closed, supply is curtailed, the inflationary impact is increasingly baked in. Now it's just a matter of how long it's going to last and whether there can be a world in which we go back to risk premiums in oil that looked more like the beginning of this year than they do now, which of course seems inherently unlikely. Just consider what's happened in the situation with the Houthis and shipping off the coast of Yemen. It's still not back to where it was before they started to attack ships, and there's been a ceasefire with them since last year. And it took months for any ships after that ceasefire to even attempt to go, because of course, shippers aren't sure. Insurers that backstop those shippers are also not sure. And so there's been a kind of permanent diminishing of traffic off the coast of Yemen in the Red Sea. That's, of course, going into the Suez Canal. But all of the lessons there, ostensibly, are just as here. We're probably not going back to status quo before the war. Some amount of risk premium has probably calcified for a while. And so when you look at this optimism in stocks, you start to wonder, well, which one of these things is over extrapolated and which one of these things is wrong? And when you start to look across some of the other assets, you start to see much what you see in crude oil. So in bonds, of course, today crude oil is higher, so yields are up, bonds are a little bit down. But while they've unclenched overall from the most extreme edge of where the war trade peaked, they're back less than halfway, maybe about a third of the way. Yields are now looking structurally higher. Gold gets pushed lower today because of the pop in yields, but it's retraced maybe about half of the war trade and is now busy going the other way. Again, none of this full 180 and then some that you see in stocks. The US dollar has pulled back about, let's say, half of this war move, give or take. Again, same story. Holding, not doing the full round trip that stocks are showing. And so the question starts to be, well, let's say this is an indefinite kind of ceasefire. Is that good news? Is this something to celebrate? Well, looking at retail sales data that just came out earlier this morning, the answer seems to be, don't get your party hats on just yet. Now, on the surface, it looks like we get a fairly strong retail sales number. We jump 1.7%. That was much stronger even than the 1.4% expected, which was already going to be a big surge. Best number in a year. We get the best number in a year as it happens. Here was March 2025. This is now March 2026. This is the best result since then. And of course, they stand out because the last time we saw anything like this was January 2023. So needless to say, heady looking numbers. If we consider them relative to the year-on-year trend, we do notice that the year-on-year move doesn't extend, and the trend here has been actually toward cooling retail sales going all the way back to the beginning of January of last year. So while we've had these pops, the trend has been going the wrong way. Moreover, when we take a look at the makeup, what we find is staggering. This is the breakdown by category, and we can see there really was no major change in any of these categories except, shock of shocks, gasoline stations. So why did we get a 1.7% jump? Because we got a 15.5 almost surge in gasoline station sales. Now, at this point, we can see the clustering of these numbers suggests there's not demand destruction elsewhere. But of course, this is the first month of the war. So at this point, it looks like at least for March, people decided to bear it out. But if we take a look here at the retail sales control group here, the core number, it isn't really going anywhere. It's a little bit higher, but is generally clustered. And so where do you get then this explosive jump? Well, you get it because there's a war disrupting energy supplies. In fact, if you take a look at retail sales, excluding gas and excluding cars, what you find is exactly the same thing that was there in the prior month. 0.6% in February before the war, 0.6% in March after. So for the moment, it looks like what retail sales is doing is just holding. Consumers are not saying, I'm going to take this to mean that I should scale back other spending. But of course, with only 1 month of a war, that makes sense. It is nevertheless very obvious to see how if this continues to persist like this, and if we bake in over time with whatever permanent ceasefire this is, oil that's 30% more expensive than it was at the end of February, that over time, these categories are going to start to see some crowding out. Spending is going to start to go more toward energy. And you're going to start to lose some things, for example, in food and drink services, in non-store retailers, miscellaneous stores, general merchandise, sporting goods, clothing, all of these discretionary categories where people have room to dial spending back to some extent. That's likely to take a hit as long as more and more money is going to energy costs. And we can clearly see how that math works out here. So, what does that mean? Well, as we've said before, household consumption is by far the biggest driver of economic growth. It accounts for 68% of US GDP. Everything else is an afterthought. And so when you look at the makings of what is a consumption shock here, the outlines of which start to appear, at least the mechanics for how one would happen, start to appear in the data as we see in these retail sales numbers. The concern becomes this. We have seen in the third quarter and in the second of last year a welcome rebound in consumption after whatever weakness was going on here in the first quarter amid the rollout of the tariffs that the Trump administration put out there starting toward the end of that quarter. We can also see, of course, all these wild swings in inventories and imports as businesses attempted to front run those tariffs to try to get as much supply in through the door before the tariffs made them more expensive. By the third quarter, we can see those things normalize away. Consumption nicely recovers. But by the fourth quarter, consumption is the weakest it's been since this first quarter. Moreover, you get this big nudge lower in government expenditure. But let's take that aside because, of course, as we can see here, it isn't exactly the world's biggest deal. It's less than 20% of the total. So, if this were to continue to deteriorate, this would, of course, be an issue. Now, why would it continue to deteriorate? Well, we can see already in the most recent inflation data, prices are going up before the war. Goods prices are starting to rise January, February, and of course, March. But already in January and February. So this idea that the tariffs were going to rebase out of the calculation as the Fed was hoping, that's taking a hit. Services inflation, strongly higher. Housing inflation rising. And critically, these are core numbers. That is to say, they exclude energy and they exclude food. So core goods prices are rising. Core services prices are going much faster, the fastest, in fact, in almost a year, in the first 3 months of this year. And housing is rising. March ends up being the fastest month for housing inflation since December 2025. And so the squeeze on consumers here seems straightforward. This is already occurring outside of the shock to energy. And what a permanent ceasefire would mean, of course, is that the shock to energy is locked in. No deal, so no reopening of the strait. It's blockaded by both belligerents, and we just wait. Well, that just means that the impact on consumption is longer lasting. The squeeze on prices is longer lasting. And of course, the market's favorite boogeyman, the squeeze on the Fed, is sticky. We already have had a massive hawkish shift in policy expectations across all of the world's central banks as a consequence of this war. Here's where the war starts. Hawkish readjustment for the RBA, the BOC, the BOE, the ECB, the Fed. The Bank of Japan is the only one that's not seeing it, and that's because they're too busy doing their own thing. But we can see here, sure, the stock market has unclenched, la-di-da. Fed policy expectations are not any less hawkish. All of the rate cut outlook that was there in February became gone and is still gone. Things have unclenched a little bit for the Bank of England. Now, instead of expecting over 50 basis points in hikes, having had 50 basis points in cuts before the war, we've moderated to maybe stands still. In the ECB, we've moderated to maybe 25 basis points in hikes or so. But the markets clearly are of a mind that we have a sticky inflation shock in front of us. And that sticky inflation shock is coming at a time when inflation, as we just saw, was already creeping higher and consumption was already getting squeezed. Which makes for a setup now where the war only makes those things worse and puts a greater strain on growth at the same time that it holds the Fed back from doing anything about it. And that, of course, is no positive mix for risk sentiment. So, from a positioning perspective here, I made some changes at the weekly trading open as we saw the ceasefire break down. So, as we discussed yesterday, I haven't made very many changes here today. I'm still short gold, long the dollar via short Aussie, short pound, and short euro positions here in the micro futures. I'm also short the yen in the spot market just because the 6J contract is way too huge to do proper risk reward. Now, of course, we've had a risk on kind of a breakout last week that's still holding up in stocks. And so I've counterbalanced my negative exposure there. I still have these puts in S&P, NASDAQ, and in Russell via these put verticals in IWM, the Qs, and SPY. But I've counterweight that with some call verticals in IBIT, which is the Bitcoin ETF. It's also had a positive sentiment melt up, much as stocks have, and that's a kind of offsetting bit of exposure here, so as not to get tilted too far one way. I, of course, still have this longer-term exposure to Brazilian stocks. That keeps working for now, and so I'm still holding that. And still in these puts in TLT, the long end of the curve where rates have started to go up again, looking for those rates to be sticky, looking for bonds to be sticky on the downside, looking for rates to be sticky on the upside as all of what we're watching here continues to play out and crude oil stays stuck at elevated levels, feeding into inflation and, of course, hurting consumption. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, please like and subscribe. Macro Money returns tomorrow. Happy trading.
know it, can you feel it?